India, 3, 4 and 6% of the Nifty Bank and the mid and small cap indices respectively. So fantastic one. We start with slightly mildly negative cues. It's a Friday as well, 2 days of holidays. Headline risk is always there. Will we take a bit of a pause is the question. I'm Prashant, with me my colleagues Rupee and Mangalam. Guys, hi, morning.
Good morning.
Hi, morning Prashant, morning Mangalam. And yes, indeed, what a week it's been, right? So feeling good this Friday. And I guess the market kind of, in this week at least, even moved beyond headlines. Even on days when the US market was faltering, we were charting our own course. And I guess that would make a lot of people very hopeful. They want to believe that the worst for this market is over. And then, you can maybe get into cruise control mode again.
Perhaps. What was most interesting is I was just looking at all the indices this week. None of the major indices have been in the red this week. The biggest underperformer this week is the IT index, which too is up 1.5% for the week. So, like you all said, what a week it's had. Let's hope the weekend is great enough and the next week continues, because that's the last week of this financial year.
Oh, absolutely. And, things have gotten much better, and we'll have to kind of sort of take it from there. I think we are, again, with enough caveats, etc., broadly maybe just sort of headed higher. But day on day, especially after the kind of week we've had, let's see if we are, if you give it some time to just ponder and reflect on the gains or whatever. It's, as I said, it's also going into the weekend. But just let's take it from the top. Not very much in terms of big cues at all. Equities in the US were slightly only mildly sideways. So S&P down about a quarter, NASDAQ was down about a third. Dollar index, it's been inching up about 0.5% in the last two sessions now. We're back at 103.78 on the broader dollar. Oil prices again have been inching up, so 2% up on Brent, and that's at about 72 plus now. Overnight, the big sort of talking point, or of course, Accenture, right, reported numbers, and they've basically, stock ended down 7% plus, and they're talking about an increasingly uncertain macro environment, but to be sure, they're essentially talking about their exposure to the US federal government, which is significant. And they're saying that it's about 16% of the US business, the US federal government. And, Elon Musk's Department of Government Efficiency, looking at contracts, etc. So it's just uncertain. Because of that, how much should you take away as an implication for Indian IT? I don't think that's very much. Indian IT, there may be other macro uncertainty, but this specific was an Accenture-specific issue with regards to the exposure to the US government. Now, Trump announced that after the New York close that the minerals deal with Ukraine will be signed shortly. Will we see something into the weekend? We'll have to wait. And of course, later tonight, you got about $4.5 trillion of options expiring in the US. It's a big one. I remember 2 weeks back, you had a big expiry Friday, and markets did sort of react in a negative way. So we'll see. Nifty and on the just the levels here, then not very different from what we've been talking about last few days. The daily and of course and the larger time frames are coming into view now. For example, the full fall from the highs to the low, the highs from late September, October last year to the lows recently, and you're starting to wonder about whether we're going to retrace some of these numbers. So if you're able to, if you're going to retrace that, you head to 23,600. That is a 38% retracement of the full fall that we've seen. But between here, where we left off yesterday, and 23,600, which we should head to, there are two resistance levels I want to put out, which is 23,320 and then 23,497. So watch out for these two numbers. On the way down, supports stand at the 22,797 is a 40-hourly exponential average. It's been, of course, as the market has moved up, it's pulling up these hourly averages very, very sharply as well. So that's the sort of closest there in terms of a support. Nifty Bank continues to do well. No real signs of a reversal. We ended about 0.75% higher here yesterday. The resistance comes in at the 38 and the 50% retracement of the entire fall. Again, from the late September, October highs. 50,297 the first number. 51,085 is the next resistance. We left off at about 50,060 yesterday, and support stands at, again, the 40-hourly exponential, which is 49,190 this morning. So that's it. The gift Nifty will come up on your screen. It's neither here nor there. It's about 25 points lower. There is enough buying interest. Gains have been broadening out. Broader markets have been doing well, and it's been a pretty good week so far. Surabhi.
Absolutely. I mean, no denying that it's a real feel-good factor as you get into this Friday. Of course, this piece of news on Accenture is something the market will digest. But, if you strip out Accenture's issues with the US government, which is where the negativity came in from, they've actually increased the lower end of their guidance. Instead of 4 to 7%, now their growth estimate is 5 to 7%. And there's some positive commentary on margins, etc., on Gen AI. So we'll see what the read-through for Indian IT is going to be. The other stock that was in focus yesterday, which kind of soured sentiment, was Nike. Nike, of course, is going through its own motions. It's setting its own house in order. But aside of that, it also singled out tariffs and uncertainties, currency action as a reason behind why it's expecting a double-digit drop in sales in the current quarter. Their current quarter ends in May. That stock in after-hours trading, last I checked, was down about 5% as well. So some of these issues are weighing on sentiment, so the US market was lower. By the way, Bank of England left rates unchanged as well. So it's one of those big central bank weeks where central banks have done nothing. BOJ, China, Fed and BOE, all of them have remained absolutely, on status quo. The European markets did, however, cool off yesterday. The German market was down over 1%. Now, Asia this morning, slightly mixed because these global cues are mixed. There's some selling in Chinese equities. Mainland China and Hong Kong are down. But Japan's higher, Singapore's higher. Those are some of the China and China-related markets that are trending slightly lower this morning. The talking point in terms of macros in Asia is inflation in Japan. Those numbers are still high. They've kind of, come down from January. The headline inflation number is at 3.7%. It was 4% in January. The core inflation is still at 3%, which is slightly above estimates. And therefore, the expectation of a next move from the BOJ on the upside, a rate hike, that remains intact. So that's on the macros. This week, what a splendid week we've had. So let's put the numbers out there on the screen. 3.5% on the Nifty, 4.2% on the Bank Nifty, 6.3% on the mid-cap index, small-cap index 6.5%, and individual stocks, you would know from your portfolios anyway, when it's been anything between 10, 15, 20% of gains coming through. Yesterday's day is really important because yesterday was the expiry, so perhaps we had an accentuated move playing out in terms of some of the remaining shorts perhaps also covering. And then we had solid cash market buying. Look at the numbers, and this is what I was talking about, the way the large caps moved yesterday. So we do have confirmation, over 3,200 crores of solid, hard FPI cash coming in. Domestic institutions for a change on the sell side, selling over 3,100 crores. Lots of corporate action to track as well. Lots of interesting stocks in focus. I'll leave you with a little bit of a flavor. Manappuram, there is a big deal with Bain. Bain is coming in. They are coming in with about 4,385 crores of the initial investment. Then there will be an open offer and they will become promoters of the company. We'll tell you more about this as we go along. Bajaj Finance, the mystery is finally over. Rajiv Jain will remain. In fact, he gets an elevation to the post of vice chairman. And Anup Kumar Saha is a new MD. And Hero MotoCorp is now getting into electric three-wheelers. They've acquired a stake in a small company. This company's name is Euler Motors. They spent a little over 500 crores, so that becomes another interesting piece of news to track, and we'll get you more details on it in just a bit. But Mangalam, yesterday you were telling us that, some of the shorts have been covering through the week, and I guess when look at that beautiful move we've got on the market.
That's exactly what happened, but I was very interested in what you said about Nike, because it was down about 5% overnight. What's interesting is that the Nike share price right now is back to where it was in 2020, right in the heat of the pandemic. And from there, it had seen a big rally. Things are restructuring out there. What happens to this world where they're looking at athleisure and looking at other things. I'm personally very keen on tracking that with the new leadership and what they do out there.
They should introduce a Mars line. Shoes for Mars.
Shoes for Mars, perhaps. Elon Musk will be the one who would be.
Which reminds me, was it? And correct me if I'm wrong. There's so much news flow. Didn't Mr. Besant go out and tell the world to buy Tesla?
Did he?
I think so. So, it all comes together.
The other thing was that when you spoke about the flows, there is the FTSE rebalancing today. So a lot more expected today as well, perhaps. So we'll keep an eye out on how all of this pans out. But, what's clear for sure right now is that bulls are in control. And why do I say that? Because just about 6 sessions ago, we had the Nifty, which was at closer to 22,000. Right now, we're above 23,000. So it's a 1,200-point gain that we've seen in just the last 6 sessions. So that's the ferocity with which we've seen this rally. And, be that as it may, this rally has been actually led by the FIIs. Why do I say that? One, because they reduced their cash selling. On a couple of occasions in the last 6 sessions, they also bought in the cash market. And secondly, the massive short covering that took place in index futures as well. If you look at the cash buying yesterday, it was close to 3,200 crores. The DII is sold, but nothing really to worry about out here as well, because we know the kind of money that the DIIs have been pumping in. Now in index futures, yesterday as well, there was 2,900 crore worth purchase, 6,800 long contracts added, 10,500 short contracts covered. What does this mean in perspective? March 13, the FII net exposure was minus 1.84 lakh. Over the next 4-5 sessions, it's come down to minus 1.11 lakh. The FII longs have increased from 19% all the way up to 30%. So basically, the shorts in just last 5 sessions have reduced by 40%. They've nearly halved, and longs have increased from 19% to 30% itself. So that's led to this big rally that we've seen. Where do we go now? On the last 3 trading sessions, the Nifty and the Nifty Bank have both conquered the 20 and the 50-day moving average, opening the road up for the 100-day moving average. The Nifty Bank closer to the 100-day moving average than the Nifty is. So can we go past this, 50,400 mark for the Nifty Bank and 23,500 mark for the Nifty itself or not? For the next week, we have options which are fairly active. At the lower level, 23,000 is the base. At the upper level, closer to 23,550 could be some bit of supply zone after the big move that we've seen. What are we tracking all of next week? One, there is the monthly expiry that plays out. It's also the end of the financial year. So we'll get order wins. There has been an accelerated announcement of order wins as companies close their books for FY25. So that is something we'll keep an eye out on. And finally, further NAV propping on financial year end. All of last week, we saw the underperformers the last 6 months, the likes of defense, PSUs, etc., bounce back. Can they continue to bounce in the next week or not is something I'll most definitely keep an eye out on.
Okay. All right, Mangalam, thanks for that. Lots to track, so let's straight away get to it. The equity call of the morning coming in from Lawrence Belanco of CLSA. Now, he's saying that the world ex-US rally of over 17% versus the S&P 500 since the December 2024 lows is now testing resistance provided by the upper boundary of its 15-year downtrend, as well as trading 2 standard deviations above its 200 DMA. He says this resistance zone and the pending reciprocal tariff D-Day of 2nd April is a logical place to see some hesitation and likely another bout of market rotation. In Asia, he says they have a new breadth thrust by buy signals in India's Nifty index. And that's the first time he's seeing that buy signal since 2023. So that's good news for us here. Lawrence Belanco on the technicals.
Okay, well, let's just hear out Lawrence on India as well, right? So he says that yesterday's break above the 50-day moving average has been accompanied by the first breadth buy signal since 2023, he says. Breadth thrust, which is basically the broadening of the market gain. Signal fires when the percentage of Nifty stocks trading at near their 4-week highs reaches 55% or greater. He says there have been 38 breadth thrust signals since 2002. Thursday is the 39th. He adds that the average returns 30-day, 90-day and 250-day post this signal have been Nifty gains of 3.8, 7.8 and 13.4% respectively, with a hit rate of 76, 74 and about 81.5% respectively. Lawrence says one can buy ICICI Bank.
That's quite interesting, huh? Breadth thrust signal, which CLSA is tracking. That's it's indicating green tidings for us.
It's a tricky one to. It's a mouthful.
It's a difficult one to say. A breadth thrust. Wide market move going forward.
Say it slowly.
How do you calculate this?
Ask Lawrence.
No, so he said it's apparently certain percentage of Nifty stocks trading above their 4-week highs. Essentially. So yeah. Anyway, lots of indicators, but you can feel it, right? The market is turned bullish. The texture, as we've been saying, is turned bullish as well. And a lot of these signals will sort of follow that and show you that. So Lawrence saying there's more coming. Phu Ken Yap is Senior Investment Strategist at Standard Chartered Bank. He's with us. Phu, great to have you with us here. Good morning. Thank you for your time. Will the 2nd of April spoil this small little party we've been having here? A relief party in that sense with this recovery. What's your sense?
Well, I think clearly India has gone through a period of, a bit of a downtrend since September. I think that the tariff news that Trump is talking about I think it has implications for, everywhere, actually. I mean, even America itself, not just outside of the US. And I think the news has been out there. It's creating a lot of uncertainty. The danger really is paralysis because of the uncertainty that people do not know what they want to do. And as a result, we saw the correction, right? I think there's a bit of worry about whether the US growth slowdown can lead to a recession. I think that is the crux of it, though. I think whether the US can avoid a recession or not this year, or is there a risk that it slows down too much, that it gets out of control? Now, our view is that no, we do get a soft landing in the US economy, and that'll be supported by the Fed rate cuts. And so ultimately, if we do get a soft landing, that really extends the growth cycle. And the headlines that's coming from Trump, I mean, there's going to be a lot more headlines. I think we've been discussing the Trump put and where's the Trump put, and it probably is lower than where the market is. But back to the fundamental, in the US economy, can the US economy continue to grow and expand? We believe that's our base case, it can, and as a result, then earnings will continue to grow. So global equities should be supported as well as a result.
Right. I'm curious to know your stance on India versus China, and what weights would you assign to the both? Because, China, multiple factors moving around. Yeah, the own economy not doing very well. There is the risk of looming tariffs, but then valuations are supportive. And at the same time, the government has been propping up, the narrative at least on consumption or easier policies out there. That compared to India, which has seen some underperformance and now looks like maybe at the base level, indicators are suggesting the worst is behind us.
Yeah, you're right. I think India went through a period when earnings revision was negative. I think the latest, when I looked at it, it is still negative in terms of the earnings revision. So just meaning across the street, there's a bit more downgrades on earnings relative to upgrades. And we think that is part of the headwinds that's been facing Indian equities. We do love it on a medium term. Definitely the structural story is in there. Pretty well known, but the earnings revision story has been a headwind for India. China, though, it's been more of a valuation re-rating. We think the government standing behind it, and as the top policymakers meeting again with your private companies, private enterprises, being supportive of your AI developments and technology developments, and of course the narrative from DeepSeek after January. But what we've been seeing has been a lot of valuation re-rating, very much from the bottom of the historical trading range, closer now to the average on some sectors like the technology sector or the Hang Seng Tech Index. We think it is still below average, and so there's still a bit more room to come in terms of the valuation re-rating. But really, for China to really continue over the longer term, I think we would need to see earnings improve and valuation improve. And we're going through our assessment at the moment, actually, in fact, for the Q2 outlook. I mean, when we published at the start of the year, India was our preferred market in Asia, although we were flagging there is a risk of the short-term implications that there's more excitement with China relative to India at the start of the year.
Yeah. That Hang Seng Tech Index, right? We think the Hang Seng has rallied 40% this year. The Hang Seng Tech Index, I think, is up 65%, if I'm not mistaken. So it's been quite a dream move. Folk, finally, so if we put all of this together, the fact that there's so much uncertainty around the tariffs in the US, and we've seen that, right? The US market itself has gotten into the stop and start mode. Do you see more money moving out of the US? And if that money starts coming to Asia, then within Asia, where do you really see it heading? Between India, the developments in China that you described, Japan, I mean, where things seem to be reviving, at least in terms of the economy. Where does that US fund flow find its way in Asia, you think?
Yeah, in terms of the direction, I think we've been seeing a lot of funds flowing out of US and into Europe. Actually, there's some other things happening there in Europe, especially for the fiscal rules that's changing there. In terms of the fund flows that's been coming into Asia, look, I think the India story over medium term, we think, is fantastic structurally. But investors are also very, very underweight in China, we believe. There's been a lot of buying, but actually the buying has been coming a lot from mainland Chinese investors. They've got a very, very high savings rate, but we saw that the southbound flows especially has been very, very strong. and that's been supporting the offshore market in Hong Kong relative to the one in mainland China. So the flows in China, in Hong Kong, actually has been very much driven by the mainland investors, I believe. So the flows coming out of the US, I think it will move around. I think in the short term, it is still supportive of China. I see what you mean, that India is off its lows. It's moving around between China and India. But the structural story in terms of the growth, looking at the GDP and inflation for the next few years, we think the nominal earnings growth in India actually is very attractive in terms of the structural growth there. So the flows coming out, coming into Asia, but at the moment, between India and China, I think it's coming into both, but in the short term, perhaps a bit more into China.
Yeah, absolutely. And that's if the Germans don't stop all that money flow before it reaches Asia, right? Like you said, we live in very interesting times. Thank you very much for joining in, and you have a good Friday and a good rest of the weekend. Thank you very much. Let's quickly recap what we have lined up for you on the show beyond, of course, this first conversation. Lots of corporate interactions as well at 8:35. Shweta Daptardar of Elara Securities will join in to discuss Manappuram Finance and Bain Capital's big $1 billion deal and what it means for the stock and investors. At 9 a.m., we have Praveen Sahai of PL Capital Group to talk about Adani Enterprises' entry into cables and wires. 9:20 is time for our market masters. Gautam Chachoria and Vishal Goyal of UBS Securities are joining us today to talk about the overall UBS house view on India and what to do in this market. After that, RS Raja Gopal Sastry of Endurance Technologies joins in to talk about the quarter gone by and the business outlook. At about 9:50, Manoj Verma of Bikaji Foods Internationals joins in to talk about the business outlook. Will things improve? Remember, some of these bhujia and namkeen makers had a rough Q3, so is it going to get better now as there is more disposable income in the hands of people? Finally, Lata in her segment, It's the Economy, talks with the three economists today and discusses whether the rupee is clearly out of the woods.
All right, interesting lineup of commentary for you today. With that, we'll slim to our first short break. But as we do that, let's give you a slight preview into stocks that we are going to talk about in our special Top 10 segment. Bajaj Finance, Manappuram Finance, Bharat Dynamics, BEL, BEML, the entire defense pack. Along with that, we have Data Patterns and Astra Microwave, all of them likely to open in the green on the back of positive news flow. IT stocks, TBO Tech and Ola Electric, stocks on our radar on the back foot.
For me, if you ask me, I still consider that March quarter will be, again looking like downgrades of earnings from where we were, and this is coming from the commentaries we are listening from the management. It's a bit cautious, and I think you guys are also talking to the management. There's no real recovery which is broadly seen across different segments. In some form or fashion, the macros eventually should sort of turn as we see that monetary fiscal, some bit of that space is easing out with the stance taken by RBI. So and the hope is that consumption should start seeing revival maybe towards the end of this year.
The thing I think back of this whole time frame is how really resilient Butch and Sunny were the whole time. I mean, they launched on what was going to be a short test flight with the crew flight test vehicle with Boeing. And then they moved very quickly into station increment operations, and they became seamlessly part of the International Space Station. And they did that because they're experienced astronauts, and we had prepared, right? We had flown gloves for them to do spacewalks, and we had flown a lot of components for them. So I think that shows the adaptability of crew members.
Welcome back. The smiles are wide, not just ours, but I think most people on the street because it's been such a good week. And the cues are a little mixed, you'd have to say. But the Indian market has been charting its own course. Maybe today is a day of a bit of a consolidation, which is never a bad thing. 18 points lower on the implied open. Lots of stocks to track today. So let's straight away get to our list of top 10 stocks to watch this Friday morning. Our team is standing by. And we have Hormaz to kick off the proceedings with the big news on Bajaj Finance. So finally, we have clarity on the management changes. Hormaz, good morning. Tell us.
Good morning, Surbhi. And finally, as you mentioned, much awaited, the long-awaited overhang also on the stock has been finally addressed last evening with Rajiv Jain being elevated to the post of Vice Chairman and Executive Director at Bajaj Finance for a 3-year period. His term is coming to an end as MD and CEO at the end of this month. So this was a much-needed clarity that the street was looking for. And Anup Kumar Saha will now be the new Managing Director for a 3-year period as well. So that is the important one. Of course, hints were there before as well. Sanjeev Bajaj spoke to us exclusively earlier this week. He also mentioned that Rajiv Jain remains very committed to the business and the board will take a call on it. And Rajiv Jain himself had given inclinations of that in the earnings call of the previous quarter when he had mentioned that he would like to remain at the company and be actively involved in shaping the strategy of the company and its subsidiaries as well. So positive development for Bajaj Finance. Price target hikes across the board from brokerages as well. Expect the stock to open in the green.
All right, expect the stock to open in the green. The other one that we're looking at is Manappuram Finance. The long-awaited Bain deal has happened, but not before the stock went into F&O ban in yesterday's trading session as well. Moved to the high point of trade in the last 30 minutes. But Sudarshan joins in with all the details. Sudarshan.
So like Bajaj Finance, this too has been long awaited after several reports over several months and weeks. Finally, the deal has been announced, and it's the deal of more than $1 billion, or say more than rupees 10,500 crore. Bain Capital is likely to going to acquire up to 42% stake, valued at rupees 10,500 crore, and the deal is being done at rupees 236 per share. So Bain Capital will be holding, like having joint control over the company with the existing promoters, and existing promoters will hold after the deal 28.9% stake, and currently promoters holding is more than 35% stake. Now, deal is being basically done in two parts. In the first part, Bain Capital is going to acquire up to 18% stake, and that would happen via both equity and warrants in the same proportion, that is of 9.3 crore each. In the second part, open offer Bain Capital will be making, and that open offer is also being made at rupees 236 per share, and that would be for acquiring stake up to 26%. All the regulatory approvals that Bain Capital would require are for this deal of RBI, IRDAI and CCI. Now, apart from this, Asirvad Microfinance, if you remember, it's a subsidiary of Manappuram Finance. It had filed for the IPO. Now, company has announced that because of this deal, now Asirvad Microfinance will be withdrawing its DRHP for the IPO. Now, because of the deal is being done at a much premium of 10% premium to yesterday's closing price and nearly 30% premium if you take the average of last 6 months, I'm going with green because the deal has finally happened.
Ah, okay.
All right. Thank you very much for that. Well advertised, and it's finally sort of come through. We'll try and have the management to talk to us about this one. Well, let's talk about Accenture, right? I mean, the stock was down sharply last night, 7%, but for a very specific reason with respect to Accenture. Rima is here to contextualize this for us. Rima, morning.
Hi, thanks so much for that. So Accenture's Q2 numbers were fine. The company went ahead and raised the lower end of its full-year revenue guidance. From 4 to 7%, it now stands at 5 to 7%. But as you pointed out, the stock was under pressure yesterday on account of uncertainty related to its business with the federal government, in particular, what impact the Dodge will have. Now, what the company said in the conference call, the federal government services account for 8% of Accenture's global revenues. Accenture is one of the top 10 vendors to the US government. And the US government's guidance is that if the work is not mission critical, then cancel it. So therefore, there is a lot of uncertainty surrounding it. The company itself highlighted it in the conference call, Julie Sweet, the CEO, and that's the reason why the stock was under pressure. Indian IT companies in that context do not have a large exposure, very minimal exposure to the US government contracts. That's what analysts point out. Now, coming back to Accenture's numbers and what the relevance is for Indian IT, well, Q2 numbers, as I said, was fine. Deal bookings were a tad bit soft, so that's disappointing. But the company highlighted increased macro uncertainty again in the conference call. They're seeing an elevated level of uncertainty in the global economic and geopolitical environment. Discretionary spend, particularly the smaller deals, is still a bit constrained, though large outsourcing deals continue, which is a positive because vendor consolidation is still taking place. Back to you.
Okay, all right, Rima, got it. Thanks very much for that. So we'll watch out for all the IT names. We also need to watch out for a lot of defense names. Remember yesterday, the Defense Acquisition Council announced procurement worth several hundreds of crores of rupees. Vamakshi is here to give us the details. Vamakshi, good morning.
Well, good morning, Surbhi. You know, the DAC, that is the Defence Acquisition Council, has gone ahead and approved 8 defence proposals worth over 54,000 crores. Under these proposals, they will be acquiring, number one, 1,350 HP engines for T-90 tanks, and the key beneficiary of which will be BEML. Barunastra torpedoes, which is the second thing that they will be acquiring, which is an indigenously developed ship-launched anti-submarine torpedo. And the key beneficiaries for this will be BDL, that is Bharat Dynamics, as well as Bharat Electronics. Lastly, they will be acquiring airborne early warning and control aircraft systems, and the key beneficiaries of this, the list includes BEL, Astra Microwave, as well as Data Patterns. Now, in addition to this, the DAC has also approved guidelines for reducing the timelines at various stages of the capital acquisition process, and this in turn will help it make it faster, efficient, as well as more effective. So therefore, this announcement bodes well for all of these counters.
Indeed, and the defense stocks have seen a bit of bounce earlier this week itself. Thank you for that, Vamakshi. But TBO Tech is one of the stocks that Vivek is watching out for this morning. Vivek, why?
That's right. So, block deal was launched in TBO Tech last evening. We had accessed the term sheet. So, there are two sellers, both part of the public shareholding. Augusta TBO Singapore as well as TBO Korea Holdings. Both of these entities are combined will sell close to 3.1% of the total equity. The deal is likely to happen at a 7% discount to yesterday's closing. So the floor price of the deal is at 1,180 rupees a share. Total size of the deal is close to 400 crore rupees. And remember, there's a lockup of 30 days on further sale of shares by both of these entities. So going with the red as far as TBO Tech is concerned.
Okay, all right, Vivek, got it. So TBO Tech on our list as well. Ola Electric, the news flow continues to be difficult around the company. And yesterday we heard people from the Maharashtra administration talk about taking some very specific penal steps against the company. We have Parikshit joining in to tell us what the latest is. Parikshit, morning.
Well, Ola Electric has confirmed to CNBC-TV18 News break that they've received letters from MHI and MORTH about discrepancies in their sales data. In fact, sources tell us that they've actually got a second letter from MORTH, the Ministry of Road Transport, because the government was not happy with the first reply that Ola Electric had given to the government. Having said that, we can confirm to our viewers that 34 of Ola Electric stores in Maharashtra have been sealed. They have faced similar inspections in Madhya Pradesh, Karnataka and Punjab as well. So the regulatory scrutiny for Ola Electric has been increasing. 36 scooters have been confiscated in the state of Maharashtra alone, pending investigation. At the same time, Ola Electric is claiming that they have sold around close to 40% of the Feb backlog has been cleared, but we really need to see as to how much of the scooters which have been registered and sold in the month of March are for the month of March and are for the month of February as well. So a lot of questions still for Ola Electric, and the Ministry of Road Transport and Highways and the Ministry of Heavy Industries continue to ask questions about differences in sales data.
Right. In fact, thank you for bringing us up to speed with that, Parikshit. In fact, let's listen into the Maharashtra Transport Commissioner speaking exclusively to CNBC-TV18 on this very issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai, and we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we will take the further action. So, around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating on that premises. See, we have received the complaint regarding this mismatch in the Vahan data also, and we are examining that. Right now, I will just say that we are examining the complaint. If we found anything wrong, we will take the action.
Ola Electric was down about 4% in yesterday's trading session. Regulatory issue run-ins continue for the company. We'll keep an eye out on the stock in today's trading session as well. But let's get in a roundup of all the commodity market action. Manisha Gupta, as always, joins in. Manisha, what did you track overnight?
Well, I'm looking at the copper prices really, because we're trading at near all-time highs on LME. We have seen $11,000 a ton breach on the higher side as well. Well, copper has been the best performing commodity, or rather metal, when you look at base metals and non-ferrous space as well. 28% up in 2025 till time. Traders are redirecting shipments from Asia to US ahead of potential tariffs that the US administration has been talking about for some time now, and that seems to be adding premium to prices there. Also, when you look at the US copper prices vis-a-vis the rest of the world, we are at a near record high premium in the US markets there. Well, not just copper. If you look at the gold prices, holding at record highs onto that one as well, at around $3,050 an ounce. And then you have the crude oil prices, which are headed for a second weekly gain. The markets are looking at fresh U.S. sanctions on Iran, and then OPEC is planning to cut output for 7 members until 2026. So all news that seems to be coming in has been very supportive for all these commodities.
All right, Manisha, thank you very much for that. The commodities in focus is we'll take a quick commercial break here. We speak about the Manappuram-Bain deal, and we'll have the analyst from Elara join us. Shweta Daptardar is the Vice President, Diversified Financials at Elara. So, conversation coming up. Okay, welcome back. It's a big story coming through on the bottom of the screen. This is Tech Wabag, the company's will use fund towards capital project investment. I think there is some money coming into Tech Wabag, the first news flash. Signs non-binding term sheet with Norfund-led consortium for $100 million funding over the next 3 to 5 years. We'll try and have the management join us to talk to us about this one. So it's a widely tracked name in the right space. Stocks corrected from, I think the highs were closer to 2,000 and now just under 1,400 rupees or so. Well, let's talk about all the financial news flow from last night. Manappuram, of course, was the big one. That Bain Capital deal has finally come through, widely anticipated, as I said earlier. Shweta Daptardar is Vice President, Diversified Financials at Elara Securities. Shweta, good morning. Good to have you with us here. What did you make of it? And what does the stock do, really? I mean, lots of fans for Manappuram, lots of backers, really people who were willing to bet on Manappuram doing very well. It's kind of struggled, though, relative to the larger peer, which is Muthoot. Does the Bain deal provide some structural tailwinds from here?
Yes, good morning, Prashant. So as you rightly pointed out, this is definitely a turning point in the journey of Manappuram business. Bain deal happening especially at a premium of over 30% over last 6 months. Stock price definitely provides or instills confidence amongst the investors in terms of growth as well as professionalization prospects going forward. Most importantly, as you rightly pointed out, Manappuram has been dealing with challenges with increased regulatory scrutiny, especially on usurious pricing, as well as microfinance-led challenges. So the timing of the deal is also opportune, and we believe going forward, this definitely puts up the entire management team and prospects in the right perspective.
Right. Shweta, as per your model and the prices at which Manappuram and Muthoot are trading right now, what is the valuation discount between the two? And post this deal, do you see a case for that multiple discount to narrow? If yes, then by how much?
Yes, so if we compare the largest market leader in the space, that is Muthoot Finance, who is trading at 2.4x price to book FY27, and if you compare that with Manappuram, which is still trailing way too behind at 1.1x, so you see there is massive valuation gap, and rightly so. But with this news, while the gap should narrow, it shouldn't be completely closed, given that Manappuram is yet to deal with structural challenges. Execution is also key, and we also certainly believe that once the entire transaction consummates in Q2, Q3 FY26, we also reckon there will be 1 or 2 quarters of kitchen sinking for all the cleanup that is required. So we believe while the gap will narrow in the first place, I think it will not completely close vis-a-vis the top-notch market player.
To your mind, what should the ideal multiple for Manappuram be versus Muthoot?
Yeah, so yesterday night, post the news, we have upgraded the valuation multiple to 1.3x forward. We were initially valuing at 1x, although it definitely deserves slightly higher multiple than what we are currently envisaging. But like we mentioned, we are still reeling under pressures, both externally as well as Manappuram per se internally. So definitely we'll keep a close watch. And like I said, execution is key. So for now, we would sort of be slightly reluctant to go overboard, given the scenario on even the macro trend side.
Shweta, that's on Manappuram, the gold financiers in that big deal. The other big news last night was, of course, Bajaj Finance. So Mr. Rajiv Jain has been elevated to Vice Chairman and ED now. The stock's done really well, actually. It's been the best performing stock of 2025 so far in a difficult market phase. What's your call on it, and how do you see this management development?
Yes, morning, Surpi. So yes, Bajaj Finance definitely has did well, especially in past 1 quarter, and rightly so in anticipation of this big news with Rajiv Jain being elevated. But the good point or the brighter side here to look at is he's being elevated and continues to remain associated with Bajaj Finance. So there were a lot of speculations that he would be going into a chairmanship role at the parent company and might take a back seat. So the biggest and the brightest side is he continues to be there, providing mentoring and supervision at the Bajaj Finance business. So that's definitely positive. Second, if we look at the industry per se, the unsecured lending challenges are receding. RBI coming up and mentioning that they are satisfied as far as personal loans slash unsecured lending traction is concerned. So that comes as a big positive. I mean, given the fact that NBFCs have been dealing with or navigating a peculiar landscape for the entire FY25, certain reliefs coming from the regulatory per se definitely bode well. And last but not the least, the rate cut tailwinds will definitely augur well for financiers like Bajaj Finance.
So what are your top NBFC picks right now?
Yeah, so in the current scheme of things, we continue to maintain positive stance on Bajaj Finance. We definitely believe gold financiers are ahead in terms of recovery. So we like Muthoot Finance. We like Shriram Finance. We believe there are tailwinds emerging, although there is divergence in terms of how CVs and sub-segments of CVs would perform. But Shriram definitely is a value pick. And last but not the least, we still have inclination for PSU financiers, wherein we continue to place our bets even on Power Finance Corporation.
All right. Thank you so much for joining in and giving us your views on a whole host of financials. You still like the PSU financials, and you believe that there is room for further multiple upgrades coming in from Manappuram as well, and good news coming in from Bajaj Finance. So that's about the NBFC space this morning. Let's welcome Siddharth Khemka, who joins us now on the show as well. Siddharth, good morning. One of the sectors that has been doing extremely well in terms of gains after a big drubbing is the defense space. And overnight there was news that has come in as well, where the Defence Acquisition Council has approved a massive amount of orders / purchases as well. Who do you think stands to benefit? And do you think this rally in defense stocks resumes and we look at them going back to their previous highs?
Good morning. So if you look at the sentiments are again turning in favor of defense stocks, not only in India, but globally. There is increased talks of higher spending, and India can be a key beneficiary. Last few years, we saw the government also pivoting towards not only making for India, but also looking at exports as a key focus area. And I think with Europe looking to increase its defense spending, I think India, some of the Indian defense players could benefit out of that. Some of the leaders in the defense space, we believe those would continue to benefit. For example, what we like, Bharat Electronics consistently doing very well. We've seen the order book increasing in the last few weeks, and the government rushing in to achieve its order targets for FY25. I think the order inflows will keep coming in, and if you look at growth, continues to remain pretty strong even for Bharat Electronics. We are forecasting a 20-22% earnings growth. Valuations remain comfortable now at about 35 times on a forward earnings basis. The other stocks that we like, HAL and Mazagon Dock, both in different areas. HAL in the aviation space and Mazagon Dock in the defense shipyard space. All three of them are market leaders, continues to have a strong order book, strong execution, and healthy earnings growth, supported by a decent valuation.
No, absolutely. Sid, morning. KEI, Polycab, Havells. Those saw big cracks for the second time. Same news flow. I mean, a large entrant making it into their industry. What's your sense?
Yeah, Prashant, I think there is definitely a big dent to the sentiments for the sector if a lot of large, the challenge is these players have large balance sheets and they can put up large plants, and the details of Adani Group's plans are still not yet out. So I think a little bit of impact only on the sentiments. Ultratech plant will come up only in 2 years. We'll see very strong numbers from all these players in Q4. But the days of premium valuation, I think that will go away. And within the space, what we like Polycab. We downgraded KEI despite strong numbers to a neutral, given the premium valuation that it was enjoying. We believe that cannot be sustained anymore. Polycab is a market leader, and we believe that the impact on numbers will not be to that extent compared to some of the smaller players. And it has the most diversified book, and I think earnings growth compared as well as the market leadership would continue to support valuations for Polycab, where we have a buy rating, and we continue to like that stock.
Okay, Siddharth, we want to just also, you may want to listen in to these sound bites next. So the Aditya Birla Group Chairman Kumar Mangalam Birla has announced 45,000 crore rupees in investment plan for Hindalco's copper and aluminum businesses. I mean, this was on the sidelines essentially of a rebranding exercise for Hindalco, which is of course one of the largest in that group. Let's just play that out, and we have a few other things.
Birla Copper, for example, is setting up India's first e-waste recycling plant, extracting and recycling metals from discarded devices, and we are committing rupees 45,000 crores across the aluminium, copper and specialty alumina businesses to deliver both upstream as well as next-gen high-precision engineered products to our valued customers.
We are going to now, in this next phase, expand our upstream capacity. So alumina refinery, a new one, aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Mr. Pai also, of course, talked about U.S. tariffs, potential U.S. tariffs, right, on metals. Hindalco, of course, has got Novelis, which operates out of the U.S. Listen in.
So I think that, I have been on record for saying that tariffs that are announced by the US are sort of neutral to mildly positive because we have a large business in the US.
Yeah, so they operate out of the US, so they're not that adversely impacted. We'll take a break on that note, come back on the other side, and we'll discuss more stocks, more ideas, including, of course, the technical setup of the market back in just a bit.
Well, it's a Friday and we are discussing a lot of stuff during the breaks, food and snacks and all of that.
Must start planning, forward planning.
Definitely. But, speaking about forward planning, what does the market look like next week and today itself? Bulls are in full control. Mitesh, what do you believe, happens today and all of next week from a chart check standpoint?
Good morning. It's been a good rally, and typically as we approach the weekend, there can be some profit booking, and we are also now close to overbought on the hourly charts at least. My sense is that the trend is on the upside. Today could be a slightly more volatile day compared to what we have seen in the last few days. But what is important is that, yesterday we had a gap up on the Nifty, which was not filled, and I think that becomes the first support area. So I think anything close to about 23,000 is a very big spot, which is about 180, 190 points lower from here. And I also maintain that we will most likely head towards 23, 550, 600 zone, which is where the weekly averages come in. So given that kind of view, the outlook is positive, stay long. In case you get a 100 to about 120 point kind of a decline, in case, you can add there more, but otherwise stay long. Very clearly, this market is biased on the upside, though after 4 days of rally, there could always be a few hours of volatility and profit.
Right, and your call on the Nifty Bank and individual stocks?
Yeah. So for the Nifty Bank, I've been looking at a first target of around 50,400, 500 area. This is where the Nifty Bank made a high in first week of February. And since then went into a corrective decline. So around 50,400, 500, I think, that's where the Nifty Bank can take a pause. But the overall chart structure does suggest that eventually it should cross that and head towards 51,400, 500. So there's, again, significant upside left over here as well. On the individual stock side, I have a buy on HDFC Bank. If you get it around 1760, 1762, buy with a stop below 1740 for a target of 1800. Reliance is something which has been a recommendation on many occasions in the last few days. It's again a buy today with a stop at 1254 for a target of 1300. A buy on Cipla with a stop at 1490 for targets of 1560. And Steel Authority sale, I would want to see the stock price get past 115. Yesterday also, I think it made an intraday high around there. Day before yesterday, it was the same level. So once it crosses 115, buy with a stop just below 113 for a first target of 120.
All right. Got that, Mitesh. Thanks very much. Stay on, more questions for you in just a bit. Shrikant Chauhan is also with us. Shrikant, good morning and happy Friday to you. What a great week it's been, right? Let's start with the index. What are your trades?
Yeah, absolutely. The market did really well in this particular week. And in fact, on Thursday, the market has broken all its important resistance level without any major efforts. So that is something which is going to support the market in the medium term. The most important part was that the market has broken the level of 50-day simple moving average, below which the market has spent a lot of time. I'm to say since the announcement of the budget, whenever the market has tried to move these levels, we saw a good amount of profit taking. But yesterday, the market has broken this level. So broadly, I am of the view that we are heading towards the levels of 23,400, 500 sort of levels. But there we need to be careful because all these F&O contracts are also maturing. And there we need to be careful. We are expecting some profit booking close to those levels. So ideal strategy should be to look for adding position if there is any correction. Close to 23,000 levels, we feel the market is having good amount of support, and there we should look for taking some contra bets of going long. And Bank Nifty also around 49,700, 600 level, we should look for taking some long bets. For stock specific, as Mitesh said, yes, we like Reliance Industries, and most of the time at the last leg of the rally, I'm going to say the markets, as the markets have rallied nearly 1,500 points, we need to be careful at higher levels, but at the same time, at the last leg of the rally, we see some specific buying interest in Reliance Industries. So this time also I'm expecting stock to move towards the levels of 1320, 1325. And at current levels, the risk reward ratio is quite favorable. We can keep stop loss at 1245 or adding any long positions. We also like BHEL, Bharat Heavy, which is around 206, 207. All these capital goods and infra companies are doing well. In that, this particular stock is showing a lot of strength. And here also we are expecting 215, 220 sort of levels. So we can keep stop loss around 204, 203 for creating long positions on BHEL.
Okay, so going with a bit of a PSU play as well. Got that. All right, gentlemen, we'll come back to you a little closer towards market opening. Right now, need to take a very quick break. We'll be back. We'll have the pre-opening rates. And also, we get a conversation going on the big sell-off that we saw in the wires and cables side of the market yesterday. Adani is entering. Ultratech announced its entry. Now, what to do with these stocks? We'll get you some analysis from PL. Praveen Sahai joining in. Welcome back. Well, just about 13 minutes to go before we get the actual rates. The pre-opening rates are going to come up on our screen in just a bit. Let's actually see what the Nifty is doing. The expectation that would be maybe a little bit of a stretch, 350 points higher, because the implied open was telling us that we'll probably start 10-15 points lower. Slight consolidation, considering global cues are a little mixed at this point in time. Siddharth Khemka is still with us. Siddharth, what thoughts on some of these auto stocks? I don't know, if there's any point looking at it, because we know that sales are not happening. All of them are hiking prices, Maruti, Hyundai, etc. Ola has its own problems. Hero yesterday announced entry into electric three-wheelers. So there's a lot of news flow. Are you buying anything in autos? And by the way, our TVS is giving a 10 rupee dividend, let me add. So much of news in autos, which is actually great. Solid 10 rupee dividend from TVS Motors.
Yeah, I think this sector always remains in limelight one way or the other. We heard the Ola Electric woes continuing, and the two-wheeler space continues to remain under pressure. Hero reported very weak numbers. So that's a space, again, looks weak. The metal prices going up, that is a bit negative for the auto companies. And we saw on back of that, companies announcing price hikes. The last price hike they had taken was as recent as Jan, and they are taking another price hike. That just goes on to show the pressure on margins. In this entire space, what we like tractors. They're consistently reporting very strong numbers, and in that also M&M is far outpacing the industry demand. Plus the launch of the new electric vehicles, that is picking up well. We believe that could be another strong foot for M&M in the passenger vehicle segment. There were concerns with regards to Tesla's entry, and the stock has corrected, which we believe is a good entry opportunity for investors into M&M. We believe that's the only stock that one can look at in the OEM space. We have a buy rating and target price of 3,675.
Right. We'll keep an eye out on a couple of things. Hindalco in pre-open is higher by about 1.5%, closer to 2%. There was some, announcement that came by in terms of a rebrand, 45,000 crore capex. Yes, the street was aware of that, but the fact that they are looking at newer avenues of growth, we're keeping an eye out on that. And Manappuram Finance itself, which was, touted to be the stock of the day, premium of almost 20-25 rupees over the previous close with regards to the deal price. and the stock has opened right close to the deal price itself, 239 versus the deal price of close to 236. Mind you, it is in the F&O band, so we'll keep an eye out on that. And don't lose sight of the rupee as well. While we were hearing that conversation coming in from Siddharth Khemka, the rupee itself has opened about 14-15 paise stronger versus yesterday's close. And that's important more so because one, rupee's been gaining strength. Secondly, yesterday the dollar index did not weaken further.
Yeah.
It, in fact, from 103.5 closed at around 103.8, 103.9. In light of that, if there is strength in the rupee, then that's further positive from an FII standpoint.
One of my favorite songs, Money, Money, Money. And it's the money that came in yesterday, the FBI buying. I mean, that's definitely helping.
Plus the anticipation of more money coming into because of the FTSE rebalancing.
And maybe exactly that. So, I mean, the whole flow situation really seems to be helping our currency do a lot better than, the dollar strength, like we've been saying. When we started the week, the dollar was closer to 103.3, 103.4. Ending the week, it's closer to 104. And yet the rupee has done quite well. So, it's good going. The pre-open Nifty has settled about 35 points lower. That's what we have on the screen. Bajaj Finance doing well. And the other one, like Mangalam pointed out, Manappuram-Finance, up about 8-9%. Two important stocks of the morning. Let's put the spotlight on the wires and cable space now. In fact, we should get some of these stocks up. Let's see if there's any recovery. KEI, Polycab. Yesterday, these stocks are absolutely slammed, bombed out, because of the fact that along with Ultratech, now we have another giant entering the wires and cable space, and that is the Adani Group. So what could potential impact be? We have Praveen Sahai, Vice President Institutional Research at PL Capital Group, joining in. Praveen, good to have you on. So, I'm just going back and reiterating what these companies told us after the Ultratech entry. We remember the whole price damage and the drama that happened. And then there were the conference calls, analyst calls. And the incumbents claim that gaining scale so quickly will not be possible, even for a giant like Ultratech. But realistically, what is the disruption that you would anticipate now that we have two biggies in the fray?
Yeah, thank you. Definitely the entry of the new entrant, and that's the conglomerate. Definitely the way forward in the long term will impact. But also we had to consider that this sector is growing at a 12.4% CAGR. And that is also giving a big opportunity the way forward for all the players, I believe. So just to give you some numbers, like currently 84,500 odd crore of wire and cable, it will reach by FY29 to around 1,52,000 odd crore. That will generate an incremental 67,000 odd crore of revenue. So, and also if you look at the current position of the top 5 players, top 7 players, if I look at, they account 54% of the entire market. And for this 67,000 odd crore of a revenue, sector requires around 15,000 odd crore of a capex over the next 4 years. So, and so far, top 5 players has announced yearly, clubbing together all 5 players, yearly run rate for a capex is around 2,500, 2,600 odd crore. So still there is a room for a new entrant to enter, explore this opportunity. And I am in a view what the companies are saying, that's definitely there would be some timeline, some 18 to 24 months for the commissioning of their facilities. Post that the approval process is quite lengthy, especially in the cable business. So at least a 3-4 years time frame required to come to an optimal utilization of what they are announcing right now. And they had also communicated, especially the Ultratech has already communicated about these things. So I think the opportunity is going to be big, and the entry of these players will adjust in that without hampering the large players like of a KEI or Polycab growth rate. But one thing is for sure, and that's what's happening right now, is a de-rating in the sector. So pre-COVID, if you look at these sectors from 16 to 2019, traded at around 17 times. Now the post-COVID, and when, say, the example of KEI delivered a 42% of earnings CAGR. Post the COVID, 21 to 24, earnings CAGR were around 29%, and the stock got re-rated and reached from 17 times to 50 times. And now the re-rating because of a new entrant is happening, and that's I believe this sector to be in the range of around 35-40 times, not more than that. And right now the polycab or KEI reduced to around FY27, 27 or 28 times. So definitely the correction is large. Yeah, go ahead.
No. So my question was, this correction is large, but people are of the view that this correction has been done much ahead of the anticipated disruption, and the valuation multiple correction has already happened, and maybe perhaps it's the time to buy. Would you concur with that view?
Yes, definitely. I am with you. Because as I said, this sector where the growth rate, the earning growth rate is expected to be range of around 23-24% the way forward. And also the sector is as a whole growing at a 12.5-13%. These companies already did capex. Their guidance is nearly around 17-20% of growth in their top line. So sector growth is intact, ROC profile around 25-27%. I believe it should be in the range of around 35-40 times, which has already reached to a 27-28 times. So I will be buyer over here.
Well, the counter argument for that is these entrants are big players, and in their overall scheme of things, cable and wires don't account for too much, right? So for them to wipe others out, all it would take is for them to incur EBITDA losses of, a couple of years, which will not account for too much. But for the others, that would be a big dent. Would you believe that in light of that, there could be further downside from levels that the street is anticipating right now?
So what you're saying is definitely they can do. But these, as I said, wire entry or the LT cable entry is quite, comparatively easier as compared of the ST cable or extra high voltage cable entry, where you required a very lengthy process of approval for your product and the plant wise. It takes time. It's not a difficult process, but it takes time, very lengthy process. And that is why the sector peers are saying, and we are also in the view, it will take a time, at least 3-4 years to come in the market and dent. And definitely that is going to derate, and what the sector got derated actually. So even immediate effect on the next 2 years time frame on the financial, we are not in a view of that.
All right. And your top picks would be?
In the wire and cable, definitely the KEI and the polycab after so much of a correction, and they reached to a 27-28 times of FY27 earnings, we are liking.
All right, take that point. Thank you so much, Praveen, for joining in and setting us up for, looking at this sector now. You believe that maybe the valuation derating has already happened and this dip could perhaps be a buying opportunity. Good time to get in Mitesh once again. It's 9:10. Mitesh, your 9:10 call would be?
I'll go with the buy on Steel Authority once it starts getting past 105.
Steel Authority sale is the purchase idea that Mitesh has given. Meanwhile, just keep an eye out on a couple of stocks from the pre-open as it settles now. We have the Nifty IT index, which is down about 2%. So that could cause a bit of a lid on the gains that we could see perhaps, dented further as well, because the Nifty IT index outperformed in yesterday's trading session on the back of improving prospects from the Nasdaq standpoint. United Spirits is another stock which is up 3%, and we are seeing some bit of pickup in names like KEI Industries, etc. as well. But the second half of this trade today will be very crucial because of the FTSE changes, the adjustments that will take place. What are the stocks and what are the flows that are expected in those stocks? Vivek joins in with a list of that. Vivek.
Well, good morning, Mangalam. Absolutely right, especially in the last hour of the trading session today. The FTSE index changes. Remember, these are part of the semi-annual index review of the global index equity and all of the India stocks that will be added to the FTSE all-cap index and the all-world index will be the ones that will be impacted in the session and will see significant buy flows. There are no major deletions as far as FTSE is concerned, but there are 13 additions this time around. Amongst the 13 additions, remember all of these together, along with the various weight increases that some of the Indian stocks already in the FTSE, will be a net inflow event for India. Close to $1.4 billion of net inflow is what India can expect to see and India equities can expect to see in the last hour of the trading session today. So it will be important to also track the FII buy figure today once it comes out post-market hours. Now, which are the 13 stocks? 3:61 a.m. Ajanta Pharma, Apar Industries, Bajaj Housing Finance, Blue Star, BSE, CDSL, CRISIL, Fortis, IndusInd will see significant inflows of close to $25.5 million. It makes its entry into the FTSE index. Keynes Technology, Nalco, as well as Premier Energies are the ones that will make their entrance in the FTSE All World All Cap Index. And along with that, one particular stock that was included but has since been rolled back is fact, that is fertilizer. That particular stock will not be making its entrance as far as FTSE is concerned, but $1.4 billion of inflow, as per estimates of IFL, is something that we need to keep an eye out on.
Yep, we take that point. Thank you so much for that. Just a minute to go for market opening. Meanwhile, we were speaking about Citi on, rather United Spirits, right? So there is Citi, which is written on United Spirits. They've actually upgraded this stock to buy with a target price of close to around 1650 odd rupees. They believe that the near-term growth trends would continue to be positive because of the prestige portfolio, and also there are policy tailwinds expected in Uttar Pradesh. There is a leadership change out there from the start of next financial year where Praveen Someshwar takes over as Hina Nagarajan moves on to another role in the global business itself. So we will most definitely keep an eye out on that. As of now, the start looks like it would be about 20 points in the obverse side. We have the market which is open, 30 points lower for the Nifty. A mild tinge of red is what you're seeing, but it looks like it has been it's holding on around the 30-40 point downtick itself at the open. The mid-cap index has it a little worse right now, down about 124 points. What are the stocks doing? Let's look at Bajaj Finance. That's the big one. The top Nifty gainer today, as Rajiv Jain's elevation has buoyed the street out here. On the way down, though, it's the IT stocks which are, pressurizing the Nifty. Cautious commentary coming in from Accenture. So the top loser on the Nifty today is Infosys. We have LTI, Mindtree, TCS, HCL Tech. In fact, among the top 5 losers on the Nifty, all of them belong to the IT pack itself. Infosys, LTI, TCS, HCL Tech, Tech Mahindra, Wipro as well. So that's the single biggest contributor on the downside. The Nifty Bank is actually outperforming, opened slightly lower, thereafter saw a bit of a pickup and now just trudging between green and red itself. The broader markets, Manappuram Finance has to be the stock of the morning, opened up about 1.2%. But let's see where it goes from here. From a volume standpoint, there could be a bit of an impact, largely because the stock has also entered the F&O band, so we'll keep an eye out on that one. What that has done, however, is taken all the other financial stocks higher with it. Maybe perhaps a positive rub-off of a deal happening in that space. So we have Poonawalla FinCorp, which is higher. Aditya Birla Capital has opened about 1.5% higher. AU Small Finance Bank as well is higher. We have Jio Financial Services, which continues to do well. We spoke about the positive brokerage note coming in on United Spirits. That stock is higher by about 2.2%. We have Jio Financial Services for the third day running, doing extremely well. And we have KEI Industries. All these wire and cable stocks, which had taken a bit of a drubbing yesterday, are seeing some bit of bottom fishing today, with KEI Industries having moved higher by about 1.5%. Senco Gold, for the fourth trading session, the stock has been locked in upper circuit, a 5% upper circuit, making the gains of almost 14.5-15% for this week itself. Defense stocks not doing too bad either. We have Bharat Dynamics, which has opened higher by about 4.5%. BML up around 4% as well. And just before open, we got that news coming in on VA Tech Wabag that there has been a funding announcement of almost $100 million. That stock too has opened higher by about 3%. On the way down, we are seeing a decline on TBO Tech. As Vivek pointed out, there is a block deal out there and some bit of profit taking on names like Shipping Corp, which saw a big move in yesterday's trading session, along with something like a Green Lamb, which goes X bonus in today's trading session. So the mid caps now have recovered. Nifty just about flat, led by the Nifty Bank, pressurized by the IT index. And the broader markets are doing a lot better than what they were at the open itself, for 1,300 stocks in the green, for about 720 stocks which are in the red. So we'll keep an eye out on the markets. We're also seeing some up move on names like Nestle India, some perhaps pick up in the auto space as well. So Maruti Suzuki is up around 1%. Trent is also seeing a bit of a pickup. Shriram Finance is the other one, which is up around 1.3%. Oil prices saw a bit of an uptick overnight. So let's see whether ONGC and Oil India continue their up move. They've opened in the green by about 1%. Let's see how that pans out as well. But Bajaj Finance is one which is doing extremely well. Let's go across to Hormaz. He has a list of all the brokerages that have written on some stocks this morning. Hormaz, Bajaj Finance is the top Nifty gainer right now as we speak. It was expected. What are the brokerages making of this development? I presume positive all around.
Positive all around indeed. Top Nifty gainer of the day, top Nifty gainer so far this year as well has been Bajaj Finance. The key overhang on the stock has also been addressed, right, with the elevation of Rajiv Jain as Vice Chairman and Executive Director for a 3-year period. Anup Saha is now the new Managing Director as well. So brokerages across the board have raised their price targets on the stock. With starting off with Citi, it's maintained its buy rating. It's raised its target to 10,200 rupees now. And it's said that the leadership continuity and strategic clarity is now lending more credibility to the seamless execution for Bajaj Finance, and that the concerns around this management transition have now been mitigated. Morgan Stanley too, he had an overweight rating. It had put out a scenario analysis as well. If Rajiv Jain indeed does stay on at Bajaj Finance, it has raised its price target to 10,500 now from 9,300 earlier. It said that Rajiv Jain's continuity will improve investor confidence and the sentiment as well, and the investment thesis for Bajaj Finance is now the strongest among the large cap financial companies, and it also expects the re-rating that Bajaj Finance has had recently to sustain, and also strong returns is what it is expecting over the next 12 months. The CLSA 2 on Bajaj Finance has maintained its outperform rating. It has the highest target on the street, though 11,000 rupees from 10,000 rupees earlier. It said that it is the top pick. The focus is back on fundamentals now with the management transition now in place. The credit costs are near their peak and they should taper down from FY26 onwards, and it is expecting a 26% profit CAGR over the next 2 years. So as many as 5 analysts now expect the stock to cross levels of 10,000 and above. Positive commentary coming in all around.
Positive commentary coming all around. In fact, now as we speak, the real estate pack has picked up. It has been the best performing index all through, all through the week. And now we have DLF, Prestige Estates, all of them picking some pace as well. But let's go across to Prashant and Surbhi, who've moved studios for now to get in a good conversation coming in on the markets itself. The team of UBS joined them. Prashant, Surbhi, take it away.
It has been a great week for markets, with the Nifty up about 3.5%, the Nifty Bank about 4%, and the small cap index up 6.5%. The big question many are wondering is if this is a bear market rally and they can be powerful when they come, or have we really for sure seen the worst of the downside levels? The other question, of course, is if you believe the time is to be constructive, is what to buy. Financials is one consensus overweight, but what else? Lots of stuff moving around. Surbhi and I'll discuss all of this in this special conversation with Gautam Chachoria, Head of Global Markets, UBS Securities, and Vishal Goyal, Head of India Research and Banks Analyst at UBS Securities. Gautam and Vishal, great to have both of you gentlemen here with us on the program. Appreciate your time as always. Prashant, this side. Gautam, I mean, so as I prefaced this conversation with that comment about is the bottom in, not in, a bear market rally. So let's just get that out of the way, because I think that is the number one question in the minds of, I guess, most who are watching this broadcast.
Sure. Thanks, Prashant, for having us here. Look, from a tactical near-term perspective, it looks like the bottom has been made very clearly. And that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions, both from the central bank and the government of India in the last couple of months, have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known. But that is market definitely has bottomed down.
Is you threw in the word tactically? So it's like the caveat there. But you think tariffs are the big one? I mean, that is the big one. So on the second. And so let's just get that out of the way as well. Do you think it's going to be a big one? It's going to be something to be, so they'll go max high tariffs. I mean, they've said they'll hand over a number to each country And India has been mentioned many times as a high tariff country. So hand over a number on the 2nd of April in terms of what's the cost of doing business with each country. And the expectation is that they will back down from that level. So it could be a high number to begin with, and then perhaps negotiations, etc. What's your sense? And how much of a risk is that for the broader market, Vishal? Sorry, that's for Gautam. Sorry.
Sure. Okay, look, for tariffs, we are less worried about how it impacts India directly in terms of what US tariffs are for India, because it's out in the media that they're talking in terms of a bilateral trade deal. So even if there's a tariff which is a shock on early April, it's quite likely that it followed a trade deal and we have a much more equilibrium state, which actually not necessarily bad for India in a bilateral sense. What we do worry about from a tariffs perspective is not the direct impact, but the indirect impact. If the tariffs in general leads to a global growth slowdown, it will affect Indian markets and Indian economy. So that's a much bigger worry for us rather than just the tariff rate which US imposes on India on 2nd April.
Yeah, absolutely. And I think that clarity will only emerge as the next couple of weeks unfold, right? Because on 2nd of April, we'll get a number like the US president has indicated, a number which will be the basis and the starting point of negotiation. And then we'll see how that goes. So it's not quite over as yet. Gentlemen, great to be speaking with you this morning. Thanks for joining in. Vishal, I wanted to get to you. So the big headline from Gautam has come in that the bottom has been made. Now let's talk some numbers as well. And he alluded to how the actions from the central bank as well as the government, how they've kind of reversed the cycle to an extent. What does that mean for anticipated earnings recovery in FY26 and how our valuations look?
Hi. So I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also our earning estimates are lower than the consensus, mainly because we feel a bit of credit cost is still to come, versus growth expectations also clearly in consensus numbers are slightly more benign. If you look at the earnings downgrade cycle, if the measures taken by the government and RBI starts, showing results in the first half of, next financials, we might see some upside in earnings trajectory. Otherwise, if you look at the construct of P&L for banks especially, you would see that with the repo cut, you will have margin declines, which would put pressure on PPOP. And therefore, if you look at the consensus earnings even today, which are higher than our estimates, they are still in single digits for most players. So that is what I think is in the numbers. In terms of valuations, yes, because the sector has been derating for quite some time, the valuations look reasonable, and we need to see whether FY27 can be a recovery year. I don't think FY26 first half may not be, second half potentially. Yeah.
So Vishal, let's get some of the numbers in. We're going to be ending FY25. I think the guess is anywhere between 5 to 7%. It's been a bleak year. What do your numbers look like for FY26? Like you're saying, maybe the recovery is more back-ended. And then FY27, at least at the Nifty level, do we get back to double digits earnings growth?
I think that's for Gautam.
Gautam, yeah. Gautam, why don't you take that?
I'll jump in. I think double-digit earnings growth for Nifty overall and markets overall in FY26, specifically given off a low base in FY25, should be a very reasonable expectation. And we do expect that to happen, including for the next couple of years. And as I said, look, the macro cycle itself, FY25 was a macro tightening cycle. FY26 is a macro easing cycle, both from RBI as well as central government. So that should be enough to have double-digit Nifty earnings growth.
Got that. Vishal, on banks and financials, actually it's been largely pretty tough, right? Accidents in banks, IndusInd is a case in point. MFIs has had a tough few quarters. NBFCs in many cases, it's not really made a lot of money except maybe a few. Gold finances perhaps is an exception. So largely a tough environment. even though the view has been that it's a defensive space, valuations have been reasonable, and this has been true for the last, I think, almost at least 3-4 quarters now. Do you think money will be made here? And what are your top ideas in this space, Vishal?
Sure. So I think, as I was alluding to, that the earnings downgrade cycle, it's been there for last almost 4 quarters. We could be probably towards the end of earnings downgrade cycle, but I think little too early to preempt, because RBI announced a few things, the tax break, all these things generally should be positive. But on the ground, the data we see, it's not showing full recovery. Even if you look at today, the credit growth, the deposit growth numbers are still, 10-11%. Liquidity is extremely tight, probably also because of advance, taxes. But we need to have easy liquidity once again and recovery on the ground. The data we track on delinquencies, overdues, that also says that stress is not over yet. And therefore, I think it's worth watching the space for the time being. In terms of the sub-segments we like large private sector banks. We continue to like them. We feel that the sustainable earnings growth of 14-15%.
But my question is, do you like them on an absolute basis, thumping the table and say, well, buy them? Or this is like you make a nice portfolio and you put some banks there. Nothing wrong with it. But is it an absolute call, absolute return call?
See, thumping the table, valuations are not come yet. And therefore, it is a relative call.
Got it. Fair enough.
Even financials, I'm actually, if I could jump in, I'm a little surprised because large banks specifically, Vishal, they've been underperforming throughout the last phase of the bull market. But you still think that thumping the table valuations on large India financials have not yet happened?
See, I think maybe the definitions are different for thumping the table. But let me clarify. let me clarify. So a 15% to 18% return is still doable because they are generating good ROA and ROE. I would say 25-30% is a thumping the table, kind of valuation or upside. So.
No, absolutely. Point taken. We've got so much to discuss, so let's move the conversation along. Gautam, another sort of constant feature in this market has been more and more competition in wherever there is profits to be made, right? I mean, profit pools getting disrupted, at least in the future. Cables and wires, for example, right? A news story, 2 hits back-to-back, announcements from large conglomerates making an entry, large business groups making an entry. What's the view there, and what's the feedback that you're picking up? Any outright buys after the sell-off?
Look, any sector where competition increases does cause concern, both stocks as well as incumbents. But there are 2 things to look out for when we look at the framework for these scenarios. One is the level of unorganized sector versus the organized. So if a new player is entering, it's more likely to disrupt the unorganized or also organized in a material way. That's the first framework. And the second framework is the time scale. How easy to disrupt in the next 3 years versus will it take 10 years? Like the role of distribution, the role of understanding the network, everything. Okay. So if you look at cables and wires specifically, we do see some impact. But again, after the correction, the sector overall does look attractive risk reward for us from our analyst perspective. That's the framework we'll put it.
Okay, so that's cables and wires, and you're still keeping the faith despite all the, the worries about competition. Gautam, another space, and I want to get your thoughts overall on PSUs and then defense. And the question really is whether the old leaders can continue to have a place in this leg of the bull market, if you're saying the bottom is in place, and if we are in one. Because I remember you folks came out with a call on HAL, and I think the view on that specific call was that the market's concerns are maybe a bit misplaced and orders will still coming in. So what's the wider view on defense and PSUs?
So before I get into defense and PSU, one simple market level point I would overlay in that discussion is I think 2025, as the market has bottomed and recovers, will be very different versus what we saw last couple of years, where thematics and sector-driven big moves happened. This year will be, even within sectors, a lot of differentiation, for stocks. Like you heard from Vishal, financials also is not just one simple basket. There are pockets which will do well, pockets which still are seeing stress and will take time. Same thing applies on PSUs and defense. So we don't have PSU basket as such, but all the relevant PSU sectors. So it won't be a thematic run for PSUs and defense. But within that, and it applies to even CapEx or consumption, we see specific stocks which are attractively valued now on a relative basis versus where they were a year back, or even versus where they were pre-COVID, and where we have strong visibility on catalyst and growth, not just for the next 6-12 months, but for the next 3-5 years. So wherever we have that visibility and comfort, then yes. But the broader sector thematic, that strategy will not work in 25, unlike last 2-3 years.
But you are seeing some of those opportunities in defense.
Absolutely.
And where else in PSUs? Like defense, some defense names meet your criteria. Where else in PSUs do you still see valuations, growth, etc.?
So more than valuation, growth specifically across, there's opportunities in the utility space, defense, even financials, a little bit here and there, like segments of financials which are catering to particular sectors in the non-bank PSU space. Again, there are opportunities, absolutely.
I think in published notes, HAL comes up as an idea, right? And I think oil marketing is another pack.
I can't comment on individual names, but yeah, oil marketing in general looks interesting, specifically given where the crude outlook also is.
Yeah, absolutely. I just want to make one point, Gautam, and Vishal said that he's still not seeing when banks are essentially front-facing or economy-facing, right? So it gives you a real good picture of what's happening. And this ties into the earnings growth point that he made. He said, well, credit growth is pretty sluggish. Still very sluggish. Maybe it'll pick up as some of the RBI measures start to work their way through the system. Is that the view, Gautam, the team, that it will happen? I mean, it's a H2 story in that sense.
It will happen again. And then you look at global economies or Indian economy historically, credit growth doesn't drive or lead a recovery. Credit growth typically follows with a lag. There is activity picks up, and with the activity pickup, there is demand for more credit, and that's how credit picks up, not the other way around. The conditions for the demand and credit pickup has to be there. The condition for demand is the broader economic pickup. And for that to be supported by credit growth, there has to be sufficient liquidity in the system.
Okay. Let's talk about a few other spaces. IT services, Gautam, again, I mean, we all know the news flow and headwinds, etc., which are well advertised. But what's the view now, the team at the UBS and the analysts at UBS? What are some of the ideas where you have comfort and one can make money? Go on.
Yeah. So again, that's a space where the overall macro is quite double-edged, if I use the word. Like there are elements which can surprise positively if the US growth picks up and spending picks up. But given where the valuations, etc., you have to be very, very selective. So we won't go out and say, okay, you overweight IT and go out in a big way, but also not so it's more of a neutralish call on the sector overall. But there are pockets, again, just like most sectors, where we have interesting buy ideas.
Vishal, I just want to circle back to financials for a bit, and we take your cautious approach on board. So really, what is, I mean, you said you still like some of the large banks. Beyond that, let's talk about diversified financials. And there's so much going on. Look at the insurance space. There's almost a deal a day over there right now. And there's too much of regulatory change. There's the entire capital market space where prices have come off significantly. So do you see opportunities there? Let's take these two pockets first, insurance and capital markets.
Yeah, see, so on both this, especially capital markets first. Now, we have seen blockbuster years, right? Last 2 years. In terms of activity, in terms of all, revenue, EPS. So we are probably, seeing like I don't want to say best is behind, but it's almost like, there was a great momentum for capital markets player. In the very near term, maybe it just consolidates or slows down. We are structurally positive on capital markets, like exchanges and other ancillary, players in capital market, which we cover. So we think there is a great structural opportunity in this place. It's just that one needs to be sure about the near-term slowdown or consolidation, which we are already seeing, right, in some sense.
That's capital markets. What about insurance? And what do these recent deals imply for overall interest and valuations in that space?
I think that space is also consolidating in terms of growth, right? And therefore, we have seen the consolidation in valuation. We don't have very strong, bull or bear view there on insurance. We feel that, it's a sector which, again, especially the under-penetration of protection will keep driving growth over there. And savings is the bit which keeps, the volumes moving. Yeah.
So let me ask you a more general question on NBFCs. Now, the fact that there is better liquidity, slightly easier norms, risk weights have been lowered, that's good overall for the NBFC space. But if I were to ask you to rank NBFCs in order of preference or priority, where one can expect better returns, how would you rank it? Let's say there are the housing finance companies, there are auto financiers. You could talk about the gold financiers. Again, they're a big deal coming in, private equity major coming in and thumping the table with some money. So tell us, NBFCs, what to pick and why are you convinced?
Sure. So let me give you the framework, about how we are thinking about NBFCs. First, like microfinance, we feel there are still pressures. Asset quality, headwinds are still there, especially given that few things are still, pending to be effectuated on the ground. Let's say the 3-lender norm. Plus, I'm assuming the situation in Karnataka, is still work in progress in our view. So microfinance currently, I think should be the bottom, in that table. Then I think if you think about consumption lending, which is unsecured lending or NBFCs who are, catering to those, there also we feel that there is still data is still suggesting, build up on the stress, in the sense it's not falling, like it's not improving anymore, not improving. It is staying where it was after increasing in terms of delinquencies. So that's also a segment there, we need to actually watch out for data. Then I think if we think about auto financiers, I think auto financiers is space we like, again, selectively names depending on the valuations. But that is a space where at least you don't have so much, problems as a microfinance or unsecured. It's slightly better place. And because they have fixed rate lending, they benefit the most from falling rates. So that is like one of the segment. We don't cover gold finance as of now.
Okay. Got that. Just a couple of other sectors and we'll round up the conversation. Gautam, on Telecom, what's the view? We reported yesterday that the government help, which many were hoping for in terms of the AGR dues after the court said no, perhaps won't come. Does your view change, and what's the house view?
We haven't changed any view or our stock preferences. I think the industry looks still attractive overall, though we don't have buys across the sector. We have a mixed bag of recommendations across the sector, including telecom towers and telecom service providers. So it's a mixed view, but overall, the sector still looks attractive to us.
Okay. Gautam, if you can tell us what's the feedback from the global team at UBS, right? Because they'll be tracking all those tariffs, etc., much more closely than we are here. Is it going to be, will 2nd of April be a meaningful jolt to global growth? Because that is the channel through which India will get hurt, as you said, not directly.
So look, not just for India, even global equities is not priced in if it leads to slower global growth. So firstly, the impact of global tariff or these tariffs on global growth and the impact on markets, I think globally is not priced in. That's our house view. Will it lead, what kind of tariffs will it happen on 2nd April is anyone's guess. How long they last and therefore the impact on global growth and recession, again, too early for us to comment. But if there are meaningful tariffs which continue for a prolonged period, it will definitely lead to a growth negative surprise globally. And
but does the team at UBS globally believe that it's an ideological issue? They're ready for some short-term pain. So, are they leaning towards that view? Or is the view that, well, they can't see the market sell off too much, so they'll reverse and they'll go pro-cyclical once again?
Even that is too premature, right? Because there's a second order effect, which is how do different economies and countries respond to those tariffs? So one is it's difficult to predict what US President does on 2nd April, both in terms of degree and quantum. Second is how do different economies and countries respond? Like if there's a big tariff on India on 2nd April, will India wait for the trade deal to be signed and do nothing? Or will India impose tariffs in retaliation immediately and continue the trade deal discussion? Will have very different implications. If that we extrapolate globally, it makes it even more messy than it is.
So to sum it all up, I want to go back to the optimism with which we started, because Gautam told us the bottom has definitely been made for this market. Gautam, so what's the base case view? Nifty either December 25 or 12 months, whichever horizon you're looking at. What's the base case expectation? And leave us with, say, the top 3 bets or the top 3 segments through which you can play this leg of the recovery and the resumption of the bull market, if I can call it that.
So look, firstly, the Nifty should compare to 22,000 levels, not necessarily 23,000 levels. That's where the bottom was made. From that, Nifty should end up this year. Will it be double-digit returns, single-digit returns? Again, too premature. And that's why I used the word tactical in the beginning. Bottom made. Bull market is there or not is too early to say that. But sector picks, irrespective of what happens, at least in a relative way, definitely, is private banks, as Vishal highlighted. Consumption names selectively again, because there are enough catalysts around pay commission coming up next year and the tax break we saw this year. And finally, very selective names around the industrial basket.
All right, gentlemen, thank you very much for joining us here on this special program. And we'll touch base post-April. I think that is when we will really know what comes our way and in terms of whether tariffs are big, they'll sustain for a long time in the roadmap ahead. But it's interesting. Nevertheless, the message is clear, not thematic, not narratives, not sectors, but individual stocks within these spaces and sectors which will do well and perform in 25. So you've got to be very selective. Let's slip into a quick commercial break here. We will get you our corporate interactions on the other side. So stay tuned, coming right up.
Welcome back. The beauty of being in a market where bulls are in control. Any dip that has been given has been lapped up and has moved to the high point of trade for the frontline index. But the more interesting move has come by on the IT pack. This morning, the IT index closed, or rather opened lower after having closed higher yesterday. This on account of the news that came in from Accenture. But from those lows, we've seen a big recovery in the IT stocks itself. And by virtue of the weight that they have on the index, look at names like Infosys, TCS, all of them have recovered anywhere between 3 to 4% from the lows and have contributed on the way up to the Nifty itself. Now Nifty, knocking at the doors of 23,300 itself. What this has done, however, is buoyed the sentiments in the broader markets as well. The mid-cap index, which opened about 0.3, 0.4% higher, now has extended its rally to about 1.7%. 600-point uptick is what we've seen, with the advanced decline lines now firmly in favor of advances by a wide margin. As you can see, the gaping distance between the green and the red lines, 2,100 stocks in the green for just about under 400 stocks in the red right now. So looking good for the market. Let's get in our corporate conversation. The first one on the show. We have PS Raja, who's the PS Raja Gopal Sastry, who's the Group CFO at Endurance Technologies, joining in. That stock doing up about 1.5% higher today. Good morning. The first thing that I want to ask about is the demand situation itself, because one of your bigger clients, Bajaj Auto, over the last couple of months, we've seen some pressure in two-wheeler sales. Has that had an impact on your order book? How does that, augur for you right now? What kind of order inflows are you targeting in the remainder of this year and all of next year, if you could give us a sense?
Good morning. Yes, even if you look at a month as late as February, we did see that the overall two-wheeler market was down by 4%. However, boosted by the exports of customers like Bajaj, who did very well in the export market. While the volumes are challenged, but we do not think that this is a long-term situation. I think it takes very little for the sentiment as far as the two-wheeler market is concerned to bounce back. And even small things as the new tax regime kicks in as per the latest announcements next year. And even when we see all our own expansion plans from a micro side, with all of them kicking in and the order books fast filling up, our new offerings, our high-tech offerings going into the market, I see that our outlook is very positive. And we also think that the market will not stay in the negative area as far as the demand is concerned for long. It won't be as big as the earlier 14%, 15%, but definitely it will be in a positive growth range as we go forward.
What about Europe, international, markets? They account for a fair amount of your sales as well. If you could give us the quantum and what's the outlook out there as well? Because, we've seen some struggles in the overseas market for the world right now.
Okay. There have been a lot of external factors which have been impacting the vehicle production in European and in the European market. And logically speaking, it was a geopolitical situation. It's some part of the demand which actually goes into US, which are impacted by the tariffs, and even the recent regulation by the US on the cyber security. But if you see, even as late as the last quarter, which we announced the results, we grew almost 21% year on year in terms of revenue and 27% in terms of EBITDA. And this is coming from years of preparation where we have been investing very carefully on our capabilities, on people, on capacities also, which gives us a lot of flexibility and fungibility to cater to any kind of demand which comes our way. And we have been able to look at any car production, whether it is the internal combustion engines or the electric vehicles. We have been able to cater to that demand and thereby actually grow to this level. And going forward also with a good order book, almost 300 million of orders secured in the last 3 years, about 36 million of orders only this year, and the all-important acquisition which we did of a company called Stefferle, which was very well managed, highly profitable, and that's another 80 million of orders. I see that our outlook for in European business is very strong, which, like you said, is about 25% of our total business. And this will be despite the situation in the market. And if the market unwinds, and we are seeing some good volume growth, and we will stand in the best possible way to gain from it.
One of your other important customers, KTM as well, had said that they are looking for some sort of restructuring and there should be some clarity in the month of March. We're towards the end of March right now. I mean, the last week is next week. Has there been any update here?
The bad news is behind it. So they had asked for a restriction to the court. And as we saw the order from the court, there is a good support from the government to KTM for them to restart their operations. We are already receiving some schedules from them, and we do expect that they will bounce back and it will go back to business as usual in the next 2 quarters or so.
What about the brakes business? You were looking to start this quarter. So what's the incremental potential revenue that you foresee from here, and has it started?
The brakes for two-wheelers we have been doing for quite some time. Both the foundation brakes and also the anti-lock braking systems, single channel, and we had developed the dual channel anti-lock braking system also. Interestingly, so we have received major orders for the dual channel braking system also in this quarter, which we will be serving going forward. From a two-wheeler business perspective, we have quite a lot of capacities which we had built, and all of them are getting filled up rapidly. And going forward also, we are getting over and above our major customer of Bajaj. We have been getting very good orders from the other customers like HMCL, HMSI, TVS, Yamaha. All of them have been giving orders to us in that integrated line. So we see good growth potential there. And with the help of our technical partnerships, we already have in place, our ability to turn around new products, new offerings, and applicate them to the OEM's requirements with our own test track is also very good.
What does your order book currently stand at? If you could give us the absolute number.
If you look at year 2000, this financial year, we had about 780 crores of new orders, and 50% of those were for electric vehicles, around 40% were for four-wheelers. And I did mention about our expansion, which is in the Bidkin region of near Chhatrapati, Sambhajinagar, and also the Shendra region. Both the plants are quickly filling up their capacities. And the Shendra especially is for the four-wheeler market with some high specialty processors within the plant, which are required for the contemporary car models, and they would be exporting to some very important customers overseas. And added to that is that we are also very focused on our production capacities being eco-friendly, and this is a completely green building with zero fill to landfill and all the contemporary needs of an eco-friendly building. Now, as I spoke about the order receipts this year, we also have a pipeline of about 3,300 crores of orders received in the last 3-4 years, and majority of them will have their start of production in the upcoming years.
So that leaves us with the final question. What kind of revenue growth margins are you targeting in FY26?
Very strong, but I will not be able to give you a number exactly.
How do you define very strong? Let's put it that way. How do you define very strong? Margins in the third quarter were 12.5%. Do we see mid-teens, double-digit sort of revenue growth in FY26? What kind of profitability improvement that we see? Yeah.
I will have to give you a qualitative answer for that because we do not give quantitative forward-looking statements. Qualitatively, if you see even from the revenue which grew 9% for the domestic business, we had a 17% increase in EBITDA, which was a good, strong margin expansion. So is the case with Europe. Even on a consolidated basis, for a 13% growth in revenue, I think we grew close to 19% in EBITDA. So we are looking at all our investments, both Europe, the Stefferle, and our investments in India, and also the new business acquisitions should give us good revenue growth. And as we see, we are very heavily focused on our operating efficiencies. We do see that we should see good margin expansions also going forward. And that's the way we are drafting our plans, and that's the way we are designing our businesses, while keeping an eye out for any kind of new business opportunities, both organically or inorganically. And as and when we have good maturity of any of those plans, we'll make public announcements of this.
That's fairly articulate. Thank you so much for giving us your vision for the next year as well. Wish you good luck for the next financial year. And we will have a conversation as and when you are able to, give us some more details when it comes to numbers and growth opportunities in organic or organic itself. That's Endurance Tech, stock up about 1.6%. The other stock on our radar right now is Bikaji Foods. Manoj Verma, who's the Chief Operating Officer at the company, joins in now. We're tracking the consumption space. We looked at it through the sale of two-wheelers and the suppliers to that. And now we're looking at it through, the sale of ethnic snacks too. The third quarter was marred by extremely high inflation in some of their key raw materials, including the likes of palm oil as well. Has that impacted performance in the fourth quarter? What's the outlook? Thanks a lot, Manoj, for joining in. That's really the first question. The fourth quarter, how has it been so far? Have you seen any moderation in input prices? I remember you said that you've taken price hikes of around 2.5% to 3% in the previous quarter, with a prognosis of about 1 to 1.5% in this quarter as well. All said and done, what does that mean for your margins in the fourth quarter?
So absolutely right. As we said that in quarter three, in end of quarter three is what we took the price increase, and the benefit of that would reflect in quarter four. So certainly you will see drastic movement, upward movement in quarter three to quarter four in terms of the bottom line number. And that is on the basis of the price increase what we took.
So you typically target about 11.5 to 12% ex-PLI margins. Will you do that in the fourth quarter? Because the third quarter was just about 8%.
So yeah, so this was including PLI. So including PLI, yes, it will be ahead of that. But what we're seeing is that by end of quarter one is what we would normalize. So we'll come back to last year's quarter two level. So these two quarters, quarter four and quarter one, will get us to that level. So part of the increase, price increase, we have already taken in quarter three. And now a little bit we'll take in Q1 as well. So that's what is the plan.
What about volumes? The last quarter volumes were impacted by obviously a higher base. You had done, done away with some of the promotions, etc. The package sizes reduced, so the net volumes grew by about 3%. And you had a target of 13 to 15% volume growth for the entire year. Where do you stand on that number? And what kind of volume growth are you expecting in the fourth quarter?
What we said was about 12-13% of volume increase and the balance to the price increase. This is what was the plan. Now, this quarter, you will see, yes, the volume growth would be moving up. I mean, vis-a-vis if we look at the last quarter. So, yes, there will be improvement in this.
By how much?
So, 3 to 4% ahead of what we did last quarter.
Okay, so about 5 to 6% is what we can expect in the fourth quarter. What does that set you up in terms of targets for the next year, FY26? What kind of volume growth, price growth and margin expansion are you expecting, if at all you are?
Yeah, so certainly yes. So for next year, what we are looking at double-digit volume growth. So somewhere around 11-12% kind of a volume growth. And we expect a 3% kind of a value increase. So that's what should take us around plus minus 15% in terms of value for next year.
And what about margins?
Margins, we will, so by end of Q1 next year, we will come to the normalized margin. So it's of PLI around 13.5% margin. And year on year, the plans are to increase, say, 50 basis point year on year for next couple of more years.
When we speak to you, we speak through you about the industry as well. There's buzz of that deal taking place in the world of Haldiram's, right? I just wanted your thoughts on what do you make of the valuations, the reported numbers, valuing that company at around $10 billion. What kind of juice is there in a business like that? How much bigger are they compared to you all? And, what is the valuation differential? Because if that deal were to happen, that would change the scope of things for the entire ethnic snack space in the country. What have you heard on it? And what do you make of the numbers that are reported so far?
So we would also know as much as you guys have read and heard about it. Certainly, Haldiram, if you speak about, is multiple times bigger than what we are. But one thing I can say for sure that this stationery category and industry is certainly gaining eyes, and because the kind of growth what this category has witnessed, and because there's still a huge unorganized sector which leaves us with a room of growth in say next 3 to 4 years more. So that perhaps is the reason that the investors are getting attracted on this stuff.
How much bigger, according to you, would Haldiram be versus you? Your, trailing 12-month sales are close to around 2,500 crores. Would they be 3-4 times your size?
Putting both Haldiram as a brand together, certainly they should be around 4 times of what we are.
4 times of what you are. And 4 times of what you are basis what is reported so far, they would be, looking at closer to 8 times sales. Would you think at that level there would be, upside to this space itself?
Hopefully, yes. Let's see how. See, there are two different things. One is that how the valuations are, and second, how the business. So I think within company, what we concentrate more is on driving, the top line, bottom line, the rest of the things and stuff. And valuation is purely external matter, which perhaps is.
How are they any different from all the others in the space apart from the size? I mean, do they have better efficiencies when it comes to margins? Do they have better growth rates? If you could give us a sense of the difference between them and the others so as to one can make a comparison on your valuations versus theirs as well, along with all the others that are listed.
So 2 things certainly I can speak on. One, of course, with the size of the company. So the economy of scale comes in. So in terms of margin, definitely, in terms of procurement, other efficiencies would sit in more in a larger organization. That's one. Second is the larger portfolio vis-a-vis most of the other competitors. So these 2 strong certainly things are. Besides, I assume that quality, though each other company would be concentrating or focusing on.
All right. Just a final question. With the money that they get, if at all they do you think, competition will increase for you and would make growth difficult for you, or will it continue to remain the way it is?
I don't see that way because this is not for the investment. I mean, this is purely the secondary stuff kind of a thing. So I don't think that would impact anything on the way the business is going in.
Wonderful, Manoj. Thank you so much. Always a pleasure speaking with you. Good luck for all of next year. 15% revenue growth, including 11 to 12% sort of volume growth, along with normalized margins by the second quarter is what you are guiding. 3 to 4% higher than previous quarter volumes for the fourth quarter, along with slum improvement versus what we saw in the third quarter when it comes to margins as well. That's Bikaji Foods stock marginally in the green, though it's still about 30% off its earlier highs. Good time to get in Mitesh Thakkar now for a quick technical check. Mitesh, a dip was given. Bulls lapped that up. The Nifty is up 60 points. What do you make of the markets right now? And any buy ideas?
So, Mangal, you already put it. I think buy ideas. Yes, the direction remains on the upside. And I think you'll get this kind of dips because we have had about 4 days of rally. The Nifty, if you look at it, starting from Monday's low, it's nearly done about 700 plus points. Similarly, the Bank Nifty, from the lows which it made on the 11th of March, it's done roughly about 2,400 points. So I think a pullback can always happen, but the directional bias remains on the upside. So use the stick lines to buy into it. On the stock side, NMDC is something, which is coming to my radar. That's a buy with a stop just below levels of 66 for targets of around 71 to begin with. And I'm even looking at 74. So that gives you a good risk-reward equation over here. The other stock is ONGC, which I would recommend buying the stop at 234.5 for targets of roughly around 248.
All right. Thank you so much for joining in, Mitesh. With that, we'll sip to a short break. On the other side, Manisha Gupta joins in with all the focus on everything that's moving in the commodities arena. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening?
Okay, welcome back. You've got the market, which is up 60 points. 23,250 is where we are at, and sort of nicely cruising along. And it's good to see that once again, despite a down day on Wall Street, despite this being a Friday, despite the fact that headline risk into the weekend is high, but is higher under the Trump administration, things are, looking pretty good. 5:1 in terms of advance to decline ratio. And, that means that there is a fair bit happening with volumes as well, which we'll refer to in a bit. But commodities, what's the action like? Manisha is here. Manisha, morning.
Morning, Prashant, and thank you for that. And, it almost seems like copper is telling gold, move aside, and it's me making all-time highs right now. That's exactly what we've done. So as the gold prices take a pause after that one-way rally, what is really running into the markets is the copper prices. If you look at the U.S. futures, they are trading at an all-time high of above $11,000 a ton. So while the U.S. has made all-time highs, LME still is waiting its turn. When you look at both of these markets, you could see the difference here. So the US prices have gained up by 28% in this year, while the LME is up 15%. So when you look at both of these prices and the price disparity, it's easy to notice that the US is trading at a premium of 13% over LME at this point in time. There are various reasons for this. Well, one is the US dollar index is trading at a 5-month low. That has been a supportive factor. And apart from that, the US Fed has signaled 0.5% of a rate cut by the end of this year. That in turn also has been supportive for many of these tangible commodities. And then it has been about tariff fears. I mean, that is something that's bothering all asset classes. And when you look at copper therein, well, Goldman Sachs and Citi have put out a report suggesting that they do anticipate that by the end of this year, 25% of import duties on copper could be put out from the US markets there. Well, traders have redirected shipments from UK and Asian markets into US ahead of these potential tariffs. Also, when you look at overall market as a space, US does import 45% of its copper requirements. So that's the exact price reaction that you are seeing to those numbers there. Apart from that, it also is about the US copper itself seeing import of near record highs in the month of March itself. It is believed that 100 to 150,000 tons of copper could be coming into the US markets, and that's an all-time high number in the month itself. And then there's a lot of speculative trade also happening. The traders are covering their shorts. You have money managers deploying money into copper, and short positions also being covered. That has been supportive. Apart from that, there are shortage concerns as well. We do know that mining capacities have continued to decline, and even as there is conversation about increasing ore copper, that would take a few years. So this year and the next, the markets do believe you are going to be looking at higher copper prices continuing there. And then it also is about China, where they have been putting out statements suggesting that they will be buying a lot of tangible commodities. And 3 metals that they have put out a list suggesting is nickel, copper and cobalt. We've seen nickel prices continue to gain up. Copper prices trading at an all-time high. And when you look at the cobalt prices, well, that has surged by 49% in this year. So metals clearly trading in the green right now.
All right. Thank you very much with that update as far as commodities is concerned, of course. Keeping an eye on some of the base metals, copper, as you pointed out. Time for a quick commercial break here. Our special segment, Indianomics. My colleague Lata discusses. She's got 3 economists to talk about whether the rupee is out of the woods. The equity market seems like, fingers crossed, it is. What about the rupee? So Samiran Chakrabarti, Upasana Chachra, and Shantanu Sengupta talk to Lata about it.
Maestros before crafting your investment strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at
Hello and welcome to Indianomics. I'm Lata Venkatesh. The Indian rupee has just done a U-turn. After falling by nearly 4% from November 24 to February, the Indian currency is up 1% in the past week and up 2% from its February 10th lows of 87.95 per dollar. One big reason for the rupee's recovery appears to be the February trade data, which showed a monthly trade surplus if you took goods and services together. Now, foreign portfolio outflows, especially on the equity front, have begun to thin down, but they still remain outflows. Has the rupee bottomed? Will India's current account deficit remain contained next year as well when tariffs loom? Will the net capital outflows turn into capital inflows in this calendar year? Now, that will also depend on India's growth trajectory. For a 360-degree perspective of growth, rupee and rates, I have with me an elite panel of economists, Samiran Chakrabarti of Citibank, Santanu Sengupta of Goldman Sachs, and Upasana Chachra of Morgan Stanley. Gentlemen and Upasana, thank you very much for your time. Samiran, let me start with you. You are quite convinced that this quarter, Jan, Feb, March, we will post a current account surplus?
Yes, Lata, that has been the trend for a while now in the last few years, when we are seeing this seasonal improvement in the current account for this fourth quarter of the fiscal year. So we think that that same trend will continue this year as well, and we should report a current account surplus for this quarter.
Okay. Santanu, what is your sense about this quarter? And more importantly, whether the deficit will remain contained in the coming quarter as well? Your thoughts?
Yeah, I would think that, as Samiran said, that, in the last couple of years, you've had this trend of this particular quarter driving into a current account surplus. So likely you will have this in this quarter, but going forward, you'll have some expansion of the deficit. We still think that the external balances from the current account side is going to be relatively comfortable. You're still going to have a strong amount of services exports coming through. Your remittance inflows are good. So we would think that the current account deficit will be contained within 1% of GDP, probably a shade lower than 1% of GDP.
Okay. Upasana, the more difficult question has been capital flows. Y'all came out with a strong report on Indian equities and Indian growth. Is there any internal estimate on whether the capital outflows will thin out and we may turn to inflows? If yes, when?
That's really a tough question to answer in terms of how capital flows can change. But I think at the margin, what we are sensing is that, and as you also pointed out from the data, that probably some amount of the bearishness from an equity investment perspective is finding a floor. There's more recognition that data is not deteriorating and at the margin improving for India macros, and policy is also moving in direction to support growth. So again, as you highlighted, the growth delta matters for India from a capital flows perspective, and I think there is reason to believe that the second half probably could be somewhere where we would see that growth delta looking better for India versus maybe other economies as well, and that could turn the capital flows picture as well for India.
Okay, no, I agree that the toughest question was for you. I mean, it's a difficult one to guess. But Samiran, would you, I think in your recent report you have upped your forecast of Rupee. Can you take us through your argument? You believe the Rupee is now in a stronger patch than what you perceived a couple of months back?
So a few things have happened, Lata. One is that overall the DXY itself has come down quite substantially from around 108, 109 levels to more like 103, 104 levels now. The second is that because we had allowed a bit of currency depreciation, nominal depreciation, and the fact that our inflation has corrected very sharply has led to the overall 40-country INR RER now back to around the 102 mark, which is slightly lower than even the longer-term average has been on RER. So from a valuation perspective, Rupee has moved into a much more fair valuation level than what it was even a few months back. And on top of it, this improvement in current account, the seasonal improvement in current account, and we are also hopeful that at some point of time, the capital flow picture will also improve, not just because of the portfolio flows turning, but also because the FDI repatriation outflow that we have seen being massive over the last couple of years, at some point of time, that will stop. So we are hopeful that for FY26, the net FDI number will look better than what it has been in the last couple of years. We're not yet expecting it to go back to historical trends, but at least some improvement on that front, along with a pickup in the portfolio equity flow, should make the current account look somewhat better, which could also be supportive of Rupee. And last but not the least, Citi has a view that oil prices will come off quite materially in 2025, maybe even going towards $60 per barrel by end of the year. That will also be quite supportive for the currency.
Okay, so what's your currency range now, Samiran, as of March end, of course, which is just a few days away, and for year end?
So, I mean, the way to think about it is not just from a rupee dollar level, but from a more relative perspective. So the argument that I was giving was more of a relative argument. But we think that as the tariff picture becomes clearer after the reciprocal tariffs are introduced next month, we could see some retracement in dollar also going towards DXY, going towards 106 and all. So with that, maybe rupee also can move towards 87, 88 range. But compared to the relative nominal depreciation that we had seen in the last few months, I think that's behind us. The key challenge for RBI would remain that this very large forward book that it has got, how it brings it down to a more normal level. So as and when the BOP situation improves, that will be, in my view, the primary objective of the RBI. The spot reserves are okay for now. That's enough for them to be able to control the currency in a narrow range.
Okay. Well, according to what dealers tell us, even at the moment, RBI is allowing the swap, the sell swaps, and they're selling, but they're buying more than they're selling. So it's a net buy figure, which we have even for last week. And of course, there is this buy-sell swaps, which they have pushed 3 years down the line. Maybe we will get more of that. Santanu, what is your sense in terms of where the dollar rupee can go by the end of the year? I know it's a little unfair given the tariff, overhang, but nevertheless, how much of a depreciation this year?
Yeah, and end of the year, Lata, is a long time out.
Yes.
With so much of uncertainty around, but we would think that in the near term of around the 3-month horizon, you hover around this 86.5 to 87.5 kind of a mark, and get towards an 88 over a 3 to 6 month kind of horizon. In the long term, we have right now baked in a depreciation of around 2.5% odd, which takes you towards that 88, 89 kind of mark. A lot of uncertainties, obviously, regarding flows, not so much the current account side, but more on the capital account. I would just emphasize the point that the short forward book position that the RBI has is quite sizable, and therefore, whatever inflows you're getting through the course of the year, and the role that you use in the forward book will be important in terms of the currency management. And again, from a spot resource perspective, while you're looking comfortable, right now the respite that you're seeing in the rupee is also largely because the dollar has turned, and therefore your short positions the positioning that we're building up offshore has also probably lightened up. And it is therefore going to be the dollar trajectory which is going to matter for the dollar rupee pair in particular. But over the medium term, again, going back to the fundamentals, the current account looks very comfortable. If some of the flows are back, the RBI should be able to manage it, and you're not going to have the requirement for a large depreciation that you had in the previous 3 months, because your vol is right now much higher than what you had in the second half of last year. So the vol adjustment will also be lower through the course of this year.
No, I take your point that the Reserve Bank's NDF sell position, the forward sell position is overhang, as both you and Samiran point out. But there are these other positives, and perhaps the Reserve Bank will have some elbow room to kick that forward, as they have done with $20 billion of swaps. Upasana, your rupee view?
So in the near term, I would say it remains more range bound, of course, begging more clarity from the trade policy that we see on 2nd April. Beyond that, I think, as both Samiran and Shantanu have pointed out, it will depend on the DXY positioning as well. We do have a slight depreciation bias if I have to take the 9 to 12 month view, also in line with what we think probably the CNY could see in terms of some depreciation further in calendar year 25. And that could play a role as well. But the dynamics of the BOP probably are going to be more supportive, as are the inflation differentials. And again, from the worst in terms of the rupee is probably behind us, is how I view it as well.
Okay. So would you all go beyond the 88? The maximum I heard here is Shantanu saying at the most 89. At the height of the rupee depreciation, people were talking about 90 very freely. Now, even at the end of the year, you guys are only looking at 89. Upasana, what is the in-house view in Morgan Stanley, even if that's not your terrain? What are people talking about, 88 or 89 in the current year?
So for us, the peak for USD INR does go to 89. Yes, we don't go past that, and that's more like 6 months out.
Okay, so on the rupee, the worst of the depreciation seems to be over, according to y'all. But much of the rupee fall was also because India's growth was perceived to be slower. After this break, we will ask you the growth questions and when capital flows will become positive. Bazaar viewers, you will be able to see the entire show after market hours today. For the moment, after the break, it will be chartbusters for you.
IT bellwether Accenture's commentary remains weak, indicates uncertainty over US federal contracts. However, IT tech stocks on Dalal Street open with cuts, recover largely as the exposure of Indian IT companies to such contracts remains limited. The IT index now at the high point.
Bajaj Finance has surged over 2.5% after the company elevates Rajiv Jain to the post of vice chairman for a 3-year period. Remember, in an interaction with CNBC-TV18 earlier in the week, Bajaj Finance chairman and managing director Sanjeev Bajaj had said that Rajiv Jain remains very committed to the business. Brokerages also remain bullish on the stock.
So CNBC-TV18 Newsbreak, which has been confirmed, defense stocks, Power Dynamics, BEML and Hindustan Aeronautics surge after the Defence Acquisition Council approves proposals worth 54,000 crore rupees.
United Spirits has surged over 1.5% after brokerage firm Citi upgraded the stock to a buy with a target price of 1650 rupees, suggesting that the company's earnings growth is likely to remain resilient due to several factors.
Tech Wabag also surges more than 7% after the company signs a non-binding term sheet with a Norfund-led consortium for a fundraise of $100 million. TBO Tech under pressure after a large trade where nearly 7% equity was exchanged via a block deal. Straight off the bat, it is a 100-point move on the Nifty, conquering 23,300. You're watching us here live on Chartbusters. We come to you from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam, with me, Hormaz Fatakia. Hormaz, typical of a market where bulls are in control, right? We've gained almost 1,000 points in the last 6 sessions, 1,200 points to be precise. This morning, there was a dip. Bulls lapped that up from the lows. We've seen a rally and 115 points on the Nifty immediately.
Make that 1,300 now since we've conquered 23,300, yes. And there's as you mentioned, right, it's been the trend over the last couple of sessions. You get that dip early in the morning, that dip gets very swiftly bought into, and as you can see, the index now has surged to the highs of the day. And similar is going for some of the stocks in the broader markets as well. With some names like Tejas Networks, they've surged almost 16% now in today's session. The top gainer on the Nifty 500, Jupiter Wagons 2 is up 12%. And JM Financial has moved to the high point of the day as well with that 10% move. But what are the charts indicating right now? Do we see some consolidation after such an up move, or do we see some more upside? Nagraj Shetty of HDFC Securities is joining in to answer that. Nagraj, good morning. Thank you for joining in now with almost 1,300 points right on the Nifty over the last few trading sessions from that March 4th low. What are the charts indicating here? Do we move to 23,500 next, and couple that up with your stock recommendations as well?
Hi, good morning. Nifty has been in a tremendous up move, no doubt about that. In the previous, it has significantly reversed the downtrend of the last few months. Chartically, market is looking very strong. Previously, the every resistance were held with the selling pressures. Now the strong resistance are being taken out easily one after the another. This is the characteristic of a strong upside momentum, the reversal in the chart pattern. I'm expecting this 23,300 was a hurdle as per the on the weekly chart with the downsloping trend, and I'm expecting the way market is moving up. We may see some consolidation at the higher levels, but certainly not any decline from the highs from near the resistance. So the next upside resistance to be watched from here onwards is around 23,800 levels, which is the previous swing highs of around of February, which would comes in. So that's for Nifty and the stocks. I have two stocks from the long side. One is from defense, as you mentioned, BML. Chartically, BML was in a sharp downtrend a few months back, and recently moved up very well from the lower levels. Some consolidation pattern is taken place, and it has bounced back from the lows. Currently trading around 2810 levels. One can look to buy at this point of time for the short-term upside target of around 2950, 2960, and one can place a stop loss for 2740 levels. Second one is GSPL. GSPL was moving in a rounding bottom type pattern at the higher levels, and currently showing breaking out of the consolidation. The overall chart pattern is looking positive, and it is moving above the initial hurdle of around 10 and 20-day EMA on the daily chart. Currently trading around 289, 290. One can look to buy at this point of time. The immediate target would be around 305, 306, and one can place a stop loss at 280.
All right, take that point. So 2 stocks that you have. Thank you so much for joining in. In fact, as we speak, a bunch of stocks actually spiking. Manappuram Finance, which was supposed to be the stock of the day on account of the news that came by, opened slightly muted, but now has picked pace, currently moved to the high point of trade. Remember, the offer price is close to 236. Stock still about 6 rupees away from that. Amara Raja Batteries is the other one which has surged, and then we have Adani Green, which too has moved higher. Don't lose sight of names like Bandhan Bank as well. That stock too has moved higher. So all the financials actually doing well, along with a bunch of other stocks too. Get you ideas for profit from our colleagues at Money Control Pro. Today we have Sachin, who's joining in with a stock that he's been tracking closely. Sachin.
The stock in focus is Carcel, which is the sole manufacturer of quad sinks in Asia. Well, over the past 3 years, the company has in fact diversified its revenue as well as geographic footprint through 2 acquisitions, one in the UK and one in the US, and now operates across 4 different business verticals. Well, in terms of financial performance of the company, the Q1 and Q2 performance of the business was quite healthy, both in terms of top line as well as margins. However, Q3 delivered a mild negative surprise, especially on the margins front, wherein the margins slipped almost 450 basis points on account of multiple factors, including higher material costs as well as cross-currency fluctuations. Nonetheless, the management remains very confident of being able to reattain the margins of almost 70 to 18% in the near term. Well, going into FY26, the company has recently signed an agreement with a US-based retail chain for the supply of 150,000 quad sinks, which is estimated to have a revenue potential in the range of 90 to 100 crores. Therefore, the company is expected to deliver strong revenue growth in FY26. Besides, the margins also stand to benefit from scale efficiencies. On the balance sheet front, the company had in fact raised almost 125 crores last year by the way of QIP, and therefore the balance sheet of the company remains very strong from that standpoint. Well, the outlook of the business continues to remain very healthy, and the stock has in fact been very volatile, primarily due to the market conditions, and now trades around 23 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
All right, Sachin, thanks a lot for that. Meanwhile, as we slip into a short break, some important news coming at the bottom of your screen from Ola Electric, which says that the temporary backlog is being filled. They've given reasons. So, despite all the regulatory run-ins that have taken place with regards to Ola, the company believes that it's steadfast in its commitment of growth when it comes to sales. We've seen some recovery in the stock. We don't know how much of that is on account of, the drubbing that we had seen on Ola Electric already, the mood of the market, and how much of that is actually on the basis of what the company has said itself. 40% of the factory backlog has been already cleared, is what the company has been claiming. Meanwhile, look at Raymond as well. That stock is up another 8.5% today, this morning itself. Realty stocks have been doing well, and this Raymond, of course, is the one which has the realty business and the engineering business. We had the management earlier this week join in and spoke about 20-25% growth in that vertical for them. And this week itself, that stock is gained almost 25%. So that's a big move from the lows that we've seen on Raymond as well. So keep an eye out on a bunch of individual stocks that are doing well as the broader markets continue to outperform. Take a short break. On the other side, Kapil Makhija, who's the CEO of Unicommerce Solutions, joins in to discuss the company's acquisition of Shipway Technology and a lot more. Stay with us. back. You're watching us here on Chartbusters. On the back of a bunch of brokerage notes, some stocks are doing well. So we have Citi, which is written on United Spirits this morning. United Spirits, of course, is higher by about 1.5%. Has seen a recovery of almost 25-26% from its 52-week low itself. Citi is still bullish on the stock. They have a target price of close to around 1,650 rupees. The reason why they believe that the stock is an upgrade to buy is because the premium, prestige and above part of the business is likely to continue to do well for them going forward, as is the kind of movement in their earnings growth, which they believe will remain resilient as they move towards the next year. Maybe benign raw material prices and at the same time higher contribution coming in from prestige should improve their margins going forward as well, and favorable policies as well. If you look at UP, what happened in Andhra, and some sort of policy tailwinds coming in from Telangana as well. That's particularly for the beer industry, not so much for the spirits industry, but in general, there is policy tailwind which has come in for the spirits space itself, along with the premiumization opportunity. Add to that, United Spirits also has the leadership change which will come by from the next year, where you will have Praveen Someshwar take place or succeed Hina Nagarajan, who's moving on in another part of the group itself, the overall group. And the UK FTA trade talks which are taking place with India should also benefit their gross margins, if at all it happens. All said and done, this also is seasonally a strong quarter for United Spirits because they get in the numbers coming in from Royal Challengers Bengaluru, the IPL business which comes by. Too small in their overall scheme of things, but nevertheless a tailwind. With that, what we'll do is take a cheers break. And as we do that, we talk about some important news for our viewers. That's good news, which is what you see on the right of your screen, the CNBC-TV18 new app, all new app, which gives you instant access to banking, breaking news and in-depth articles along with financial world updates, all of them at your fingertips. You can download the CNBC-TV18 now from the Apple Store, the Google Play Store, or just scan that QR code which is up for you on the screen.
Welcome back. And just before we get to the management of Unicommerce, flashes also with regards to BHEL, the company has won an order worth 7,500 crore rupees from the Gujarat State Electricity Corporation. That stock has surged to the highs of the day, 3.5% higher. And L&T too has won an order, as you could have just seen just a few minutes ago flashing on your screen there. You can see bagged orders in the range of 2,500 to 5,000 crore rupees from the Brigade Group. That stock too trading with gains of 1.5% at the day's high. But shifting focus now to Unicommerce e-Solutions, the company is set to acquire the remaining 57.25% stake in Shipway. With this acquisition, Shipway will become a wholly owned subsidiary of Unicommerce e-Solutions. Kapil Makhija, who is the CEO, is now joining in to discuss this acquisition in detail and to also discuss the road ahead for the company. Kapil, good morning. Thank you for joining in. What was the rationale behind taking this decision to acquire the remaining 57% stake? And also, why did you not pay cash for this transaction? If you could also tell us the resultant dilution that will take place as a result of this share swap.
So first of all, glad to be here. Thanks for inviting me. I think the reason our vision is to become a one-stop shop for e-commerce enablement, and our acquisition of Shipway is in line with that vision. We want to offer an end-to-end solution for e-commerce brands and sellers. If you look at the entire e-commerce value chain, there are 3 key layers, and with the Shipway acquisition, we now have solutions across all the 3 key layers: customer engagement layer, transaction processing layer, and order fulfillment layer. So now we are able to offer an end-to-end solution. If you recall, we've done the first tranche in December, where we had paid a cash already to acquire a 42.7% stake, and now we have acquired the remaining stake. We had mentioned that at the time of first tranche itself that we are very committed to acquire the remaining stake and make this a wholly owned subsidiary. We already had board control in the first tranche itself, and we have already started to operate like a one entity, because ultimately we want to offer a single one-stop solution to all the e-commerce brands and sellers.
Yes, we understand that, but what we wanted to know is why did you not pay cash and dilute equity? What would the net dilution be once this is acquired?
So Unicommerce is issuing equity share of the tune of 60.3 lakhs. The swap ratio is 1:8.9. That depends on the valuation of both the companies. And with this, Shipway is now becoming a wholly owned subsidiary. And ultimately, it helps open a large TAM for us. Courier aggregation alone is a 4,000 crore TAM. And with 35 million shipments that Shipway is already doing, it's a clear number 2 in the market already. And the two largest players, I think the market is ripe. As it's fast growing, the market is ripe to continue to drive growth in the overall system. And it becomes a big growth engine for Unicommerce as well with the Shipway acquisition.
What about the profitability path for Shipway, Kapil? Because as of December of 24, its PAT margins were a negative 3%. And as of FY24, the PAT margins were a negative 5%. Do you have a timeline as to when Shipway turns profitable, and what steps are you taking to ensure that it happens?
Sure. So Shipway is already on a path to profitability because, as you rightly mentioned, the PAT margin has improved from negative 5% to negative 3%. And we see a lot of synergies. One is a sales synergy. Today, the overlap between Uniware and Shipway customer base is less than 5%. So there is a significant cross-sell opportunity. So it will help drive sales acceleration. Second, we see synergies both on the direct and the indirect cost side. We have got relationships with the courier partner, not just at Uniware, but also at a group level. So that helps us drive synergies on the direct costs. And plus, with combined forces, we see synergies on the indirect costs as well. So we hopefully will be able to turn the business profitable soon and with the synergies that I just outlined for you.
All right. And, even if it does turn profitable, it perhaps may remain still a drag on your profitability, right? Because your own margins are close to around, 14 to 15%. Even if it does break even, it'll be 0% at best 1 to 2%. That will continue to be a bit of a drag. So if you could give us a sense on what kind of further synergies do you foresee out here? Yes, you did speak about your TAM expanding by about 4,000 crores. But of that, the incremental revenue that you would generate could be how much?
Yeah, so see how we are viewing Unicommerce as an overall entity is our flagship platform Uniware is extremely sticky. We've got a large enterprise customer base. So it continues to drive and has significant operating leverage. So it continues to drive profit growth for us. While the new products, the Shipway Courier Aggregation, ConvertWay, that both of these have come as part of the Shipway acquisition, will continue to be a growth driver for us because it helps. They are operating in fairly large TAMs with relatively new entrants. While they are a clear number 2 in the courier aggregation space, there is a significant headroom for growth. So these become growth engine for us. So as a combined entity, we'll continue to deliver consistent growth in revenues and profits. And we've always historically grown faster than the market, and we'll continue to do that. And this acquisition helps us offer a unified suite, which has been the demand from all our customers. And that's why this makes sense to be able to offer a one-stop shop e-commerce enablement suite to all our customers, as well as the new e-commerce brands and sellers that come onto the e-commerce brand wagon.
Right. The reason why I asked this is because earlier you said you will be issuing about 60.33 lakh shares. At the current number of shares that you have, and if you look at the number of more shares that you would issue, it would be a dilution of anywhere between 5.8 to 6% on a pre or post money basis, depending on the way you calculate. So for a 6% equity dilution, could there be a concomitant EPS move on the way up for it to be neutral and value accretive for shareholders?
Definitely. I think that's our intent as well, because
by when?
It is our, sorry, before I answer how it's going to be value accretive, before I answer that, let me talk about how it's going to be value accretive. So the idea is that, like I said, it's in a large 4,000 crore market, right? And it's today at a run rate of about roughly 70 crore ARR. So that there's a significant headroom for growth. So I think there will be a significant revenue growth potential for the business. And to top it all, we have, because more and more brands and sellers in the e-commerce ecosystem in India prefer a one-stop solution. So we see a lot of sales synergies that are coming in, particularly given that the overlap is less than 5%. So there is a significant growth that we can drive in the business through the new products that we have gotten on board, plus the existing relationships that we have with nearly 7,000 customers across 10,000 plus brands. I think there will be a significant growth in revenues. And as a result of that, we will continue to see a consistent growth in profits as well.
Okay. One was, by when do you expect it to be value accretive from a shareholder standpoint, EPS standpoint? That was one. And the second part is, of all the solutions that you are offering, how much of that are agnostic to whether it's e-commerce or quick commerce? Because the belief is that quick commerce will drive overall e-commerce growth as well. So is there any synergy there?
Yeah, so our solutions are aligned with quick commerce. Quick commerce is another form of online selling. So
yes,
we are already integrated with all the leading quick commerce platforms, including the likes of Blinkit and others. And because we are a one-stop shop for e-commerce enablement, right? So a brand, whether it's selling on e-commerce marketplaces or quick commerce marketplaces, they need a single window solution to be able to manage their e-commerce offering. So irrespective of whether a particular horizontal or a vertical marketplace grows or a quick commerce channel grows, we stand to gain because we are a one-stop shop for e-commerce enablement. So as e-commerce continues to grow and become a way of life, we will continue to reap benefits of that. Plus, we continue to add new products as we have done through this acquisition, plus the other new products that we've been working on. So we will continue to serve this vision of being a one-stop shop and serve this entire ecosystem of e-commerce brands and sellers in helping to simplify their e-commerce selling.
All right, Kapil, thank you so much for sparing time and joining us today this morning. Wish you good luck for the rest of the year as well. The management there of Unicommerce eSolutions on their latest acquisition. The stock currently trading with gains of around 2.75%. By the way, we spoke of some gainers during the start of the trading session. Some of the losers as well. TBO Tech, after the block deal that took place earlier in the morning, is down 4.5%. Remains the top loser on the Nifty 500. And some of these air-conditioned cooling linked names, Amber Enterprises is down 4.5%. Voltas is down 2.5%. So some bit of profit booking after the run-up that these stocks have seen over the last month or so. Amber is still up 15% over the last 1 month. So is Voltas, up around 13%. But with that, we call time on this edition of Chartbusters. We leave you with the Nifty at the highest point of the day at 23,350, another 150 points higher. We are set to end this week on a blockbuster note. From Manglam, me and the team that put this show together, thank you so much for watching. Trading Hour on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategy.
Good morning. Welcome to Trading Hour. It's a Friday morning and things are looking up. The onward march, the recovery march for our markets continue for the fifth day in a row. And what a week it's been for us. The Nifty is up more than 4%. The mid-caps have rallied more than 7%. We'll talk more about it. You're watching this, CNBC-TV18 live from the Motilal Oswal studio. I'm Rima. With me is Vivek, and that's the picture for the markets this week. As I said, the Nifty is up 4%. The mid-caps are up close to about 7%. Small caps are up 8.5%. But the sectors which have led the rally were the beaten-down sectors, the ones which got bruised the most. Capital good names, defense stocks. The two large sectors, banks have performed in line with the frontline indices. IT stocks have faltered a bit on account of growth concerns emanating out of US. But it's been, a splendid week for our markets.
Absolutely nothing to complain as far as this particular week.
And even today we're at the day's high.
And even right now. And remember, quite a lot of positive news is yet to come. The second half of the session, what we'll actually see is close to $1.4 billion of inflows. And this is on account of the FTSE rebal. Mid-cap, small-cap index both up over 7%. Mid-cap index, small-cap index up over 8% just this week. And all of the sessions of the week, we've actually seen the market rallying. So very positive data coming in, especially as far as the week that just gone by. In terms of individual stocks, the entire banking pack, all of them trading near the day's highest point. ICICI Bank up over 1.5%. It's been one of the significant outperformers in the week gone by. Even names like Kotak Bank, HDFC Bank, all of them doing very well in the session. One stock, that's in focus on the back of news flow, that's actually TBO Tech, a large block deal, actually higher than what the term sheet was indicating. So on the back of that, TBO Tech is the stock in focus. That particular stock down over 4% today. But Rima, overall a very strong week, and banks are continuing to outperform.
So, today the bank Nifty has crossed its, its 50-day moving average. Sorry, it's crossed its 100-day moving average today, which is 50,373. And now it's just about 500 points away from its 200-day moving average, which is 50,942. So yesterday, the 50,000 mark was conquered. Today, we're at 50,500, and all eyes will be on the 200-day moving average, 50,942. But let's invite Gautam Baid of Complete Circle Stellar Wealth now on the show. Gautam, morning. Thank you for joining in. Well, yesterday we had an FI buy. Surprisingly, the DII sold, but the foreign investors were buyers in the market. Are you skeptical about this rally, or do you think a bottom has been made? And when you chat with foreign investors, do they have conviction now in the markets in India?
Hi Rima, hi Vivek, and thank you for having me on your show. Yes, the Indian market seems to show all the signs of bottoming out, and we can clearly see the move in banks and NBFCs, and that kind of indicates that the FIs are returning back to India. I think the market is getting a sense that globally there is a shift happening away from the US markets towards other markets, including Japan, Europe, China, and now India as well. So since FIs are generally very overweight in banks and NBFCs, that is where the first sign of buying is emerging. As far as the broader markets in India is concerned, I think the worst is behind us. It's clear many quality stocks are showing signs of bottoming out, and that is where the investors' focus should be from here on. Stocks with earnings growth visibility, but with an added emphasis on balance sheet strength, good corporate governance, and operating cash flows, because those are the kind of stocks which typically recover the fastest after every sharp correction in the market.
Gautam, good morning and good to see you. Well, one stock that you intend to highlight is actually Goldiam International. That stock has corrected quite a bit from its recent peak. Do you continue to stay invested, and what is the rationale why you like this particular name?
Yes, Vivek, just a standard disclaimer, we do hold Goldiam International in Stellar Wealth Partners India Fund as well as Complete Circle Stellar Wealth PMS portfolio. Now, this particular business is a play on the structural shift away from natural diamonds towards lab-grown diamonds. Lab-grown diamonds share very similar properties as natural diamonds, and they are much more cost-effective. We have already seen strong adoption of lab-grown diamonds in the US market in the last decade. India is in the very early stages of adoption. And to capitalize on this upcoming demand in the Indian market, the management of Goldium has launched its B2C brand, Origin, under which it plans to open 150 to 200 stores in the next 5 years. The management has guided for doubling of revenues in the next 4 years, driven by traction in exports and growth in the Origin brand. At the current price, Goldium is trading at a 1-year forward P multiple of around 28 times, which we feel is pretty attractive. The key risk to the investment thesis in this particular business is any further sharp fall in the price of lab-grown diamonds, and also any potential big tariffs on imports of gems and jewelry in the US by Donald Trump. However, to mitigate that particular risk, the management of Goldium recently announced that they're evaluating the feasibility of setting up a manufacturing facility in the US market.
On the subject of lab-grown diamonds, have you had a look at IGI, the company which certifies natural and lab-grown diamonds and other precious stones? Decent listing, but the stock had a one-way correction, went down to levels of about 300. Though in the last couple of days, it started moving up. Today as well, a 5% upper circuit. So from the lows of sub 300, it's climbed back to 360, but still far away from its issue price and the highs that it saw after that.
Right, Rima. I think the market has basically got spooked by comments of the industry players, including Goldium, who in their most recent conference call actually mentioned that the need for certification of lower carat diamonds in lab-grown segment, which are below 3 carat or less, that's basically going away. So a lot of customers are not going in for certification of the lower size lab-grown diamonds. So if that is the case, and if you go by the commentary of the IGA management, they were actually betting big on the lab-grown diamonds as a segment for growth in the future. So if the need for certification itself goes away, then there is a terminal value risk in that particular business, and probably that is the reason for the recent sell-off. We do not own this stock in our PMS or India fund portfolios.
Okay, Gautam, another stock that you intend to highlight is Innova CapTab. Now, within the domestic space, this particular CDMO company, why do you like this? There are quite a few options, especially in this particular space. So why choose this one, and what's the rationale?
Well, Vivek, we are very bullish on this particular business, and we are in the process of building a position in one more listed contract manufacturer in the pharma industry. Like you mentioned, there are other listed peers as well of Innova CapTab. Now, Innova CapTab basically focuses on contract manufacturing for domestic formulation companies in India. The company does have a few other business segments like international formulations, APIs in regulated markets, but the primary revenue driver is contract manufacturing for domestic formulation businesses in India. Now, Innova CapTab is a very interesting financial leverage play, and that financial leverage will play out in two ways. Firstly, the majority of the high-cost legacy debt has been fully paid off from the proceeds of the IPO last year. So going forward, because of that reduced interest cost, the profit after tax will get a big boost. Secondly, the company has recently commissioned a new plant in Jammu, and after accounting for the interest subsidies from the state government, the effective rate of interest on that particular plant is just 2.5%. So the return on equity of this particular company is also set to rise sharply from the current levels. Apart from these two factors, the implementation of Schedule M, or what is also known as good manufacturing practices, which is being implemented and which is a law from the Indian pharma regulator, that should also act as a further tailwind for contract manufacturers like Innova CapTab, because now the domestic formulation companies would like to partner with those contract manufacturers which are more sizable, which are bigger in size and scale and more credible. So that will add an additional tailwind to this particular company. At the current price, the stock is trading at a 1-year forward P multiple of just 25 times, which is pretty attractive. The key risk to the investment thesis for Innova CapTab is any further intensification of competition, because this particular industry of contract manufacturing for domestic formulations is pretty fragmented. So any increase in competition may lead to a pressure on margins in the future.
Thank you very much, Gautam, for joining in. Vari Energies is moving up. The stock has moved up close to about 2% today. Nuvama has initiated coverage. It's a Braveheart buy. Their target price stands at 2,805. While they agree on account of competition, margins may moderate for the company. Vari Energy is the stock that we're talking about, but they believe that the stock is a play on the multi-decadal renewable energy and green hydrogen opportunity in India. But you've got to be brave to buy it. It's a Braveheart call. And the recent high on the stock was about 3,743. It's had a sharp fall, but today some buying has emerged on the back of this Nuvama call. They've pegged the target price at about 2,800. Get into a break. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.
Full expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today she's focusing on copper.
Well, I'm doing that because while the gold is taking a bit of a breather, we've seen the copper prices run up quite strongly. So when you look at the copper prices in 2 major markets, whether it's LME or COMEX for that matter, we've seen prices gain quite strongly for this year. So while on LME, we've seen copper prices gain up by 15%. In the US markets, copper has gained up by 28% right now. So when you make those calculations, we perhaps have it all-time highs in sense of LME markets in the US markets already. Well, copper is trading at a 13% premium in the US markets right now, and there are various factors for the prices to be trading on the higher side. One, it is the US dollar index, which is trading at a 5-month lows. Second, the US Fed signaling that 0.5 percentage point of a rate cut is what you can anticipate by the end of this year has been supportive. And then there are tariff fears. There are statements from Goldman Sachs and Citi suggesting that by the end of this year, US would have imposed 25% of copper imports as well. Now, US imports 45% of its copper requirements. So that's going to be a big chunk that we will see tariff coming in on. And copper, remember, is used in conventional, electrics, AI, and the new green energy as well. So there's going to be a lot of implications there. Fourth is that the traders now seem to be redirecting shipments away from Asia and London into US ahead of this potential tariffs that you could be looking at. And then it also is about speculative funds, money managers also covering their short positions. That has led to this huge run-up in case of copper prices. And then China also has put out a statement suggesting that they are going to be increasing buying many of these metals to add to their strategic inventory there. And many of these metals are going to be about nickel, copper and cobalt. And we've seen prices run up in all of those metals.
Thank you, Manisha. For that, we will slip into a very short break. On the other side, we'll invite the management of NCC. The company yesterday won an order worth a little more than 2,000 crore rupees from Andhra Pradesh. More details with Neeraj Sharma. Welcome back. NCC is the company on our radar right now. Yesterday, the company won an order from the Andhra Pradesh Capital Region Development Authority. The order was for construction of roads and allied activities. The overall order size was about 2,129 crore rupees to be constructed over a 3-year period. Neeraj Sharma, the head of strategy at NCC, is now with us on the show. Thank you very much, Mr. Sharma, for joining in. So first, will the entire 2,130 crore come to you, get accounted to you? Because you've written it's on a percentage tender basis. Secondly, what are the margins you will enjoy? And with this order now, are you on track to get 20 to 22,000 crore of order inflows for this year, as you had earlier guided?
Yeah, very good morning, Dima. You are absolutely right. This whole order will go into our order book. And with this order, at the start of this financial year, we had shared with the street an order inflow target of 20,000 to 22,000 crore. And as of today, we have already booked 15,956, or we can say that about 16,000 crore, which is about 80% of the lower band. And during the last con call, also we have shared with you the fact that we have decided to retain this guidance, and we are very hopeful of achieving this number, which is at least the lower band, 20,000 crore.
Okay, and the margins on this particular order win, and will you be getting the entire 2,100 crore rupees, the scope of your work?
That's right.
Okay.
The whole order goes into our order book, and we will get to execute the whole part. Percentage tender means something different. This is a process of award. So to answer your question specifically, that is something that will go to our order book, and we will get to execute the complete part. Margin, as a matter of practice, we do not wish to talk about margin project to project. We have a lot of projects, about 150, 160 odd projects. So all we do is about this FY25. We have already talked about the EBITDA margin of 9.25. And as we speak, we are hopeful to, achieve that number.
Okay, is there any downside risk to the already reduced revenue guidance of 5% that you've given for the year, 9.25% EBITDA margin guidance? We are now almost at the end of Q4, so you would probably have a good sense of the numbers already. Any further downside risk in terms of execution?
We don't see. But let me try to answer this question a little differently. To understand where we are going, we have to also, try to see from where we are coming. The last 3 years, if you really see the revenue CAGR, it is upwards of 35%, and the profits CAGR of more than 40%. So the point that I'm trying to make here is, the base itself is, substantially high. So in an year, that is quite unusual in several ways. Firstly, in FY25, we have seen central government elections, followed by elections in a couple of key states, in which we have a lot of exposure. So it is this 5%, the 5% guidance that we have shared with the state. We are quite confident of achieving that number.
Understood that. Mr. Sharma, coming back to Andhra Pradesh, a couple of points that we want to ask you. Number one, is this order part of the new capital formation that was earlier guided towards? Is this order part of that? Now, what is the fresh order pipeline that you have as far as Andhra Pradesh is concerned? Because, that has been one particular state that actually has given you quite a lot of trouble in the past. And also, from earlier pending projects, what are the receivables? Are you hopeful of getting any of those receivables back?
Three questions. Firstly, you are absolutely right. This is one of the first projects that has been awarded for the new capital city that is getting constructed in Amravati. So this is just start of that process, and we are fortunate to bag one of the key projects at the very beginning. The second part of your question was, the pipeline. We understand that, the government, the state government, in consultation with the central government, is planning to spend about, 64,000 crore total to develop, this new capital city. And we understand that they have already approved about 59 tenders, more than 37,000 crore. We hope that, all these projects should get awarded in next couple of months' time. So we are very hopeful, and we believe, this trend should continue, and at least in the next couple of months. The third part of our question, Yeah.
Please go ahead. Complete the point.
Yeah. The third part of your question was, our payment outstanding from the old project. We have to receive about 150 odd crore for the work that we had done in the past. That is in year FY 18 and 19. We are quite hopeful of receiving that money as well, by end of 31st March.
Mr. Sharma, just to circle back to the point about Amravati and the developmental projects which are planned, 64,000 crore has been earmarked. Of that, you're saying 37,000 crore worth of, divided into 59 tenders have already been let out. Is that correct?
Approved. What it means is the principal decision has been taken in the process, as I brought to your attention. In the next couple of months' time, we expect all these tenders to get awarded.
And out of these 59 tenders, you will participate in how many?
We have participated in most of them. Wherever, depending on a project and we try to see several factors. For example, what is the nature of the project? What is the value of the project? What would be possibly the prevailing competition, in that package. Accordingly, we participate, in most of the packages.
Understood that. Mr. Sharma, also give us a sense of the typical win percentage that you enjoy every time you participate in tendering. So out of every 10 projects or 100 projects that you do participate, what is the typical win percentage? The second question is, you said that out of the 150 crores of pending receivables, you're actually hopeful. Could you repeat that once again, of receiving it by March 31st, 2025?
That's right.
And the win percentage for tenders?
There is no really win percent as such.
Or a historical average that you could give us, yeah.
It keeps changing, but if you insist, I will put that number, anywhere between 15 to 20%, but that keeps changing. It depends, the bulkiness of a particular project, how many projects are being awarded, what kind of projects are being awarded, what is the prevailing competitive intensity, in that space. So it's an outcome. It's an outcome of all these factors.
Do you think the order inflow guidance for FY26, you'll give that out perhaps in a month or so, but directionally, do you think it could be higher than FY25 considering the large tenders you've participated in?
I do not really wish to speculate on this. The way we function is, after the end of this financial year, in month of April, we will try to, review all the projects, try to look at all the opportunities, then try to come out with a possible number. And I would be happy to come to your show, give us some time by end of April, and talk about what is the order inflow, guidance number that we have for you.
Love to have you back on the show. A quick word before we wrap the interview. What is the current debt on the books right now and your debt reduction plans?
As of third quarter, as of December, it would be, close to 2,400 crore. But as you are aware, in our industry, generally most of the payments are expected to come, in the last quarter. So this number should go down.
Okay, Mr. Sharma, thank you so much for joining us, giving us a sense of the order books, the sense of the prospect pipeline as far as Andhra Pradesh is concerned, and some very positive flow news coming in terms of pending receivables from Andhra Pradesh. But let's now slip into a short break. When we return, we will discuss market technicals with Mitesh Thakur and also his top trading bets. Welcome back to Trading Hour. Well, one stock that's been in focus over the past few days has been Ola Electric. There have been some discrepancies which have been reported in sales and vehicle registrations. Parikshit is here with the details and what the company has to say.
Right, Ola Electric has been facing multiple questions from regulators and from government departments handling PLI and the PM E-Drive scheme and also the Motor Vehicles Regulation Act. Essentially, these queries have been around trade certificates and mismatch in sales data. A CNBC-TV18 newsbreak has now been confirmed. Yesterday, we had reported how the Ministry of Heavy Industries is looking into the mismatch in data as to what Ola is reporting for February in terms of 25,000 vehicles sold versus 8,600 vehicles registered on the Vahan portal. So the Ministry of Heavy Industries is trying to understand why this discrepancy is there. The Ministry of Road Transport is also sending them queries. In fact, we learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country. We are also learning that outlets in Maharashtra have been sealed. This is what the Maharashtra Transport Commissioner Vivek Bhimanvar told CNBC-TV18 that 34 outlets of Ola Electric have been sealed pending investigation. They were found not to have valid trade certificates and showrooms are facing inspections in several other states including Madhya Pradesh, Punjab, Karnataka and 36 scooters have been seized in Maharashtra alone. In fact, sources are telling us that several of the 3,500 Ola Electric stores across the country do not have valid trade certificates. Now, this is something that the Ministry of Road Transport is also looking at. In terms of sales, Ola Electric sold 8,600 vehicles in February 2025. This was as per Vahan data, the vehicle registration data of the Ministry of Road Transport. In March so far, 11,781 vehicles have been registered. CNBC-TV18 has sent a number of queries to Ola over the last few days as to how much of these March registrations are for Feb or for the backlog. There were no clear replies. But now in a stock exchange filing, the company has said that temporary backlog in February is due to negotiations with our registration vendors. 40% of the Feb backlog has been cleared. But clearly, Ola Electric has a lot of replying to do. Several RTOs in the country have sent them notices. They will have to reply to that in order to get their showrooms unsealed, get their scooters back as well. And those replies will also have to be sent to central government departments such as the Ministry of Heavy Industries and the MORTH.
Thank you very much for that ongoing story, developing story. Let's also listen in to Maharashtra Transport Commissioner speaking exclusively to CNBC-TV18 on this particular issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai. And we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we'll take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated. They are impounded, and as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating from that premises.
Well, a lot of news flow, especially regarding Ola Electric. Despite that, today the stock has seen a bit of a bounce back after the recent sell-off. But moving on, technical analyst Mitesh Thakur now joins in for a quick technical check on the market. Mitesh, we've seen buying emerge on all days of the week so far. Do you think this positive momentum can continue as far as the indices are concerned?
See, I think, good afternoon. One, we are now nearing the immediate targets on the Bank Nifty at least, which was around 50,500, 550 zone. We are practically there. And the Nifty, while there's somewhere more to go, I think we are slightly overbought. So the idea is that while the bias at the directional preference remains on the upside, a good way to trade would be to take some profits and tighten your stop loss a little bit. But yeah, keep exploring stocks which are giving you good reversal patterns from lower levels, and I think that's the way to move forward.
I remember yesterday you talking about levels of 23,550, 23,600 on the cards for the Nifty. What about stocks, Mitesh?
Yeah. On the stock side, again, we'll have all long calls. So have a buy on Oil India. Keep a stop. This is a buy above 396. We had a high of around 395 half day. So once it crosses this 396, 397 zone, buy with a stop at 392. Look for a target of 410. And also a buy on Patanjali with a stop at about levels of 17 and 45, and a target of around 1830 can be.
Thank you so much, Mitesh, for joining us and giving us a quick check as far as the technical aspects of the market are concerned. But time now for a short break. On the other side, we will be joined by Skanda Prasad Sitaraman, the CFO of Tech Wabag, to discuss the company signing a non-binding term sheet for formation of a dedicated municipal platform. Welcome back to Trading Hour. Well, today a very interesting news development that has come in as far as Tech Wabag is concerned. The company has informed the exchanges that it will form a partnership to go ahead and form a dedicated platform for capital projects in the municipal sector. To discuss more on this, we are joined now by Skanda Prasad Sitaraman, the CFO at Tech Wabag. Thank you so much, Mr. Sitaraman, for joining us. First up, give us a sense of this particular development. Is this mainly for Indian domestic municipal corporation orders that are expected? And what will be the role of you as well as your partners? We understand that there are 3 other partners who are stepping into this particular platform.
Good morning, Vivek. Very good morning to all your viewers, and thank you very much for having us on your program. Yes, this is a very strategic development for Wabag. This is an equity partnership that we have agreed with the marquee international investors to invest up to $100 million jointly in municipal sector water treatment projects. All of those will be on PPP basis. This is in line with our long-term strategy to remain asset-light and develop long-term partnerships. And through this partnership, we will be able to focus on what we are best at, which is our technical expertise in EPC and O&M, while the financial partners will bring in the required capital. So this is going to be an equity platform where Wabag will take a minority capital investment, which is in line with our asset-light strategy. Majority capital will come for equity from the international investors, and jointly this capital will be invested into PPP projects. And this will focus on the municipal sector, primarily in India and in select countries in the emerging markets.
Got it. What would be your financial commitment? You've said it's going to be minority, but could you put a number to it?
See, Rima, we have not taken more than 26%. That's going to be the maximum stake that we would like to take. So we would remain minority when it comes to these equity partnerships.
But as of now, maximum is 26%. What's the upfront amount that you have put in as of date right now?
So this is a non-binding term sheet that we have signed. We are now progressing on the diligence and definitive agreements. Once that is done, the capital investment will be committed, and this will be drawn in the ratio that is agreed between partners on a project-by-project basis.
Understood that. Now, give us a sense of the upcoming municipal project or the prospect pipeline. First, you give it for us for India, and typically explain to us, when such projects do come up in the PPP, route, what is the equity that you need to put in? What is the kind of debt that you get in? And with your partners on board, do you now get access to cheaper funding?
Yeah. See, we've seen in the last few years, the water sector has moved from a contractor model to a performance model. And PPPs are an important factor. So what happens is you get EPC followed by a long-term O&M, which is where you take long-term commitments. And here is where it will differentiate contractors from real water technology companies. And Wabag having more than 100 years of experience, we are already having a lot of long-term contracts. We are well experienced to get into this. So the way this will work is that the equity capital, that the debt equity ratio is usually about 70-30, 75-25. So this 25 or 30% as required by the project will be put in by the platform, and the remaining will be raised through debt. Of course, we have already raised debt in our existing PPP projects from marquee debt lenders like IFC Washington, Asim Infra, and Tata Clean Tech Capital. So with a partnership of this kind with very well-known international investors, I'm sure we will have better access to capital, and there will be a much higher credibility for the platform as such. And the debt lenders should surely be more confident about this sector.
Point well taken. How soon before, when do you think you will be able to complete all the regulatory approvals and get this platform up and running and you can start bidding? What's the timeline that you have in mind?
See, already we have a few seed projects and we are preferentially placed on a few projects. So the projects are there to make the investment. So the avenue is already there. In terms of the process, I think right now we are in a very good stage in terms of our diligence and working on the definitive agreements. I think over the next couple of quarters we should have this up and running.
Couple of questions, Mr. Sitaraman, request you to answer them a little quickly. Number one, prospect pipeline, both India as well as other emerging markets. Typical win ratio there. We also understand that typically in these projects there is always an issue of receivables, which even you have faced in the past. So how do you intend to go ahead and face these issues? And number three, whenever we talk about Tech Wabag, quite a strong order book already in place. Will you transfer a few of the existing pending orders to this particular platform?
Okay. So number one, in terms of potential of this sector, our capital projects team has been working on this over the last few years, and we see with this platform also forming in line with our strategy. The sector is about the PPPs is about $1 billion in terms of overall opportunity as we see it right now, which is available for this platform to invest over the next 3 to 5 years. Number two, in terms of your question relating to receivables, you've seen our change in our strategy where we have said we will focus only on projects which are multilaterally backed, sovereign funded, federal government backed, or backed by a letter of credit. So even in our EPC projects that we are running today, 99% plus of our projects fall in one of these categories. So we have addressed the question of receivables being stuck because of government issues, funding, etc., through this strategy. And with the PPP projects, we will not be any different. Like, for example, the projects that we have taken on Namami Gange, there is an escrow mechanism. The funding comes from World Bank. There is an assurance from NFCG. So all these will continue to be the contours within which we will continue to work in this sector. Number three, we already, as I said, we already have 3 running projects. One of the projects has already achieved COD. Couple of projects are in advanced stages. Of course, these are also projects which can potentially move into this platform. And there are other preferentially placed orders where we will try to convert and bring it under this platform, and many more orders in the future. As I said, the opportunity landscape is big, and there'll be enough and more opportunities to consider through this platform.
Thank you so much, sir, for joining us, giving us a sense, and congratulations on the formation of a platform. Hope to see you soon once the Q4 results are out as well. But time now for a short break. We bring you excerpts of our conversation with Hindalco's MD, Satish Pai, over their plans to invest 45,000 crore in the aluminium and copper businesses.
make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first.
Welcome back. Aditya Birla Group Chairman Kumar Mangalam Birla has announced a 45,000 crore rupee investment plan for Hindalco's copper and aluminium business. Speaking at the launch of Hindalco's new brand identity, Mr. Birla added that the investment will be used to deliver both upstream and high-precision engineered products to its customers.
We are going to now, in this next phase, expand our upstream capacity. So alumina refinery, a new one. Aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Well, very large commitment coming from Hindalco, especially when it comes to the state of Maharashtra. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
The first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also our earning estimates are lower than the consensus. If you look at the construct of P&L for banks especially, you would see that with the repo cut, you will have margin declines, which would put pressure on PPOP. The sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27, can be a recovery year. I don't think FY26 first half may not be, second half potentially.
Near-term perspective, it looks like the bottom has been made very clearly, and that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known.
Welcome back. We addressed two of the three major newsmakers earlier in the day, and those were IT and, of course, Bajaj Finance. The third one is Manappuram, and that stock is at a record high now after Bain Capital announced plans to buy 18% stake via preferential issue of shares and an additional 26% through an open offer. Sudarshan is here with the contours of that. Sudarshan.
So we are seeing big gains in Manappuram Finance stock. Stock is currently up more than 6%. It's after the company has announced the long pending deal, and there were so many reports that company would make a deal with Bain Capital, and finally the deal has come. Bain Capital is looking to acquire up to 42% stake in Manappuram Finance, and the deal is valued at more than $1 billion, or say more than rupees 10,500 crore. Now the deal would happen in two parts. In the first part, Bain Capital will be acquiring up to 18% stake, and this will happen via issuance of equity and warrant in the same proportion, and will happen at rupees 236 per share, which was at 10% premium to yesterday's closing price. And if you take the average price of last 6 months, it was done at a premium of almost 30%. In the second part, Bain Capital will bring in an open offer to acquire up to 26% stake. And for this also, the price is same, that is rupees 236 per share. What would happen to the shareholding? Currently, promoters hold around 35 or a little more than 35% stake. Once the deal is done, promoters' holding will come down to less than 29%, around 28.9%, and Bain Capital's holding, if the open offer is completed and this 18% stake is done, its holding will increase to 42%, exactly 41.7%. Apart from this deal announcement, company has also made an announcement related to Asirvad Microfinance. If you remember, Asirvad Microfinance had filed for an IPO. Now the company has announced that because of this deal, Asirvad Microfinance will withdraw its DRHP process. So it's a win-win situation for both Bain Capital and Manappuram Finance, and that's the reason you are seeing a big move, because this deal was long pending.
Long pending deal and has happened so far. Let's see where it goes from here. The stock has entered F&O ban yesterday, but the open interest decline that we've seen, it's still a fair way away from exiting F&O ban, but the ferocity with which the open interest is declining, I wouldn't be surprised if it does get out of F&O ban or not. Not particularly sure on that, but there is a distinct possibility. So we'll keep an eye out on that. This morning we had spoken about how, as this year ends, we'll see a lot more order wins come by. A lot of that has happened, and as we speak, the ticker team is abuzz with all these orders. This one comes in for Adani, is worth nearly around 2,800 crores. But one stock on our radar is Ola Electric, always in the news for the last 10 days or so, on the back of multiple discrepancies in sales and vehicle registration data. Today, the stock is higher after seeing a bit of volatility in the earlier part of the week itself. Parikshit joins in with, the entire story here, the acquisitions and what the company actually had to say on something like this. Parikshit.
Right. Ola Electric has been facing multiple questions from regulators and from government departments handling PLI and the PM E-Drive scheme, and also the Motor Vehicles Regulation Act. Essentially, these queries have been around trade certificates and mismatch in sales data. A CNBC-TV18 newsbreak has now been confirmed. Yesterday, we had reported how the Ministry of Heavy Industries is looking into the mismatch in data as to what Ola is reporting for February in terms of 25,000 vehicles sold versus 8,600 vehicles registered on the Vahan portal. So the Ministry of Heavy Industry is trying to understand why this discrepancy is there. The Ministry of Road Transport is also sending them queries. In fact, we learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country. We are also learning that outlets in Maharashtra have been sealed. This is what the Maharashtra Transport Commissioner Vivek Bhimanvar told CNBC-TV18, that 34 outlets of Ola Electric have been sealed pending investigation. They were found not to have valid trade certificates, and showrooms are facing inspections in several other states, including Madhya Pradesh, Punjab, Karnataka, and 36 scooters have been seized in Maharashtra alone. In fact, sources are telling us that several of the 3,500 Ola Electric stores across the country do not have valid trade certificates. Now, this is something that the Ministry of Road Transport is also looking at. In terms of sales, Ola Electric sold 8,600 vehicles in February 2025. This was as per Vahan data, the vehicle registration data of the Ministry of Road Transport. In March so far, 11,781 vehicles have been registered. CNBC-TV18 has sent a number of queries to Ola over the last few days as to how much of these March registrations are for Feb or for the backlog. There were no clear replies, but now in a stock exchange filing, the company has said that temporary backlog in February is due to negotiations with our registration vendors. 40% of the Feb backlog has been cleared, but clearly Ola Electric has a lot of replying to do. Several RTOs in the country have sent them notices. They will have to reply to that in order to get their showrooms unsealed, get their scooters back as well, and those replies will also have to be sent to central government departments such as the Ministry of Heavy Industries and the MORTH.
Right. In fact, let's listen into the Maharashtra Transport Commissioner speaking exclusively to CNBC TV18 on this issue, and these are the points that he had to make on this issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai, and we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we will take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, these premises has been seized and they are not operating on that premise.
Important developments there with regards to Ola Electric. We take a short break. The Nifty is still around that 23,350 mark. On the other side, Apurva Sheth, the head of research at Samco Securities, joins in to give you a quick chart check and some trading ideas. Stay tuned.
Welcome back. Just 200 points. When we started the show, we said the bulls are back now. It looks like bulls are on a bit of a rampage right now. It's very close to the 23,400 mark. Yesterday itself, we thought the possibility of 2350 would be, seeing some bit of supply. Were that not to happen, there would be a short squeeze. That happened towards the end. 23,300 was where a lot of the punt buying on the calls were, and now as we speak it's 23,400, just beneath the skin of its teeth. This morning when Hormaz and I were there at 10:30, we were raising the bat on a 100-run uptick for the Nifty. Now it's going to 200, so double century out there. So good time to get in the F&O perspective in the market. If you look at it, the frontline indices, all of them doing extremely well. The Nifty Bank, which was an earlier underperformer at open, has now become an outperformer. IT continues to do well. We have the mid and small caps, which already were outperforming and continue to rally harder as well. If you look at the advanced decline as well, 2,100 stocks, 573 stocks in the red. Again, looks like a train track itself, with red and green being fairly wide apart, and that distance being maintained through the course of trade itself. Now that the Nifty has moved higher, it's important to look at the next important technical level. The Nifty Bank this morning went ahead and crossed the 100-day moving average. 50,374 is what it is, and the Nifty Bank is at 50,500. The Nifty, were it to cross the 100-day moving average, it would have to cross past the 23,532 mark. So that's something we'll watch out for. As the market's moving higher, we are seeing put writers, increase their levels as well. So 23,200 put fairly active, telling you support has moved higher. Not just that, 23,300 put itself is extremely well bid, currently close to around 100 rupees on premium out there. So 23,200 is an important support. On the way up, 23,500 is something that we'll be looking at as the next leg of supply, if at all, because call writers are active there for a premium of 50 to 80 rupees. But were that to not happen, then maybe, there is some punt buying which is taking place for the next week at 23,700 as well. Will that happen or not is the big question. In fact, from yesterday's close itself to now, there has been a near 200% jump on the 23,700 call. So if you put in, say, 100 rupees, that would be sitting on a 200 rupee up move in just one trading session. So that's the kind of move that we've seen in the options. So we'll watch out for how that pans out. In terms of individual stocks, a lot of long positions added on Titagarh Rail Systems. Max Healthcare comes on our list as well. But a couple of stocks which would be in focus on account of exiting and entering F&O ban. NMDC is the one that stands out, may enter F&O ban today. But we'll also look at SAIL, which may exit F&O ban today. So one steel company goes in, another steel company goes out.
Indeed, and a double 100 indeed on the index as well, nearing 23,400. No, just drawing a retracement line from the highs that we made last September till the lows that we made today. The 38.2% retracement level comes up to 23,589. That's the 38.2% retracement line that was coming up.
And just as we speak, a word on the rupee as well. This morning we said that, there is some consolidation that we're seeing in the dollar index. From 103.5, it's gone to 103.9. But that hasn't weighed on the rupee. In fact, the rupee has only gotten stronger. This morning it opened about 15 paise, stronger versus the dollar yesterday, and now it's further gained about 7-8 paise as well. So it's currently at the high point, and the weekly gain on the rupee is actually the highest that we've seen all the way since Jan 2023. So that's a big positive coming in, with prospects of more money coming in today on account of the FTSE rebalancing as well. So about $1.4 billion likely in.
Almost $1 billion worth of passive flows that you're anticipating as well, right? So we keep an eye out on the last half hour of the session as well. But where's the Nifty headed? Well, Apurva Sheth, the head of research at Samco Securities, is joining in now. Apurva, good afternoon. Thank you for joining in. Is the path to 23,600 clear now for the Nifty after this kind of week that we have had, or do you expect some consolidation, use the dip as a buying opportunity? Also, give us your stock recommendations as well for the afternoon.
Thank you for inviting me on the show, and good afternoon. So we are not at all surprised by the kind of rally that we have seen. I think last I was on your show was on 12th of March, and on that day I had said that the Nifty is looking like the bottom is ready to form and we should be heading higher from there. So all the indicators, technical as well as fundamental as well as market breadth indicators, were pointing that markets are likely to rally, and that is what has happened. So right now, if Nifty were to close at this level where it is right now, then it will be the highest weekly gain for Nifty in 4 years. So this is weekly. Nifty is in a very strong momentum, and it seems that the momentum should continue at least for the next week. So the levels for next week to watch out for will be 23,800. So any dip that we get towards 23,000 level should be bought into, and with a target of 23,800. So that's what we are looking out for. Now in the stocks front, we like Bajaj Holdings. So Bajaj Holdings has been a very strong performer in the entire downtrend that we have seen from September. So it is one of the few stocks which is trading higher than where it was trading in September 2024. Currently, it is forming a symmetrical triangle pattern, and it's likely to break out on the higher side. So the stop loss for this trade would be 11,500 for a target of 13,500. And another stock is Coal India. So Coal India has also seen a good enough correction downtrend in the last 4-5 months, and right now it has formed a good base and is likely to move higher. So the stop loss for the trade will be 380 and a target will be 440.
Indeed, Apurva, thank you so much for sparing time joining us today with your views on the index and on specific stocks as well. 23,800 is the level that Apurva recommends to watch out for going into the new week. We take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is CNBC-TV18's all-new app, where you get instant access to breaking news and financial world updates right at your fingertips. You can download the app from the Google Store or the Apple Store as well, or you can scan the QR code that comes up on your screen to get the app. Take a short break, back on the other side. Welcome back, and 23,375, 185 points higher on the index now. And some of the movers in the broader markets, they are seeing some very, very sharp moves. Reddington is one of them, 10.5% higher on the stock. Tejas Networks continues to be the top gainer on the Nifty 500, 15% higher, continuing to hold on to the gains, as is Jupiter Wagons as well, 11.5% higher on that stock as well. A stock that has come up in the last few minutes is Nuvoco Vistas, and that stock has seen a surge of around 8.5% now, and most of that surge has come in the initial part of the session as well, but still holding on to gains of around 8.75%. But the other one that's doing well today is United Spirits, of course, with the Friday cheer that the markets are facing, and Citi has upgraded the stock and it believes that earnings growth is likely to remain resilient. Whether United Spirits does well or not, the street would like it, but Mangala, what's Citi expecting here?
You know, I'll tell you one thing. This is the classic case of the market doing extremely well. Citi was positive on United Spirits. What the street has done is chosen to ignore the leader as much, and they're looking at the macro tailwinds for the industry, and look at what Global Spirits is doing. Global Spirits is up around 4% right now. We have Tilaknagar Industries, which is up around 6% right now. So they're looking at United Spirits in light of the positive note that is coming from Citi, but they're also taking the positives from that and giving it, color with a lot of the stocks which have actually seen a big cut from the top itself. So that's the short point here. But United Spirits nevertheless higher in today's trading session. Citi has upgraded it to buy target of 1650. What they are saying is that the trends for premiumization look good, and that's largely because of the stuff that the company has done on account of increasing the prestige and above volume contribution coming by, and as a result of which earnings for them are likely to remain resilient. More importantly, from the alcohol industry standpoint, regulatory tailwinds are coming in as well. We saw the changes that happened in Andhra. We are expecting some sort of changes coming by in the UP as well. So the route to market changes are the biggest delta for all these businesses itself. So that's a positive that is come by, along with the underlying macro which is doing well. The only fly in the ointment all of last couple of years was the massive rise that we had seen in ethanol prices and glass prices as well. So inputs are now likely to be more or less moderate, or at least contained, so that could be positive from a margin standpoint as well. The company is looking at further productivity enhancement and revenue growth management as well. And if there is any deregulation in Delhi that happens after the election verdict that has come by, that could further aid in near-term volume growth and long-term positive growth coming in for United Spirits. Add to all of this, you have the leadership transition that is taking place as well. Strategic initiatives under the new MD and CEO Praveen Someshwar, who takes over from the next financial year itself. So all ingredients in place for the bubbly to pop. Let's see whether it does or not.
Oh, they're absolutely cheering, and how in high spirits, as they like to call it. Well, in all of them, United Spirits, Global Spirits, Tilaknagar Industries, all of them doing well. And well, the Friday cheer on the markets as well. By the way, I just mentioned, you pull up Bharti Airtel just before we get to Amakshi on the defense names. That stock has seen a bit of a drop from the highs of the day, and it's been a very swift one as well. It's turned into the negative now, as Bharti Airtel at one point was at the highs of the day. It's 1700 rupees of the stock now. It's seen quite a bit of a run up as well, but keep an eye out on Bharti Airtel. But defense stocks are the ones in focus, and that is after the Defense Acquisition Council approved defense proposals worth over 54,000 crore rupees. Vamakshi is here with more details on that. Vamakshi.
Well, Horma's defense stocks are also in high spirits today. The Defense Acquisition Council, that is the DAC, has gone ahead and approved 8 defense proposals worth over 54,000 crores. And under these proposals, they will acquire the following. Number 1, 1,350 HP engines, 4090 tanks, and the key beneficiary of this is expected to be EML. Apart from that, they will also be acquiring Varunastra Torpedoes Combat, which is an indigenously developed ship-launched anti-submarine torpedo. On the back of that, keep an eye out on BDL, that is Bharat Dynamics, as well as Bharat Electronics, or BEL. Apart from that, airborne early warning and control aircraft systems will also be sort of acquired, and therefore we'll be watching out for beneficiaries like BEL, Astra Microwave, as well as data patterns. Now, in addition to this, what the DAC has also done is they've gone ahead and approved guidelines for reducing the timelines at various stages of the capital acquisition process, and they're doing this to make the process faster, more efficient, as well as more effective. So therefore, this bodes well for the overall defense pack, and all of these counters are surging in trade.
All right. What about you, Vamakshi? Are you in high spirits as well?
Friday fever Mangalam today.
Take that point. All right. Take a short break on that note. Get you more on the markets and a lot of other stocks on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs.
We're now on a couple of these Aditya Birla Group companies. Grasim has actually moved higher in today's trading session. We've also seen some traction coming by in Hindalco. In fact, the Aditya Birla Group chairman Kumar Mangalam Birla has announced a 45,000 crore rupee investment plan for Hindalco's copper and aluminum business. Speaking at the launch of Hindalco's new brand identity, he added that the investment will be used to deliver both upstream and high-precision engineered products to customers. Hear him out.
Birla Copper, for example, is setting up India's first e-waste recycling plant, extracting and recycling metals from discarded devices, and we are committing rupees 45,000 crores across the aluminium, copper, and specialty alumina businesses to deliver both upstream as well as next-gen high-precision engineered products to our valued customers.
Kumar Mangalam Birla there. In fact, my colleague Madiha caught up with Satish Pai, who is the managing director of Hindalco, to discuss this new investment plan and a lot more. Listen in.
We have been known as a large upstream player providing aluminium and copper and being seen as a commodity player in the market. I think what it does for us is position us as a value-added engineering company that provides more high-tech, high-end products and solutions. So I think what this does is that it positions us in the market where our customers will come to us for new products, new solutions. It allows us to be an integrated company, so we will be upstream and downstream combined, so that Hindalco shareholder can play the commodity cycle much more smoothly, because large part of our EBITDA today, it's 60% coming from non-commodity prices linked revenue, and I think going forward this percentage will increase.
All right. So do you see aluminium prices rising due to the tariff talk that's happening?
So I don't know it's because of the tariffs, but it's certainly true that aluminium prices in the last couple of months have been quite high. I personally believe that next year the LME should be between 25 and 2600, even though you could have short-term fluctuations because of all these announcements that go on right now.
So on the tariff front, how do you think, or how do you expect the tariffs to impact your business?
So I think that, I have been on record for saying that tariffs that are announced by the US are sort of neutral to mildly positive, because we have a large business in the US.
All right. Also on the investment of 45,000 crore, could you give us some idea on how you're planning to deploy the investment, and also how you're planning to raise this money?
So we have also been on record saying that we are going to now in this next phase expand our upstream capacity. So alumina refinery, a new one, aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Okay. And lastly, sir, what is your outlook for the fourth quarter?
I think that you will have to wait till the fourth quarter ends, and we will be making our analyst call sometime in May.
Hindalco Managing Director Satish Pai in conversation with Madiha. Just before we take that break, pull up Manappuram, because that is continuing to go from strength to strength. Now 10% higher on the stock, and it is also now trading above the open offer price of 236 rupees. So 238 on the stock now. Almost 10% higher is Manappuram. Of course, mind you, the stock is in the F&O ban, but as Mangalam was highlighting, with the way the open interest is declining in the stock, it may well come out of the ban as well sooner or later. Possibly the stock of the day so far is Manappuram. Take a short break. On the other side, Manisha Gupta joins in with Vikram Dhawan, who is the head of commodities and fund manager at Nippon India Mutual Fund. We'll be right back. Stay tuned.
Chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also our earning estimates are lower than the consensus. If you look at the construct of P&L for banks especially, you would see that with the repo cut you will have margin declines, which would put pressure on PPOP. The sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27 can be a recovery year. I don't think FY26 first half may not be, second half potentially.
Near-term perspective, it looks like the bottom has been made very clearly, and that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known.
Welcome back, and joining us on the show now is Vikram Dhawan. He's Head Commodities and Fund Manager at Nippon India Mutual Funds. Vikram, hi, thank you for joining in. And, you know, with the way the gold prices are moving and the investment seems to be coming around, would you say that the narrative behind the whole gold story now seems to be changing?
Thank you very much for inviting me on your show, Anisha. Well, gold rallies in the past decades have had different flavors. I mean, if you look at the gold rally prior to COVID, it was very much driven by the ETF flows, the global ETF flows. During COVID, obviously, it became a hedge for anybody and anyone who could lay their hands on gold. The post-COVID narrative has been very, sort of stark by the domination of the flows by the central banks, where we saw some spike in central bank buying way back in 17-18, but I think it was punctuated by COVID. So I think every gold bull market is different in terms of the factors which are driving. Now, 2025 has started with a bang for gold. There, obviously, with everything being equal, we have seen, a very strong, investment demand for gold. Now, just to share with you that from the COVID peak of December 2020 till date, the gold ETF holdings globally are down by about 25-30%, roughly about. It was down by almost 1,000 tons middle of last year, but they're still down by about 800 tons. So they have been negative, flows as far as investments have been concerned. But they have picked up very significantly in 2025. Just to give you an idea, first couple of months we have seen close to about 100-150 tons of flows from global ETFs. So I think,
absolutely.
So I think the narrative would change. Obviously, at higher prices, we will see some scaling back of physical demand. but it remains to be seen how much of that physical demand will be picked up by central bank buying and investment demand. If you really ask me, I think investment demand is going to be the key in 2025 as far as the gold bull market is concerned.
Vikram, that exactly was my next question. So while we have seen retail jewelry demand continue to decline, and not just India, but in China and various other countries as well, when it comes to investment and keeping central banks aside, when you look at retail investment demand, do you think ETF is standing tall?
So I think Indian investors have benefiting from the virtues of gold ETF, the liquidity and being, very well regulated and being fully backed by physical gold. So I think and obviously the convenience and today everything is bought or sold on your handheld devices. So, ETFs tick all the boxes. But I think, yes, there is an element of, a question mark on where the physical demand will go in 2025. Still early days. We still have to see what happens during the season, especially in India, because India and China combined account for roughly about 50% of the global physical demand. But I think what we've also seen in China and India is that, a spurt in flows into ETF. Still, the flows are very, very incremental compared to the physical flows. For instance, in India, hardly 3 to 4% of the total flows come into, a gold ETF. But I think some slack will also be picked up by the flows into gold ETF. And just to give you a data set that if you look at the Indian mutual fund ecosystem, the gold AUM is roughly about 1% of the total mutual fund AUM. So we are nowhere close to that 5% what the wise people suggest to have in your portfolio.
Clearly. So how far are we, Vikram, when it comes to treating gold as an asset class which is mainstream?
So I think, obviously, if the US, the news emerging out of US turns pretty grim, especially for the so-called global South and Europe, etc., then I think you can see some tectonic shifts happening in the currency markets. And I think one of the reasons why flows have picked up recently in gold ETF is because there is some concern about currency volatility, which really accelerated, once the new, regime was, elected in the US. So I think if we see persistent, uncertainty in the currency markets, if we see, protracted volatility in the risk assets like equity, I'm not trying to say gold will become mainstream, but I think you will see the interest and the allocation to gold, going way beyond the historic high. Even today, also the global holdings, as per reports by various agencies, global holdings today are somewhere around only 1% of the total portfolio value globally also. So despite the strong performance of gold, it is still under-owned asset class.
Wow. All right, Vikram, thank you so much for sparing time and joining us today with your views on gold. All that is glittering is currently gold, with targets going up to almost $4,000. Manisha, thank you so much for joining in as well. We call time on this edition of Halftime Report. We leave you with the Nifty at the highest point of the day at 23,400. Business Lunch takes the action forward for the next 30 minutes.
Mid-cap stocks see broad-based buying after foreign investors turn net buyers in Thursday's session. Utilities, realty and industrials lead the charge. Bajaj Finance perks up after the company elevates storied executive Rajiv Jain to vice chairman from managing director and deputy managing director Anup Saha to managing director's post. Analysts cheer the announcement. Private equity major Bain will pick up 18% stake in Manappuram Finance via a preferential allotment of shares and warrants in equal proportion for over 4,800 crore rupees. An open offer for 26% equity will follow, giving Bain control of the gold financier. The Defence Acquisition Council clears procurement proposals worth 54,000 crore rupees in a buoyant vendors like Bharat Dynamics, Bharat Electronics. The council also approves guidelines to shorten procurement timelines. Ola Electric informs receipt of inquiries from ministries over discrepancy in its sales data versus Vahan registration. The EV maker says a backlog in registration is at the root, and even as state shutters some showrooms for lack of clarification and certification. Hello and welcome to Business Lunch, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. A great week that it's been for the market because we saw green coming across the screen through the week. Today also the Nifty is managing to hold on to that green. At one point of time, we'd seen the Nifty actually touch that 23,400 mark. Right now also around that level. So from the day's lowest point in the red when it opened and went in the red, we've seen a recovery coming in. Similar for Nifty Bank, almost near the day's highest point, gains of 0.8%. Mid and small cap, that's outperforming the benchmark indices today, both holding on to gains of more than 1%. Small cap is almost 2% on today's trading session, so keep an eye out on that. One sector that's not doing well is the Nifty Metals. Let's pull that up because that's the only one trading in the red. It's down almost 0.1% in the trading session. Otherwise, advance decline ratio clear in the favor of advances versus declines. So that's how the market shape up is looking like. Green still holding on to the D Street and on to the Nifty as well. But let's move on and talk about an important stock for today. We have Bajaj Finance that's gaining in trade today, and this is after the company has elevated Rajiv Jain to the post of vice chairman for a period of 3 years. Hormaz is joining in with us to give us more details on this. Hormaz, afternoon, and everyone was watching out for this, right? This is what everyone wanted to know from Bajaj Finance.
Oh, absolutely. Much awaited, clarity needed, and the key overhang on the stock has also been addressed with this. As Rajiv Jain being elevated to vice chairman, the big takeaway is that he will stay at the company in a new role for a period of 3 years, and Anup Kumar Saha, who's been the deputy managing director, has now been elevated as the managing director for a 3-year period. And we had signs of this coming as well, right? Sanjeev Bajaj spoke to us exclusively earlier this week. He mentioned the fact that Rajiv Jain remains very committed to the business and the board will take a call on his future. And Rajiv Jain himself had made these intentions very clear during the earnings call of Bajaj Finance in the previous quarter, where he had mentioned that he intends to stay on at the company and he would hope that he is involved in shaping up strategies for the company and the subsidiaries going forward as well. Brokerages have taken this announcement very positively. Price target increases coming across the board. BofA Securities has raised that target to 10,500 now. They're saying that this is a well-executed transition plan, and earnings also are at an inflection point because the NIMs are improving and the credit costs are peaking. Citi has a buy rating. That Citi has also raised its target to 10,200 from 9,060 earlier, and they are also saying that this leadership continuity and the clarity with which this has been done is also lending a lot of credibility to Bajaj Finance, and it has as the concerns around this management transition have also been addressed with this. Morgan Stanley had done a scenario analysis earlier in the week with Rajiv Jain staying on at Bajaj Finance. They have also raised their target to 10,500 from 9,300 earlier. They remain overweight as well, and they are saying that this will improve investor confidence and sentiment, and more importantly, Bajaj Finance's investment thesis has now become the strongest and the clearest for any large cap private financial company, and they are also expecting this re-rating in the recent past to sustain and strong returns over the next 12 months. And lastly, CLSA, who has the highest target on the street for Bajaj Finance, 11,000 rupees is the projection from 10,000 earlier, calls it a top pick, and it's saying that credit costs are also peaking. They'll moderate by FY26, and they're expecting the profits to grow at a 26% CAGR over the next 2 years. So positive commentary all around. An analyst gung-ho, the stock at a record high in today's session.
Absolutely, stock at a record high in today's session. So keep an eye out on Bajaj Finance. But from one NBFC to another, but this one is a gold finance here. Now, Manappuram Finance is also trading at a 52-week high. 11% gain as of now, and this is why, because Bain Capital is to buy 18% stake via preferential issue of shares and additional 26% via the open offer. Sudarshan is joining in with us to give us more details on this front. Sudarshan, good afternoon.
Good afternoon, Vinny. So look at the move. Stock has gained up to 11%, or say more than 11%. It has gained. It has gone past the deal price that Bain Capital has announced, rupees 236 per share. Now it's trading above that price. So what is all about the deal? Manappuram Finance and Bain Capital have announced the deal that is valued at more than $1 billion, or say more than rupees 10,000 crore. Now Bain Capital will be acquiring up to 42% stake, and that would happen in 2 phases. In the first part, Bain Capital will acquire 18% stake, and that would happen via the issuance of equity and warrants in the same proportion, that is 9.3 crore. In the second part, Bain Capital will bring in open offer to acquire up to 26% stake, and for this also price is rupees 236 per share. What about the shareholding? Currently, promoters hold around 35% stake. Now, once the deal is done, promoters' holding will come down to less than 29%, and Bain Capital's holding will increase to nearly 42%, or say 41.8%. Now, apart from this announcement, company has also made an announcement related to Asirvad Microfinance. If you remember, Asirvad Microfinance had filed DRHP for an IPO. Now, company is saying that Asirvad Microfinance will withdraw that process. So overall, it's a big positive. Most of the brokerages are also positive in the stock after this deal, because it has been long pending, and that's the reason you are seeing a big move in the stock price as well.
Absolutely, seeing a big move in the stock price as well. As of now, I'm also managing to hold on to that around that 9-10% mark of gain that we're seeing coming in for Manappuram Finance. But let's switch gears and talk about Ola Electric. Now, Ola Electric is in focus today, and what came in was over the discrepancies in sales and vehicle registration. Parikshit is joining in with us to give us more details on this front, what the company has to say about this as well. Let's go across there.
Right. Ola Electric has been facing multiple questions from regulators and from government departments handling PLI and the PM E-Drive scheme, and also the Motor Vehicles Regulation Act. Essentially, these queries have been around trade certificates and mismatch in sales data. A CNBC-TV18 newsbreak has now been confirmed. Yesterday, we had reported how the Ministry of Heavy Industries is looking into the mismatch in data as to what Ola is reporting for February in terms of 25,000 vehicles sold versus 8,600 vehicles registered on the Vahan portal. So the Ministry of Heavy Industries is trying to understand why this discrepancy is there. The Ministry of Road Transport is also sending them queries. In fact, we learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country. We are also learning that outlets in Maharashtra have been sealed. This is what the Maharashtra Transport Commissioner Vivek Bhimanvar told CNBC-TV18, that 34 outlets of Ola Electric have been sealed pending investigation. They were found not to have valid trade certificates, and showrooms are facing inspections in several other states, including Madhya Pradesh, Punjab, Karnataka, and 36 scooters have been seized in Maharashtra alone. In fact, sources are telling us that several of the 3,500 Ola Electric stores across the country do not have valid trade certificates. Now, this is something that the Ministry of Road Transport is also looking at. In terms of sales, Ola Electric sold 8,600 vehicles in February 2025. This was as per Vahan data, the vehicle registration data of the Ministry of Road Transport. In March so far, 11,781 vehicles have been registered. CNBC-TV18 has sent a number of queries to Ola over the last few days as to how much of these March registrations are for Feb or for the backlog. There were no clear clear replies. But now in a stock exchange filing, the company has said that temporary backlog in February is due to negotiations with our registration vendors. 40% of the Feb backlog has been cleared. But clearly, Ola Electric has a lot of replying to do. Several RTOs in the country have sent them notices. They will have to reply to that in order to get their showrooms unsealed, get their scooters back as well. And those replies will also have to be sent to central government departments such as the Ministry of Heavy Industries and the MORTH.
Absolutely, Parikshit. Thank you so much for the latest update coming in there. But on that note, let's listen into the Maharashtra's Transport Commissioner speaking exclusively to CNBC-TV18 on the Ola Electric issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai, and we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we will take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating from that premises.
Okay, on that note, we're going to slip into a very short break. When we return, we'll get you more news and updates on the other side. Welcome back to Business Lunch on CNBC-TV18. Now, sources tell CNBC-TV18 that India is exploring diplomatic ways to raise the production of solar PV modules impacted by supply chain shocks. Abhimanyu is joining in with us to give us more details on this one. Abhimanyu?
Sources have indicated that several beneficiary companies under the PLI scheme for high-efficiency solar PV modules are unlikely to meet their set targets due to unavailability of the requisite technology for polysilicon-based ingots and wafers, stating that over rupees 16,000 crores of the scheme's outlay is likely to remain unutilized. Sources told CNBC-TV18 that around rupees 21,000 crores of the scheme's 24,000 crore rupees of outlay may be allocated to launch a third tranche of the scheme. A few days back, the Indian Solar Manufacturers Association had urged the Ministry of New and Renewable Energy to impose a safeguard duty on the import of polysilicon-based ingots and wafers to boost domestic production and prevent dumping. Acknowledging the challenges which have been faced by several domestic players in acquiring the requisite technology to produce polysilicon wafers and ingots, sources told CNBC-TV18 that the government is taking up the issue internally with the Ministry of External Affairs for an appropriate diplomatic resolution, stating that the current global supply chain for polysilicon-based ingots and wafers is dependent primarily on China. Government sources further said that several PLI beneficiaries for ingots and wafers have been facing issues in securing the requisite technology, and hence the situation may require further government intervention.
Okay, Abhimanyu, thank you so much for that. Now, moving on to some national news. A fire that broke out at a residential bungalow of a Delhi High Court judge led to the recovery of a huge pile of cash, forcing the Supreme Court to transfer the judge to Allahabad High Court. Now, Ashmit is joining in with us to give us more details on this one. Afternoon, Ashmit.
Well, the Indian judiciary, led by the Chief Justice of India, finds itself in a very precarious position. The optics of this situation, at least on the face of it, seems to suggest a blatant case of judicial corruption. The incident at hand is that of Justice Yashwant Verma, one of the senior-most judges of the Delhi High Court, heads a commercial bench of the Delhi High Court, has decided on numerous tax-related matters, GST-related matters, regulatory matters involving big-ticket companies. What's important is that on the holy break, while he was away from Delhi, the fire broke out at his residence. The fire tenders, however, who arrived at the situation, discovered vast amounts of unaccounted cash. Now, that is what has led to a situation where the Chief Justice is trying to contend with, the Chief Justice of India is trying to contend with. We're given to understand that the immediate reaction that the Collegium has given, that the Supreme Court Collegium has given, is that to issue a transfer order transferring Justice Verma back to his home cadre, which is the Allahabad High Court. But we're also given to understand that this is the first step that has been taken in a whole gamut of disciplinary actions that are currently being contemplated. In fact, just this morning, a meeting was called of the Supreme Court Collegium. Again, for the benefit of our viewers, the Supreme Court Collegium consists of the 5 senior-most judges of the Supreme Court, including the Chief Justice of India. There was a 45-minute meeting called this morning. We're given to understand that a serious view has been taken. There were calls from within the members of the Collegium asking for his removal, asking for disciplinary action, asking for an in-house committee to probe these entire allegations and questions. So clearly a difficult position this that the judiciary finds itself in. The CJI yet to give more clarity.
Thank you so much for the latest update coming in there, and we'll surely watch out for more clarity coming in on this front as well, Ashmit. So thanks so much for that. But on that note, we're going to step into a very short break, viewers. Up next, we get you some news on London's Heathrow Airport, which remains shut today. We tell you why on the other side. Welcome back to Business Lunch on CNBC-TV18. Nifty, as of now, slightly below the 23,400 levels is what we're looking at for the markets. Now, 375. So keep an eye on that. Slight bit off the day's highest point is what the Nifty is trading at. We've seen Amber Enterprises, Jindal Stainless, Nalco. So yes, because Nifty Metal is also under pressure, Jindal Stainless, Nalco, all these metal names are a bit under pressure. Other than that, Shipping Corporation of India, TBO Tech are some of these names which are seeing clear pressure in today's trading session. While what we're seeing doing well today is Manappuram Finance, we spoke about, because it's almost trading at the 52-week high level as well. So keep an eye out on that. Some of these pharma names, Ajanta Pharma, Alembic Pharma, are seeing a lot of up move in today's trading session. So that is interesting to watch out for. And some of these chemical names are also doing well. So PCBL Chemicals is something that we're watching out for in today's trading session among the top movers and holding on to gain of almost 5% is what we're seeing right now. Okay, let's move on, and some international news updates that we have coming for you all. London's Heathrow Airport will remain closed until tomorrow following a major fire at the nearby electrical substation, now which has caused a widespread power outage and disrupted flight schedules. Airport authorities have advised passengers to check with their airlines before traveling to the airport as the fire remains uncontained. Madhya is joining with us to give us the details on this and how it may affect Indian carriers as well. Madhya, over to you.
Well, it's not just the Indian carriers. Several foreign airlines also fly passengers from major Indian cities to London Heathrow. There's British Airways, Virgin Atlantic offering direct flights, Emirates, Etihad, Lufthansa, KLM, Air France, Kuwait Airways offering connecting flights. Among Indian carriers, only Air India offers a direct service to Heathrow from Delhi, Mumbai and Bengaluru. Indigo also offers Heathrow flights through its partner Turkish Airlines that has a stopover at Istanbul. Now, Air India has 6 daily flights to Heathrow, 3 from Delhi, 2 from Mumbai and 1 from Bengaluru. Now, all these flights have been impacted, causing a severe inconvenience to several passengers. Delhi-London flight AI-161 was diverted to Frankfurt. Mumbai-London flight at AI-129 was diverted back to Mumbai. All other Air India flights to and from London Heathrow for the 21st of March have been cancelled. And since some aircraft would be stuck at either sides, this could have a spillover effect like rescheduling and cancellations on tomorrow's flight schedule as well. So this is an advisory for passengers that they can watch for.
Okay, Madhya, thank you so much for that, on keeping us updated on that front. And Rupee, let's keep an eye out on that. That is, Rupee has risen 1% against dollar in the last 5 sessions. So we will keep an eye out on where Rupee is headed. But with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Mid-Cap Radar coming up next.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready.
Thank God it's Friday, comes in a very positive context. This time around, you're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia, with me is Vivek Iyer. Vivek, good afternoon. Well, we're carrying on from where we left off from Monday, Tuesday, Wednesday and Thursday. There has absolutely been no break for the Bears, and the Bulls are making a very strong comeback.
Absolutely right. Good afternoon, Hormuz. 8% higher for the small caps, over 7% higher for the mid caps this week. So it's a very strong week that the Bulls have seen. We have quite a lot lined up on the show. Let's start off with the top headlines. Mid-cap stocks see broad-based buying after foreign investors turn net buyers in Thursday's session. Utilities, realty and industrials lead the charge. Metals and consumer durables lag.
Private equity major Bain picks up 18% stake in Manappuram via preferential allotment of shares and warrants in equal proportion for over 4,800 crores. An open offer for 26% equity will follow, giving Bain control of the gold financier, who is now trading at a record high.
Hindustan Construction Company gains after its JV bags a 2,400 crore rupee contract from Tata Power for a pump storage project in Maharashtra's Karjat area. Stock gains over 11%.
United Spirits is also trading with gains of around 2% after Citi has upgraded the stock to a buy with a price target of 1650. Brokerage says that the company's earnings growth is likely to remain resilient.
TBO Tech is under pressure after a large trade where over 6.5% equity changed hands via a block deal. Stock down nearly 4%.
A marginal 30 to 40 point cool off from the highs is where you can see on the index. Now back to 23,360 is where you are, but it's a very marginal cool off. Does not take away anything from the fact that it has been an absolutely stellar week for the Bulls. The best week that we have had in 2025, and the best week and the worst week of the year in just the first 3 months of the year. Just tells you what's in store for the rest of 2025. But 23,360 is where the index is, and as Vivek was mentioning, it's been an equally good week for the broader markets, if not better. The mid-cap index is up 7%. The small-cap index is up 8%. That too has seen a slight cool-off from the high, still holding on to gains of 1%. 500 points higher on the mid-cap index, 1.5% higher on the small caps. It's very difficult to find stocks in the red in a market like this. So I'm presuming Vamakshi on the wall is going to have most gainers on her list today as well. Vamakshi, good afternoon.
Good afternoon, Hormaz. Yes, it's Friday for you for the mid-cap indices as well, right? Some of the top contributors to the kind of gains that we're seeing in the mid-cap index include Tejas Networks. That stock as of now is surging almost 12% higher. We also have Jupiter Wagons up nearly 10.5%. Reddington is also seeing the biggest intraday gain since Jan 2022. Apart from that, Manappuram is one such counter on the back of that deal with Bain. That stock is seeing a surge of almost 8.5%. Keep in mind that this is the 7th straight day of gains for Manappuram. Apart from that, breweries are also in high spirits on this Friday. Tilaknagar Industries is surging by almost 5%. Global Spirits up nearly 4%. Associated Alcohols as well as United Spirits are also flying away in trade today. Apart from that, several mid-cap IT names are also a buzz in trade today. Tata Tech is up nearly 3.5%. We also have Infosys in focus. Sonata Software as well as Cyient are some other counters that are trading with good gains. On the flip side, let's look at some of the stocks that are declining in such a strong market. Shipping Corp is taking a knock. We're seeing profit booking after 3 strong sessions that the company saw. Amber Enterprises also is snapping a 4-day gaining streak. That stock is down 5.5%. We also have TBO Tech, 6.7% equity change hands. The stock is down and out in trade, and Hindalco trading at the day's lowest point, down nearly 4%.
Thank you so much, Vamakshi, for joining us and giving us a good overview of what exactly is transpiring as far as the broader end of the markets are concerned. Well, it's now time to welcome Hemen Kapadia from DR Choksey FinServ for a technical check on the market. Good afternoon, Hemen. What a difference a couple of weeks have made. Last time around when you met us, you told us we may have to rename the show to Small Cap Radar, but the mid caps are now abuzz.
A very good afternoon, Vivek. Thank you for being on the show. So now it's time to rename the mid-cap show to a large-cap show. Frankly speaking, the VIX is below 13, Vivek. So that is a big positive. You have Reliance, 9 months of a decline, weekly reversal, upward bar reversal, positive divergence, crossover buying. Infosys oversold, TCS oversold, HUL oversold. AGC oversold, Adani Group oversold. I mean, there are a whole bunch of stocks which were deeply oversold. Metal was looking good. So everything has culminated in this bounce. Thing is, we're at 23,400, which is resistance. So maybe we could see a small cool off coming in around 23,400. But otherwise, things are better. And yeah, I think they'll remain good at least till April, I suppose.
We're seeing that cool off taking place now, almost 70 points off the highs. Hemen, good afternoon. Thank you for joining in. So, are those small caps that have turned into mid caps or mid caps that have turned into large caps on your radar? What about stocks?
Yes, Hormuz, absolutely. But some of these are probably on the verge of mid-large. But yeah, firstly, a buy call on ABB, Hormuz, or an inverted head and shoulder. Stock is looking good. There has been volume. There are volume picking up. Oscillators have given a crossover buy. So ABB looks good at an entry of 5520. Stop loss of 5450. Target of 5760. A risk reward ratio 1:2. Secondly, a buy call on Godrej Properties. Rounding bottom, crossover buy, steeply oversold, positive divergences. Logic is almost similar. A bounce back is underway. So a buy on Godrej Properties at 2160, stop loss of 2100, target of 2280.
The bounce back is also underway in a lot of these defense PSU names, Hemen. A lot of these names, Bharat Dynamics, Mazgaon Dock, 20-25% up this week itself. Is there anything that's propping up on your charts? Would you recommend booking profits considering the move that you've seen?
If you have a very short-term trading mindset, yes, you can always book profits. There's no harm in taking money home. But no, if you have a slightly positional play, no, I think this is some of these stocks almost have declined for 8 to 9 months. Even a PFC, okay, PFC is not defense, but like you mentioned, Cochin Shipyard, Mazgaon Dock. Now, Cochin Shipyard has become almost half. So some of these stocks, I think Cochin Shipyard is a buy. So coming back to your main question, no, I would say hold on. Yeah. You can always buy, sell, buy it again later. Mazgaon Dock hasn't even retraced as much as the rest of the market in terms of quantum. So Mazgaon Dock is stronger, but Cochin is a buy at current levels.
Thank you so much, Hemen. It's always a pleasure to have you on the show and hope to see you soon. Once again, you have a good weekend. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also, our earning estimates are lower than the consensus. If you look at the construct of P&L for banks especially, you would see that with repo cut, you will have margin declines, which would put pressure on PPOP. The sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27, can be a recovery year. I don't think FY26 first half may not be, second half potentially.
Near-term perspective, it looks like the bottom has been made very clearly, and that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw.
Welcome back to Midcap Radar. Well, Aditya Birla Group Chairman Kumar Mangalam Birla has announced a 45,000 crore rupee investment plan for Hindalco's copper and aluminium business. Speaking at the launch of Hindalco's new brand identity, Birla added that the investment will be used towards delivering both upstream as well as high-precision engineered products to customers.
Birla Copper, for example, is setting up India's first e-waste recycling plant, extracting and recycling metals from discarded devices, and we are committing rupees 45,000 crores across the aluminium, copper and specialty alumina businesses to deliver both upstream as well as next-gen high-precision engineered products to our valued customers.
In fact, my colleague Madhya caught up with Satish Pai, the Managing Director of Hindalco, to discuss this new investment plan and a lot more. Listen in.
We have been known as a large upstream player providing aluminium and copper and being seen as a commodity player in the market. I think what it does for us is position us as a value-added engineering company that provides more high-tech, high-end products and solutions. So I think what this does is that it positions us in the market where our customers will come to us for new products, new solutions. It allows us to be an integrated company, so we will be upstream and downstream combined, so that Hindalco shareholder can play the commodity cycle much more smoothly, because large part of our EBITDA today, it's 60% coming from non-commodity prices linked revenue, and I think going forward this percentage will increase.
All right. So do you see aluminium prices rising due to the tariff talk that's happening?
So I don't know it's because of the tariffs, but it's certainly true that aluminium prices in the last couple of months have been quite high. I personally believe that next year the LME should be between 25 and 2600, even though you could have short-term fluctuations because of all these announcements that go on right now.
So on the tariff front, how do you think or how do you expect the tariffs to impact your business?
So I think that, I have been on record for saying that tariffs that are announced by the US are sort of neutral to mildly positive because we have a large business in the US.
All right. Also on the investment of 45,000 crore, could you give us some idea on how you're planning to deploy the investment and also how you're planning to raise this money?
So we have also been on record saying that we are going to now, in this next phase, expand our upstream capacity. So alumina refinery, a new one, aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Okay. And lastly, sir, what is your outlook for the fourth quarter?
I think that you will have to wait till the fourth quarter ends, and we will be making our analyst call sometime in May.
We take a short break here. On this note, the Nifty is now down almost 80 points from the highs of the day at 23,320, but still holding on to gains of around 130 points. Take a short break. Back on the other side.
Policy actions, both from the central bank and the government of India in the last couple of months, have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known.
Welcome back to Midcap Radar. Well, the stock and story of the day is definitely Manappuram Finance, as Bain Capital is all set to buy 18% stake in the company via preferential issue of shares, as well as go ahead and acquire an additional 26% via open offer. Sudarshan is here with more details.
So it's been a week of several deal announcements, and one of them is Manappuram Finance and Bain Capital, and the deal is more than $1 billion, or say more than rupees 10,000 crore. So if we talk about the overall deal, Bain Capital is going to acquire up to 42%, nearly 42% stake for the deal value of more than rupees 10,000 crore. And this deal would happen in two parts. In the first part, Bain Capital will be acquiring up to 18% stake, and that would happen via issuance of equities and warrants at a price of rupees 236 per share. And post that, Bain Capital will bring in open offer to acquire up to 26% stake, and for this also price is the same, that is rupees 236. Now, after this open offer, what would be the shareholding? So currently promoters hold more than 35% stake. Once the deal is done, promoters' holding will come down from 35% to less than 29%, and Bain Capital's holding, if the open offer and the acquisition of 18% stake is completed, its stake will increase to nearly 42%, or say 41.7%. Apart from this deal, company has also made one announcement related to Asirvad Microfinance. If you remember, last year Asirvad Microfinance had filed DRHP for an IPO. Now company is saying that Asirvad Microfinance will withdraw that IPO. Now, because of this major deal announcements, which has been pending for a very long time, we had seen several reports over the months and weeks. Now with this deal is done, you are seeing a big move in the stock, and the share price has now moved higher than the deal price of 236 per share that company, both Manappuram and Bain Capital, had announced.
Indeed, and it's now at around about that price, slightly off the highs now is Manappuram. Of course, to keep reminding our viewers that the stock is in the F&O ban, so no new positions here, but still a very, very strong move on Manappuram at a record high in today's session. Ola Electric is the other one that's on the radar because of the discrepancies in sales and vehicle registrations. Parikshit is here with all the details and what the company has had to say. Parikshit.
Right. Ola Electric has been facing multiple questions from regulators and from government departments handling PLI and the PM E-Drive scheme, and also the Motor Vehicles Regulation Act. Essentially, these queries have been around trade certificates and mismatch in sales data. A CNBC-TV18 newsbreak has now been confirmed. Yesterday, we had reported how the Ministry of Heavy Industries is looking into the mismatch in data as to what Ola is reporting for February in terms of 25,000 vehicles sold versus 8,600 vehicles registered on the Vahan portal. So the Ministry of Heavy Industries is trying to understand why this discrepancy is there. The Ministry of Road Transport is also sending them queries. In fact, we learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country. We are also learning that outlets in Maharashtra have been sealed. This is what the Maharashtra Transport Commissioner Vivek Bhimanvar told CNBC-TV18, that 34 outlets of Ola Electric have been sealed pending investigation. They were found not to have valid trade certificates, and showrooms are facing inspections in several other states, including Madhya Pradesh, Punjab, Karnataka, and 36 scooters have been seized in Maharashtra alone. In fact, sources are telling us that several of the 3,500 Ola Electric stores across the country do not have valid trade certificates. Now, this is something that the Ministry of Road Transport is also looking at. In terms of sales, Ola Electric sold 8,600 vehicles in February 2025. This was as per Vahan data, the vehicle registration data of the Ministry of Road Transport. In March so far, 11,781 vehicles have been registered. CNBC-TV18 has sent a number of queries to Ola over the last few days as to how much of these March registrations are for Feb or for the backlog. There were no clear replies, but now in a stock exchange filing, the company has said that temporary backlog in February is due to negotiations with our registration vendors. 40% of the Feb backlog has been cleared, but clearly Ola Electric has a lot of replying to do. Several RTOs in the country have sent them notices. They will have to reply to that in order to get their showrooms unsealed, get their scooters back as well, and those replies will also have to be sent to central government departments such as the Ministry of Heavy Industries and the MORTH.
Thank you so much, Parikshit, for joining in and giving us an update on the entire Ola episode. The stock, however, today has seen a bit of a bounce back after the sell-off that it had seen over the last few weeks. But on that note, let's also listen in to Maharashtra's Transport Commissioner speaking exclusively to CNBC-TV18 on the Ola Electric issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai, and we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we will take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises. So the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating from that premises.
All the developments there surrounding Ola Electric, but with that we call time on this edition of Midcap Radar. The market has taken a bit of a nosedive from the top, 100 points off the highs, but still holding on to gains. Some passive flows also lined up towards the last 30 minutes of the session, so we'll keep an eye out on that. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.
Hello, good afternoon. You've tuned into Your Stocks, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much as always for tuning in. A quick look at what the market is doing. The last time when we checked, it was managing to hold on to the 23,400 level, but now it's come off that mark and it's down 60-70 points from that. So yes, we've seen a bit of a fall coming in the last 30 minutes specifically in the market. And when you're looking at it in terms of movers also, let's look at the Nifty mid and small cap as well. So seems like, that has also come off slightly a bit in terms from the day's highest point for the Nifty mid cap as well as the small cap. And in the broader markets, stocks that have fallen from the day's highest point, we've seen Vinati Organics, JM Financials as well as Signature Global among some of the names that have seen a sharper fall coming in the last few minutes or last hour or so that you can look. Especially in terms from the day's highest point, these stocks have seen the biggest fall coming in. So yes, that's what we're looking at it in terms of the market, a bit of a subduedness from the day's highest point for these stocks. But this is a show where we solve all your stock related queries, and that's what we'll be just doing. We have our experts joining in with us. We have Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, Vice President of Technical Research at Prabhudas Leeladhar, to answer all your stock related doubts. Vaishali as well as Shaina, good afternoon. Thank you so much for tuning in with us. Vaishali, once before we start with the stock related queries, just let's look at a quick check in terms of the markets. Today we did touch the 23,400 mark, but what are the important levels that we should be keeping an eye out on for the Nifty now?
Very good afternoon, ladies. Yes, it has been a breather because we've seen a lot of corrective move coming in the last few months. So Nifty now, I think, we have seen a one-way rally. It halted at 21,900 levels, and from there on, we are seeing a bounce back coming in. So, the prominent resistance for now is at 23,300 to 23,500 band. So if we sustain above that, we are looking at next target of 23,700 levels. So for now, I would elevate my support levels to 22,800 levels and look for a target of 23,700.
Okay, keep an eye out on those levels over there for the Nifty. But let's get started with those stock-related queries then. The first query we have is coming in from Arunacham Balaji, who's writing to us from Tamil Nadu, holding 1,100 shares of NTPC Green Energy. This is at a price of 106.49 rupees per share. Currently, stock is trading at 100 rupees. He wants to know whether, will he recover his losses anytime soon if he waits for the long term, or should he just look at selling the stock? Shaina, afternoon, and what's your view coming in for the viewer for NTPC Green?
Good afternoon to you and your viewers. Basically, what I believe is that, while the current price is close to the buying price of the investor, so he may recover his losses in a couple of months, I would say. But I do not see too much of upside from there. It will be closer to the issue price, the IPO price. Basically, while the long term, like if you say 3 years down the line, yes, the stock does look decent, attractive based on valuations, because they have over 7,500 megawatt, which is ongoing projects, executable projects which they're executing over the longer term. But if you look at current valuations based on the current execution, the numbers look pretty expensive. Valuation looks expensive. So I would say if you're looking for the shorter term, you can just wait for your price and then exit.
Okay, wait for your price and then exit. That's the view coming in from Shaina. Wait for your price and then you can look to exit. Your view coming in on this one, Vaishali, on the technicals and charts. What's the word for this one? I know obviously fairly recent, so not much in terms of past history for technicals, but anything that you could suggest on this front?
So, my view is that the stock has fallen right from 155 levels and then showing signs of bottoming out at 85. Currently, purely on technical terms, it's making higher bottom. So, I think near-term support is at 95. So, hold on with a stop loss of 95. And once we see a bounce coming in, this has a near-term resistance of around 115, 120. So, that is a level to watch, probably exit then.
Okay, keep an eye out on those levels there. Let's move on to the next query. ONGC, this is the stock that we'll talk about. Jyoti Kalra is writing to us from Punjab. She's holding 50 shares of ONGC. This is at a price of 200 rupees per share. She's making some bit of a profit on this one. Wants to know whether she should continue to hold or look to sell this and book out her profits now. Shaina, your view on this?
I believe at current levels it's better to continue to hold. It's a good dividend paying story. And over and above that, we've seen crude oil prices now almost at about $72. And there it is almost equal to what it was in the previous quarter. It has recovered, right? So to that extent, even GRMs are going to be better. They have HPCL holding also. So to an extent, the whole, valuation wise, if you combine both the entities, it looks pretty attractive. Pure valuations, it's just available at about something like 7 times, 8 times EV by EBITDA, which is pretty attractive for a stock like ONGC. So I would say that it's a hold.
Okay, a hold coming in from China. Your view on this one, Vaishali. ONGC in the last 6 months, around a 16-17% fall that we're seeing. Does it become on merit an attractive level to actually even start adding a bit more for the viewer right now? Or should they just book out the profits that they're making?
No, depending on what the time period and how short or long period that the client is, person is ready to hold. Because purely on technical terms, the near-term resistance is at 250. So if one has to make a new entry, the stock has made a bottom at around 210 and currently at 246. So wait for a dip if one has to add more, say around 238, 240 levels. That would be the ideal level. And once the stock moves above 250, I think it opens avenues for 270 to 80. So that's my view. So depending on whether you're a short-term trader or a long-term perspective, this would be the range. And once it crosses about 280, we can have a relook for higher target.
Okay, so keep an eye out on that level over there, 280. Then you can have maybe a relook at some higher target price. But right now, 280 is what you should keep an eye out on. Let's move on to the next query. We have Karan Dev Singh, who's writing to us from Jammu, holding some shares of Prestige Estate. This is at a price of 1,811 rupees. For the long term, he wants to know the prospects about the company. China, we've heard a lot in terms of the luxury side of the trend. That has been doing well. These companies have a lot of orders as well as projects coming in. Recently, we also had a note that came in, I believe, from Citi that was also suggesting a bit of a buy coming in from Prestige Estate. But the viewer has bought this stock at a very high price, 1,800. So they're making some bit of a loss right now. What should they do for the long term then? Continue to hold Prestige?
Well, yeah, I think the viewer has bought it at an elevated price. At the same time, I can't really blame him because the third quarter numbers were so disappointing that actually you saw 45%. I think it was almost a 43% fall in revenues and a much, much bigger fall in the profitability. So you saw the stock correcting a huge bit, which was a bit surprising. But, and they did not have any bookings actually. They did not, I would say, launch any new projects in the last third quarter. But I would say hold at current levels because one is, of course, the stock has corrected. Two is the bookings and the launches of the new project that is in Bangalore, as you mentioned. They have got a good project that is near that Whitefield area. So to that extent, a lot of that booking is going to come in this fourth quarter. And as you know, a lot, when the bookings will come in, you'll see the profit also jump. So it is better to continue to hold in this quarter, wait for the numbers, see how the quarter evolves and what are the level of bookings. I believe they're doing pretty well. Also in other areas like Mumbai, they are doing well. They have got number of projects that are lined up in joint ventures, their own projects, redevelopment. Also in terms of their retail space, they have got good plans going forward. So I would say hold. Current valuations, if you look at pure number, looks a bit expensive, but I think if you hold it for maybe 6 months to 1 year, things will look much better. So it's a hold.
Okay, hold coming in there on Prestige Estate from China, and obviously we are hoping that the pre-sale numbers that should come out in terms of updates coming out soon as well in the next few weeks. So we'll keep an eye out on that, as well as the collections coming in for Q4 will be interesting for a story in terms of Prestige Estate and where that is headed after a muted show in Q3 is also the highlight coming in there. But hold is the view there right now on the fundamentals. On the technicals then, Vaishali, what is your view coming in? Because last 6 months correction has come in, right? We're seeing 35-40% downtick for real estate names overall and Prestige Estate specifically. So is it time to maybe, if the viewer is ready to hold for that long term, then maybe even look to average, right? Because 1,800 is the buy price, right now 1,200. Does that make sense?
I would definitely say so because we have seen a steep correction in this stock. So right now it is showing signs of consolidation and bottoming out at 1100. So that makes it a very strong support base of 1100. So I would say average out at these levels. And once you see the stock moving above 1300 levels, it brings in furthermore confirmation for strength for this stock to move again towards 1600, 1700. So that way at least he can lower his cost and probably get into a profit mode.
Okay. Look out for Prestige Estate then. Let's move on to the next query for today. This one is coming in from Gurmeet, who's writing to us from New Delhi, holding 500 shares of NCC. This is at a price of 290 rupees per share. Wants to know whether he should continue to hold or look to sell this one. NCC, what's your view coming in for this, Shaina?
I would say it's a hold at current levels. While, the management has indicated that the fourth quarter may be slightly softer in terms of overall revenue growth. Margins could be, more or less at similar levels what it was earlier, slightly softer. But I think the order book position, the revenue target for the year is being met. And in terms of balance sheet quality, it's pretty good. They have got sufficient, reserve. They have got sufficient reserves as well as the ability to fund their growth going forward. I think valuation-wise also is just about something like 7 times EV by EBITDA. So it's a decent stock to hold in the space.
Okay, decent stock to hold in this space right now. And on the technicals, Vaishali, your view is similar that to Shaina?
I definitely agree. So because like most of the stocks, even this too has corrected quite a bit. And right now, if you ask me technically, it's making a rounding bottom. So I think this will gradually go towards 245. If you were to ask me, I would say, why not add more to get a good profit?
Okay, add more to get a good profit. Why not do that as well? But thanks for that view coming in on NCC there. But on that note, we're going to submit to a very short break, and here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen. Welcome back to Your Stocks at CNBC-TV18. We still have our experts with us, Shaina Mukaddam as well as Vaishali Parekh, to solve all your stock-related doubts. Let's move on to the next query then. We have this one is on Canara Bank. Parag is writing to us from Navi Mumbai. 300 shares of Canara Bank is what he's holding at an average price of 124 rupees per share. Currently, the stock is trading at 87 rupees per share, so he's making a significant loss on this one. Wants to know if you should continue to hold this, book your losses, look to average. What's the view coming in? Shaina, your view on the fundamentals first.
Yeah, so the stock has corrected quite a bit. I think this is more because of the issues that the bank has had in terms of, they had slightly higher LCR. So because of which, actually, if you've seen, this has impacted both their NIMs slightly, not much, but on a few basis points. Also, their deposit growth was a bit lower if you saw the last quarter numbers. So I think all these things affected the stock price. But if you see at current levels, the price is so attractive. It's just a price to book of lesser than even 0.8 price to book. So I would say at current levels, it's better to hold, because in fact, you can add also, because if you see going forward, the asset quality has improved. Your net NPAs have come down. Also, I believe in terms of credit growth, they are growing in line with the overall market. So it is a hold.
Okay, a hold coming in there. And your view on the technicals for this one, Vaishali, where do you see this headed? And would you also say that the viewer should continue to hold this?
Yes, I definitely think so, because if you see overall in the banking counter, it is first the private sector which has taken the lead, but public sector banks have not really participated. And talking about Can Bank, I think I would say add more. 85 is the near-term support. And once we see some momentum coming in, and anyways, technically also this is making a higher bottom formation. So this can go towards 95 to 100, 110. So I would say add more.
Okay, add more is the view coming in from Vaishali. Okay, let's move on to the next query for today. This is on Vodafone Idea. Now, obviously, the viewer, S. Jay Kumar, is writing to us from Tamil Nadu. He's holding 2 lakh shares of Vodafone Idea. This is at a price of 7.90 rupees per share. Long-term investor wants to know whether to hold, sell, look to add more shares. Shaina, given the recent updates that we have seen coming in, especially from in terms of the AGR waiver, which is no longer under consideration, is what we understand coming in from the sources and reports. What is your view for Vodafone Idea? Does it make sense? Because right now it's exactly at the buy price. Is it better for him to get out of Vodafone Idea and look at maybe another telecom name?
Yeah, Vinny. Actually, if you see that news that you mentioned, it seems like now there is, they are not going to get the waiver, or the likelihood of that happening seems to be very distant. So that was a big disappointment that came in. And over and above that, the only positive news is that they're going to launch 5G in some areas, some circles. At the same time, whether that will be enough for them to get a lot of new subscribers, get market share is questionable. Balance sheet quality, while slightly improved, remains terribly stressed in my view. So any new fund that they're going to raise, there will be a lot of dilution. I think it is better to switch to maybe the same sector. Sector looks good. Something like a Reliance or a Bharti, even Bharti, either of the two Bharti group companies, it makes more sense. So I would say it is a switch.
Okay. Thanks for that view there, Shaina. And Vaishali, your view on the charts and technicals, any different, or you concur with Shaina?
So, Vinny, actually, technically it looks quite all right, but such stocks like Vodafone or Yes Bank, they really don't show any up move coming in. So I would say definitely switch over to Bharti or any other stock.
Okay, switch over to Bharti or any other stock on the telecom space is a better view coming in from both our experts. Let's move on to the next query. Shrikant is writing to us from Bangalore, holding 220 shares of Mazgaon Talk. This is at a price of 659 rupees per share. So he's been holding it for a while, so making good amount of profit. Should he take out some profits now or continue to hold this one? Shaina, your view?
I would say continue to hold. The thing is, while the government has over 84% equity still, so yes, over the medium to longer term, you may see some stock come back into the market. Having said that, I think, the valuations are reasonable. So I don't see any impact of that on the stock price, even from current levels. Other than that, also, the financial fundamentals are very robust. They're continuing to show very good growth, both in terms of revenue as well as profitability quarter over quarter. And they're delivering almost about 3 of their vessels every year. This year and next year also it's targeted to do that. So I see a continuation of this. They've got order book position of, I think, around 35,000 crores in hand. So I would say continue to hold.
Continue to hold. That's a view coming in from China. Your view on this, Vaishali, does it merit at least booking some profits and maybe looking at some other name, or would you also say continue to hold Moscow Dog?
Actually, all these stocks have got into new round of momentum. So talking about Moscow Dog specifically, this too has got into new round of momentum. So I would say keep a trailing stop loss of 2,400 since its buy price is pretty low. So might as well maximize on the profit. So 2,400 would be the stop loss, and the next target that we would be looking at technically would be at around 3,000, 3,200, and I guess perhaps even higher in times to come. So ideal scenario is keep a stop loss, because if it dips below 2,400, likely that it can go towards 2,200 to 2,000. So, well, that's the way to maximize your gains.
Okay, let's move on to the next query for today. This one is on Zomato. Shaina, a lot of viewers, I think every day we do have Zomato coming in as a query. Now, this is Himanshi Kapoor, who's writing to us from Navi Mumbai. 70 shares of Zomato, price is 150 rupees per share. Wants to know the outlook on the stock for the long term. What is your view on the fundamentals for this one? Continue to hold Zomato, maybe book out some profits, look at something like a Swiggy as well. What is your view?
No, if the choice is between Swiggy and Zomato, I would continue to hold Zomato. Having said that, if he wants to partly book some profits in Zomato, he can do so, and then hold the rest for the long term. It's a concept stock in terms of valuations. Pure numbers, fundamentals, it is on the higher side. At the same time, they're doing pretty well in their food delivery business. Quick commerce, yes, it's going to be some pressure on margins because of the expansion that they're doing in Blinkit. So shorter term, medium term, I would see some consolidation continuing, around current levels. But longer term, if you're a really long term investor, there is value in holding. You can part book some profits.
Okay, that was the last query for today. So thank you so much, Shaina, as well as Vaishali, for joining in with us, and a happy weekend to both of you all. And with that, viewers, we'll wind down this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Up next, we have Closing Bell.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng continues to see a bit of underperformance over the last two trading sessions after the run that it has had.
The trade war continues down the path it feels like it's going down, and the uncertainty around other economic policy remains in place, it's going to do real damage.
President Donald Trump signed an executive order aimed at dismantling the Department of Education.
Between here, where we left off yesterday, and 23,600, which we should head to, there are two resistance levels I want to put out, which is 23,320 and then 23,497.
Bain Capital is likely to acquire up to 42% stake, valued at rupees 10,500 crore.
30 points lower for the Nifty. A mild tinge of red is what you're seeing.
From a tactical near-term perspective, it looks like the bottom has been made very clearly.
The second half of the session, what we'll actually see is close to $1.4 billion of inflows, and this on account of the FTSE rebal.
We learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country.
Now, all these flights have been impacted, causing a severe inconvenience to several passengers.
8% higher for the small caps, over 7% higher for the mid caps this week.
Okay, well, that's the day so far, and it looks like we're going to end this week on a high. And how? So 190 points, actually, let's round it off. 200 points on the Nifty Bank doing very well. And the mid and small cap indices are up and about 2% apiece. The Nifty small cap index for the week is getting closer to the 9% levels. So this is looking super strong. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Budbee, my colleague Rima. Rima, hi.
Hi, the bulls are back.
Yeah.
They're back and they're reclaiming lost territory from the bears this week. As you pointed out, 4% up on the benchmark indices. The mid-cap index is up more than 7%. And look at some of the sectoral indices. The Nifty Capital Market Index up 2.5% for the day, 13% higher for the week. The PSC or the CPSC index, 2.2% for the day. For this week, it's a rally of about 7.5%. Oil and gas, again, a subsect of the PSU basket. The oil and gas index also up 5.5%. Autos have managed to outperform with a 6.5% move. I think it's only IT, which is managing a close in the green for the week with a gain of about 2%. But it's just a bit of a relative underperformer.
Absolutely, and actually, Rima, the day's high, we were above 23,400 today. So I think that 26,600 is not. And we, by the way, at 23,375, right? So another 200 points. You're now going to start to look at the bigger retracements. What is 23,600? It is a 38% retracement of the full fall from the highs in September, October last year to the lows that we saw on the 3rd of March. So that is 21,964. So that retracement, the first one, it is at 23,600. Now the question only is, will we go straight to it or will we kind of pause? Because it's been a big week, 4.5% on the Nifty, almost 8-9% of the broader markets. I think news flow, of course, will perhaps matter more and more because you're coming off very depressed levels. So it doesn't matter whether you're a down day in US, news flow comes and, in that kind of a phase, you're ready to ignore everything. But as you creep higher, things will start to matter more when they did not matter about 1,000 points lower. And of course, the second thing is this F&O positioning we'll have to see. And we'll look at some data in a bit from now. Both on index options, there has been massive covering. Short positions have been completely I think there are about 2 lakh odd contracts now on options. And if you look at the index futures, they're also, from almost 1.4 crore contracts, now the number is about 70 odd lakhs. So there's a big covering which has happened already. And is that factor going to slowly start to get a little exhausted as well, the covering factor? So things to ponder over, but it's an interesting setup, no doubt. Let's bring in Mitesh, who's with us with a quick sense of what he's making of it and what he'd like you to do. Mitesh, over to you.
Good afternoon, Prashant. We've been advocating a bullish stance on the indices. I think that's played out very well. And
The Bank Nifty is now, close to that level of 50,500, which is where I thought, some profit booking might emerge. In case we don't stop here, then the 200-day average for the Bank Nifty is around 50,960. So 51,000 being a round strike where the call put open interest is also there. I think that will be the next target area. But the good thing is that with this rally, I think, with this turnover, which has been very fierce and severe, most of the short-term, medium-term indicators have started to rise, which means that while you may have days and, hours of pullback, the directional bias will be on the upside, and I think, we'll eventually see higher levels, despite the fact that this week has already seen spectacular gains in both the indices. I think this should spill over to the next couple of weeks, and we should keep making higher highs, higher low kind of pattern on the hourly and the 2-hourly chart. So we are bracing ourselves for higher levels. Therefore, the trading bias is on the long side. I have a buy on BHPL, which I would recommend buying with a stop below levels of 208 for targets of 225, and a buy on Tata Power with a stop just below levels of 375 for targets of 393.
Thank you very much for that. And today's gains should be seen in context with the weakness across the global market. So in Asia, Hang Seng closed with a gain of more than 2%. The Chinese markets were down 1.3%. Europe has opened on the back foot today. So frontline European indices are also currently down close to about 0.5 to 0.6%. So the color across the global market today is red. And by the way, the rupee is also advancing. So the rupee has now breached the 86 mark against the dollar. So that's appreciating. But the markets have bounced back splendidly from their lows, with the Nifty set for its best week since February 2021. Prashant has now moved over to the big wall. He joins in with the numbers.
Well, thanks very much for that. It's a strong rebound, and I thought, why not? Let's just put the numbers into context. Reasons, of course, we've been discussing every day on every program we do that, but just the sheer numbers, right? Which gives you a sense of where we have come from the lows and how much distance to the top now. So this is the Nifty Bank Mid and Small Cap indices from the lows. And the lows, by the way, for all these indices were made on the 3rd or the 4th of March, which is, this month. 6%, almost 6%, 10%, almost 13%. You can see the bounces. The view from the top in terms of how much distance to the all-time highs, the Nifty is still about 11% away there. You've got the Bank Nifty, which is about 7.5% away from its all-time high. Nifty Bank, 15%, and the small cap index is still down some 18%, despite, these double-digit recoveries we've seen in these two indices. Now, having said this, let's just put the current bounce and the sell-off and the bounce also in the context of what we've seen so far. This graphic came to us from Novama's Nikhil Ranka. It kind of very neatly captures what's happened every 2 years. So look at 2016, we had the Brexit fall, 23% for the Nifty. 2018, 2 years after, IL&FS, 15% fall. Of course, COVID was severe. It was very short-lived, but severe, 38% fall. 2022, 2 years after that, there was a Russia-Ukraine war, just about a 10% dip. And, this particular correction has been to the tune of 16%, not 6%, but 16%. At the lowest point, the Nifty had lost about 16% in value. Now, so, the message essentially is that, and sometimes it helps to look back at history and we'll say, well, this happens. This happens once every 2 years. Bigger fall happens once every 8 years, and you could look at those time cycles and kind of it is sometimes reassuring. Now let's just look at how sectors have fared. Again, I've sort of put both how much we've bounced from the lows and how much we are away from the highs as well. So some of them are pretty impressive. The metals index is up 16%. It's still about 10% away from highs. The PSU pack is up 15% from the lows, about 20% from the highs still. Oil and gas, the real estate pack, you got PSU banks, pharma, auto, FMCG. Actually, if you look at everything except the Nifty IT index, everything else is, and maybe the FMCG as well, everything else is bounced. But the Nifty IT index, for all practical purposes, is pretty much at the lows, right? Just look at this. Just under 4% bounce, and we're still about 20% off. And by the way, the Nifty IT index was the last to fall. It did not crack when the rest of the market was selling with some amount of intensity early on. Now let's look at individual stocks. So I used the NSE 500 as a basket, and I took the lows. I took the starting date as the close of 3rd of March, and I found 40 stocks which are up over 20%
from that day. This is not the closing low. This is not the intraday low. The number would have been higher, but this is the closing as of the 3rd of March. 40 stocks up in excess of 20%. And I've kind of sort of, I'm going to put out about 10, 12 names, and I've bucketed them into sectors, right? This is the defense pack. These are all part of that 40 stock list. Look at Garden Reach, 40% bounce from the lows. BDL, about 30%, and HAL, about 22%. A lot of industrial names also sort of find mention. Jyoti CNC is up 43% from the lows. There's Chennai Petro 30, and there's Adani Energy, which is up about 28% as well. Kirloskar Engine Oil, Avanti Feed, NLC India are some of the others. You look at Welspun Corp, JSW Infra, KEC. The common thread between all of this is all sort of, falls in the broader bucket, broader umbrella of industrials, manufacturing, etc. And, if you can just go back to the last few plates, there's just two more. The capital market plays, there was, you had K Fintech, Novama, CAMS, which have all bounced about between 20 and 25%. And you also had DOMS, Amber, and Spark, which are about 20% higher. The least amount of recovery now on the other side, and that's largely showing through in consumer names. So if you can move this, Devyani, Sapphire, Metro Brands, these are stocks which have seen the least recoveries. And again, I mean, similarly, again, all consumer names, Manyavar, there's Campus, Mapma India came up, which have really hardly bounced at all. And of course, there is a technology pack, right? So Infosys, LTI, Mindtree, and Wipro are some of the other names. There are also idiosyncratic names. IndusInd Bank, where there was a sort of big crisis, stock had fallen sharply, and there was something like a KEI from the cable and wire space, which of course, the reasons are obvious, which also came up as stocks which had fallen and are yet to recover. But that's news flow related. But I think the broader message is very clear. Bounce has largely come through in industrials and manufacturing type of businesses. On the consumer side, there hasn't been too much recovery at all.
Thank you very much for giving us all those numbers. It's a quick jog of memory of what's transpired over the last couple of months. Prakash Diwan is now joining us on the show. Prakash, afternoon, and thanks for joining us this Friday. Have you been buying this week? Are you convinced about that a bottom has been made, at least for now?
Good afternoon, Rima. So I'm not too sure whether the bottom that everybody was anticipating has been made. Because the market situation, especially geopolitical factors, continue to have provide some very volatile headwinds. But when it comes to buying into some of the names which have corrected and where the fundamentals have started kind of looking much more promising, certainly it's time to start nibbling. Names are the same. The themes probably are not different, but it's just that the levels have become much more attractive from a risk-reward perspective. So yes. To answer your question, part of it is yes, and the bottom. My sense is you'll probably have to wait for another 3-4 months for that kind of a stability to come or visibility to come. But in this period, I think the time direction also is going to be very healthy, even if the indices don't move anywhere dramatically. But the time direction is important for earnings to catch up, and that would probably happen from the June end quarter.
Yeah, out of the, Prakash, hi, good afternoon. Out of the data that I put out, there's no real rotation. I mean, it's just that what fell is coming up strongly. Yeah. And also, it's as I was saying, when I looked at stocks, NSE 500, what's come up the maximum, it's all industrial manufacturing type names. Nothing really happening on consumer side, even sectorally, right? Just look at auto, not very much by way of a recovery. The consumer sector, FMCG, these are not top of the list really. Your thoughts, Prakash?
No, absolutely, Richard. I think it very clearly figures, because the anticipated move in the consumption theme, stocks that constitute the sector, I think that's still to come because, we had a budget which leaves much more in the hands of consumers, but that's not going to be upfront. That's not going to be front-ended. That's going to come probably in the second half of the financial year. And secondly, you look at, patterns in consumption. We always have things around the festival, post-monsoon, harvest time. So, when you come to the second half of the year, that's where consumption could kind of start revving up. But what's likely to happen is that these companies have softened in terms of, the PE multiples. I mean, what used to get traded at 60 plus times is probably in the 30, 35 zone. So from that perspective, you'll probably see money come back into these names and they will start recovering when there's institutional money buying into that. And that means you'll have to wait for the FIs. And the only thing I want to leave you with is, Prashant, within consumption, it may not be FMCG, but look at airlines. It's another proxy to consumption. Look at hotels. I don't see any reason why some of these themes will not take center stage. So the consumption could probably be more on the high-end discretionary side rather than staples and the lower end of the market. And that's why you will probably have to kind of review it from a different perspective. But yes, consumption will start. And as I said, will probably transform to the larger consumption basket, beginning with some of these very specialized themes.
What about Manappuram Finance? Bain Capital is all set to acquire stake. The first tranche, 18% for about 4,385 crore. The stock is soared. What would you do?
No, I think it's a good move. I think it's win-win at this point from what, the numbers we've seen. The first look does give you that confidence that Manappuram is also finally getting into a transaction which, reinforces a lot of confidence in their visibility of growth for the next many years. For Bain Capital, I think it's a very strong presence that they kind of acquire by this, this entry in the gold finance scheme. I mean, they've not had any kind of a presence, and they've been talking about getting into some of these very specialized thematic exposure to the larger financial market. And my sense is you will probably see Manappuram take some time, during which Muthoot or somebody could probably start doing very well. And remember, the size of the market has become so big now, with so many banks also kind of taking a big share out of the gold financing scheme. It's no more those specialized NBFCs that have the mainstay kind of footprint out there. So I think it's a good transaction. What would I do with the Manappuram stock? I would not buy it, of course, today. It's already celebrating and rejoicing this move. But at least if I had to take exposure, I would still stick to Muthoot.
Okay. So, it's one of those businesses, lots of backers, but so far, maybe Bain is the entity, Bain is the partner it needs, right, to finally start to do well. These refining names, Prakash, Chennai Petro, again, it came up on my list as one of the big bounces. But there's MRPL as well. Any thoughts here? I've not looked at what refining, but they typically move when oil prices fall, but product spreads are high. But your thoughts?
Yeah, so this is a play on spreads, backed with the fact that they have very little float. So every time there is some sort of an interest come back, and remember, there are not too many people in the retail side who would be exiting Chennai Petroleum or for that matter any of the other smaller names. But if you look at the refiners and the marketers together, which is like the OMCs, they haven't had such a great time as yet. I mean, you have an IOC which probably moved from the sub 120 to 130 zones, and the same thing happened on HPCL. And some report talked about why they look so promising from a replacement cost perspective. So if you really wanted to look at some exposure, Prashant, I think especially given the spreads and the way the crude trajectory is anticipated for the next 6 months, which is much on the softer side, my sense is that you would rather be with a IOC or an HPCL and also leverage on the ability to pay very, very rich dividend. In fact, I don't know why I would miss out on IOC at 115, 118 and the kind of dividend yield that it provides at those levels. So I think that's where the payoff is. But yeah, Chennai and Petroleum could kind of outshine in some weeks, but it's not something which I think is very robust from a long-term perspective if you don't have other stronger things in your portfolio.
Bajaj Finance, fresh 52-week high on that. The uncertainty around Rajiv Jain has come to an end. This is a stock which didn't correct too much, and now it's back to where it was. What would you advise on Bajaj Finance? Any fresh investments?
So, no, absolutely. I think if you were to take exposure to the BFSI sector as a whole, and I think there's enough and more that's been spoken about why that would be the sector that will lead from the front in terms of any revival in the economy. if barring this, the private sector banks, and I spoke about Kotak the other day when we were talking about indices, and look how, people realize that low float or a limited float could kind of, start impacting some of these stocks very positively once this Bajaj Finance is not low float for sure, but I think the uncertainty and not just the leadership, but also the alliance partnership going out of the way, and, the kind of move that they could see in Bajaj Finance. It's also kind of, making people realize that things are finally much stronger for Bajaj Finance going forward, and they'll probably be better off in terms of the growth rates, the credit growth rates, as the cycle on consumption, picks up. So the recommendation is buy it on softer valuations. Of course, this is not, very cheap, but then it comes with premium valuation. It's always been very premiumly valued. But my sense is, I am a value investor. I would rather look at some of these names, very high quality names in the portfolio, just to give that stability, but at softer valuations.
All right, Prakash, we'll leave it there. Thank you very much for joining us. Good conversation as always. Appreciate your time here. Have a good weekend. We'll talk again soon next week. We take a quick commercial break here. We're going to come back in just a bit from now. And we continue to talk markets. We'll have Anil Agarwal, Head of Quant and Fund Manager at Alchemy Capital Management, join us on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening.
Welcome back. Alok Agarwal is with us, head of quant and fund manager at Alchemy Capital Management. Alok, good to have you with us here. Back on the program, Prashant here. So a clean 1,500 points now from the lows of 3rd of March, Alok. What are your models telling you? What is your analysis? How much more? And will this continue as we come back next week?
Yeah, hi Prashant. I think the last time also when we spoke, our models were kind of suggesting that the bulk of the correction is over, although it's always difficult to pinpoint the exact peaks and the troughs. We are not really surprised with the kind of bounce backs that we have seen in this market. Among the indices, we saw that whether it is the large caps, the Nifty 50 or the Nifty Next 50, mid and small, everywhere there's a bounce back. Anywhere from 5 to 10%, the indices have bounced. Conditions are changing both locally and globally at the economic level as well as some of the corporate level as well. So which kind of gives us confidence that this recovery is possibly not just a 2-week recovery. It has much more legs to it. At least for a few more weeks, we can see this recovery pan out. The short covering, etc., is likely to pick up. And yes, we remain positive, at least in the near term. And then as things pan out, as things unfold in terms of growth numbers, that will decide the fate of the market for the rest of the year.
Alok, hi. So as a fund manager, are you all in? Have you, are you still holding on to some cash? And what have you been buying in the last 1 month, or should I say last 2 weeks, as the recovery has ensued?
Difficult to say. Hi, Rima. Difficult to say about the last 2 weeks. My models do not go for a cash creation kind of a methodology, although it swings between whether one has a little more aggressive approach or a defensive approach. Yes, even now the approach is a little more defensive, but not via cash creation, but via giving higher importance to the quality and the balance sheet than on the growth projections alone. So yes, there have been changes in the last few months. There has been more increase in the exposure to consumer discretionary, some of the domestic healthcare, and some of the financial services, especially on the capital market related stuff. So that's where the increase has been there. The decrease has been there primarily on the industrial activity oriented sectors.
You know, I was just looking at what has done well, Alok, from the lows. It is all manufacturing/industrials. You throw in, names like defense and, pipe makers and whatnot, but no consumer names. Maybe a few, but they are the exception rather than the rule. It's pretty stark. So all this, and especially, for a brief while after the budget when they announced those tax breaks, and we were in the midst of a correction anyway, the feeling was maybe whenever the market comes back, it's going to be consumer names which will come back, but no such thing.
No, I completely agree, Prashant. And, the consumption basket also needs to be looked at a little more closely. All these years, we have been more attuned to look at consumer basket, especially in terms of staples and discretionary. And discretionary typically meant something like an auto or some maybe food businesses. But, the recovery that we have seen in some of the spaces like hotels or in some of the airlines, I would say hospital is in between a pharma or a consumption. These are the sectors that are actually done pretty well, not just on the back of the price moves, but the earnings growth in those sectors and the projections out there are only showing further visibility of growth. So yes, certain baskets of consumption are doing pretty well. And as you rightly pointed out, some of the industrial names had seen significant correction, 40-50% plus kind of correction. Some of that could have been warranted because of some excess moves that had happened. But markets, they tend to move in excess both on both sides, on the exuberance as well as on the fear side. So we are seeing some bounce backs in some of them. Not all industrial activities or not all industries are the ones that we have reduced exposures to, but some areas like the defense, etc., they are still holding on to structural growth prospects where the outlook is remaining positive even now.
You said you've increased your allocation to capital marketplace?
Yes.
Okay. And what is it?
In the capital market space, if I were to highlight, Rima, now there will be multiple of them. So there will be wealth managers, asset managers, the exchanges, and some of the processors as well. So across the gamut, they are into the financial services side. The rising penetration in India barring the recent reduction in volumes, but the rising penetration in India in terms of capital market penetration and participation by the public, that's likely to ensure that these companies continue to do well. And they do not have any balance sheet risk in terms of lending as well. So the growth prospects as well as their deliveries are actually quite at the top.
Any names in particular, Alok, which stand out to you?
Also difficult to give names, Prashant, but there are
which category?
Exchanges.
Exchanges you're talking about, only exchanges.
So the exchanges, yes, both the listed exchanges, be it the MCX and the BSE, we are positive on them. The wealth managers and some of the asset managers, some of them are combination of all these businesses as well. So combined, we do see large growth prospects. And Prashant, the interesting part is some of these businesses are actually trading at 15 to 20 times valuations for growth rates in excess of 20%. That's a difficult combination to get these days in the market.
Alok, lots of changes in the insurance sector. So many announcements, deals in the last 1 week. Hinduja Group, Patanjali Group, Bajaj saying they're going to go solo. They're breaking their partnership, 24-year partnership with Alliance. Your thoughts on insurance sector and anything that's, in the changes that we've seen in the last 1 week, what stands out?
Interestingly, there are certain sectors which, as a sector, they hold a lot of promise and growth for the long term. But sometimes it gets difficult to pinpoint and go to the stock level for the investment purposes. The kind of regulatory changes that keep happening in the sector, that also hinders visibility of growth and the certainty factor to it, due to which currently we do not have any insurance name into the portfolio. But yes, this is a sector that we do see growing for a longer term. Currently, not really there in terms of investment. But yeah, we'll be on the lookout for more visibility of growth in there.
No, point taken. Let's just put some of these big movers today up on the air. So Manappuram, of course, news related, but look at Tejas Network, for example, right? Across the board, it's between at least 10%, and of course, in the top tier names, 30-40% bounce as well. Tejas, the recent low was on the 17th of this month, which is, I think, earlier this week. The low was about 646. We've recovered about more than 150 rupees from there. Jupiter Wagons is seeing a big move today, 11%, 348 right now. There is Reddington, which is coming up. It didn't obviously fall very much at all in the correction, but 250 or so on Reddington. There is Ola Electric, which is coming up, but you get these bounces once in a while, but that's eventually faded. We'll see. Raymond is coming up nicely. The low recently was about 1200. And it's bounced 20%. Stocks at about 1,500 now, a little over 1,500. I mentioned Chennai Petro and MRPL earlier. There is what else? HCC, there was that order with Tata Power, and of course, completely crashed. Tata Power low was 21. Stocks at about 27 right now with today's 10% move. Tech Wabag, there is of course news there, about 8% in the green. JM Financial is up about 6.5%. Lots of names, lots of volume-led moves here, which are coming through. A name like EQ, I think, which is fairly recent listing, I think. Okay, not fairly listing, fairly recent, but listed in June of 2023. It listed at about 390, stocks at about 285, but the recent low was 166. So that's a 100 rupee bounce on this one from the lows very quickly. And SIS Limited, the security and security services company, lots of names. Skipper Limited is another one, about 4.5% pop. There's Green Power, all decent sized volumes as well. So it's not as if this is all happening with less volumes. And of course, market breadth remains about 3:1. Yesterday it was about 2:1. It's a little better this afternoon. Just closing thoughts, Alok, to your mind, is it possible as we get closer to the 2nd of April dateline, the market turns a little cautious? It'll be natural, right? Wait and watch and then take a call. Or you think, one should go into this one, especially if you're trading. If you're owning stocks and you've owned them and you've seen them fall and then are bouncing, well, nothing to do. But if you're trading, what would your stance be?
From a trading angle, as it is, Prashant, one got to be in the side of the trend of the market. Currently, it looks like we are bouncing back, and this recovery looks like having further more legs to it. There have few more changes that have happened. So while the correction started off with the growth coming down, with the kind of liquidity injection in terms of open market operations that the RBI has done in the last couple of months, it is not a mean thing. Overnight, we also heard in the last 2 days when the outlook on the Fed rate cuts came through. One of the data points that skipped everybody's attention was the fact that the balance sheet runoff, which was at the rate of $60 billion per month, that has been reduced to $40 billion a month. This is a significant number because every time they have done that in the past, the balance sheet reduction program being reduced further, that has led to an increase in the market and the risk perceptions and the risk on doing better. So one of the events, as you said, 2nd April being on the tariff side, once that event is further out, with each increase, anybody sitting out or sitting short in the markets might have a difficult time, if the markets continue to rise higher. The growth numbers look better. The economic numbers are bouncing back. Even if I look at one of the numbers that I look at for the proxy for the India's economic growth is GST collections. From May till December, we were hovering at 6.5% to 10% kind of growth numbers. Last 2 months have been at a 9 and a 12% growth. So the numbers are looking up, going by the way the monetary easing is happening in India and the regulatory easing is happening in India. Things look up in terms of growth bouncing back. And once that hurdle date of 2nd April is taken out, I'll not be surprised if this recovery actually gathers further strength.
Thank you, Alok, for joining in. Enjoy your weekend. We'll get into a break. On the other side, as always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few calls that you could trade over the weekend.
Also, our earning estimates are lower than the consensus. If you look at the construct of P&L for banks especially, you would see that with repo cut, you will have margin declines, which would put pressure on PPOP. The sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27, can be a recovery year. I don't think FY26 first half may not be, second half potentially.
Near-term perspective, it looks like the bottom has been made very clearly, and that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known.
Okay, well, welcome back. So what, 20 odd minutes to go for 23 to be precise for the market closing. And it's turning out to be a very, very good week. Nimesh is with us with D Street Chatter. Nimesh, good afternoon. As they say, jaan mein jaan aayi.
Oh, absolutely.
I'm sure people want to talk. People are calling.
Yeah.
Which was not the case till a few weeks ago.
Oh, absolutely, Prashant. Clearly, jaan mein jaan hai. I mean, look at this week, right? It's not only about today, but this week itself. The Nifty up 4%, broader markets up 8%. A lot of individual stocks have rallied and pulled back 20-25% as well. So that's the kind of sharp pullback we've seen in this week. And also, it's helped by institutional buying. Last week when we did the City day with the City team, they very clearly said that at least at their desk, the selling intensity has come down, and that's clearly visible in the FI data as well, right? Yesterday was a number where FIs were actually net buyers in the India market. So that was a big change. And that's helping at the margin, not only in the Nifty and the Bank Nifty, but in the broader markets as well. I guess that's the kind of day today as well. But today, for a reason, we'll see a very large number because of the FTSE rebalancing of $1.4 billion. So the number may look large, but do account that it's because of the FTSE rebalancing of $1.4 billion. The sector which has consistently done well this week is the PSU basket. Again, in today's trade, the sense is that there is buying interest. And I've been saying this for the last few days, that buying has resumed in the PSU stocks. And rightly so, right, Prashant? Because if you see this week, there are a lot of order wins which the government has issued to a lot of the PSU companies and private companies. So the order issuing seems to be back, and that's the reason why there is a bit of excitement there. Now after this big rally, what to watch out for? I guess this level of 23,300, 23,400 is a bit of a supply zone. So maybe next week you will see a bit of consolidation in the Nifty, but Bank Nifty may still do well. And the feedback I'm getting is maybe one last dash towards broader market stocks may happen next week. So Nifty may consolidate next week, but you may see a bit of a rally in the broader market names. That may just continue.
Okay, Nimesh, in terms of individual names, what's on your list?
So the first stock on my list today is Tejas Networks. Big move on that name and large volumes as well. Again, we've seen the trend for the last many days that whenever there is a small order win and the stock reacts very sharply. For Tejas Networks, the buzz is that the company is likely to bag a very large order very soon. It's going to be a domestic order, so that's something to watch out in Tejas Networks. The second stock is CAMS. We've seen a bit of pullback in all the equity derivative plays, and that's the play with CAMS as well. So a bit of pullback rally in CAMS as well, and backed by fire buying. The third stock is L&T Finance. We've seen some signs of recovery in the NBFC space as well, and L&T stands out only because of buying interest. I understand a very large long-only fund have turned active buyer in L&T Finance in the last couple of days. And the last is SML Isuzu. This is interesting. We saw an announcement today where the CEO has resigned, and even after that, the stock has seen a big reaction, up 13% last I checked. It's a thinly traded stock, so not large volumes. But the street is anticipating a very large corporate development very soon. So maybe there is something which is brewing because of which we're seeing a big move in SML. And remember, this last 10 days has been the week for M&A as well. So maybe something is cooking there as well.
Well, stocks are already excited. SML, Isuzu, Tejas, all the ones that you spoke about. Thank you very much for that list. Mitesh is now back with us for a few more trades. Mitesh, hold on to your longs over the weekend and any more ideas?
I would say so. I think, we've slightly come off the day's high, but that still doesn't, warrant any kind of worry, especially given the fact that the Bank Nifty is holding steady near the day's high and above 50,500. So in that sense, I think, maintaining longs would be a good idea. On the stock side, a BTST or Pidilite is what I would recommend. Keep a stop just below levels of 28.07 and for a target of around 28.60 here. The other one is Policy Bazaar, which has done very well in this week. That's a BTST with a stop just below levels of 1590 for targets of 1625.
Thank you very much for that. Let's talk about the defense stocks. They're in focus after the Defense Acquisition Council approved 8 defense proposals worth over 54,000 crore rupees. Vamakshi is here with the details and the fine print.
Well, Rima, the Defence Acquisition Council, like you rightly pointed out, that is the DAC, has gone ahead and approved 8 defence proposals worth over 54,000 crores. Now, keep in mind that under these proposals, they are going to acquire certain things. The first one being 1,350 HP engines for T90 tanks, and the key beneficiary of this will be BEML. Apart from that, they'll also be acquiring Varunastra Torpedoes Combat, which is an indigenously developed ship-launched anti-submarine torpedo. And on the back of that, the key beneficiaries include BDL as well as BEL. BDL means Bharat Dynamics and BEL for Bharat Electronics. Now keep in mind the third thing that they will be acquiring is airborne early warning and control aircraft systems, the key beneficiaries of which include BEL, Astra Microwave as well as data patterns. So this in turn bodes well for these counters because some order wins could come their way. But apart from that, the DAC has also gone ahead and said that they've approved guidelines for reducing the timelines at various stages of these capital acquisition processes, and this in turn will make it more faster, more effective as well as more efficient, which again bodes well as far as the order timeline is concerned. So therefore, this development bodes well for the defence counters, and they're surging in trade on the back of this development.
Thank you very much for that. And 15 minutes left for us to round up what's been a fabulous week for our markets. And now Vinny's joining in. Hi, Vinny.
Hi, Rima. Afternoon. Fabulous week is what we are saying, and hoping that, you know, this next week also what you're watching out for, green at least on the screen today and this whole week is what we're seeing. But let's bring on board our market expert as well. Hemang Jani is joining in with us now. Hemang, afternoon, and thank you so much for joining in with us. Let's talk about this week that has gone by. A good week, right? We're keeping those levels. Nifty is managing to hold on to it quite strongly today as well. Next week, what is it that we're watching out for? What is it that we should keep an eye out on?
And thanks for having me. So clearly, it's been a big relief for the market. And what is really interesting to see is that you're seeing the breadth getting better, the volumes getting better, and most importantly, the flows, which people were waiting for such a long time. You've seen a dramatic, revival there. So clearly there is a feel good, and we do think that things should get better because a large part of the pain is behind us. I think the key to watch out for would be what kind of numbers and data are we really going to see as we step into the next quarter and new financial year. And also part of the flows, because one doesn't really know how it's going to play out because the dynamics are completely different. But on the one hand, you are seeing a short covering on the future side, and the flows from the FIs have revived. So next few days are going to be very crucial to see how the flows pan out, and I do think that we might see a bit of a pause, but the overall trajectory and direction of the market is surely positive.
The Nifty IT index is going to go home absolutely flat for the day. So for the week, though, it will manage a little bit of a green courtesy yesterday's gain. So Hemang, the fear surrounding Accenture was its exposure or the revenue that it gets from the US government, which is about 8%. Have you done any analysis that in case this dodge kicks in and the US government terminates certain contracts, will Indian IT companies be affected?
Rima, I think initial reaction that we saw across some of the names, particularly Wipro, HCL Tech, Infosys, was driven by that Accenture statement and the fact that the outlook that they put out was not so encouraging. But I don't think there is any meaningful direct business that Indian IT companies have. So there is a bit of a relief. So I think more than the Accenture and the government related business that may get impacted, I think the Indian IT companies are going to be driven more by the kind of exposure that they have, US versus Eurozone or some other geographies, because US is really not sure how things are going to pan out. And for most of the Indian IT companies, US accounts for a substantial part of the business. But names like TCS, Tech Mahindra, where they have a slightly higher component of Europe or ex-Europe and ex-America business, they are relatively better placed.
Okay, Hemang, thanks for that view coming in on IT stocks. Do wait by with us. But earlier today, we also spoke to Gautam Chichoria of UBS Securities on the Indian market and whether it has reached the bottom. We also spoke to him about the possible impact of tariffs on India. Listen into what he had to say.
Near-term perspective, it looks like the bottom has been made very clearly. And that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known. Not just for India, even global equities is not priced in if it leads to slower global growth. So firstly, the impact of global tariff or these tariffs on global growth and the impact on markets, I think globally is not priced in. That's our house view. Will it lead? What kind of tariffs will it happen on 2nd April is anyone's guess. How long they last and therefore the impact on global growth and recession, again, too early for us to comment. But if there are meaningful tariffs which continue for a prolonged period, it will definitely lead to a growth negative surprise globally. One, there's a second order effect, which is how do different economies and countries respond to those tariffs? So one is it's difficult to predict what US President does on 2nd April, both in terms of degree and quantum. Second is how do different economies and countries respond? Like if there's a big tariff on India on 2nd April, will India wait for the trade deal to be signed and do nothing? Or will India impose tariffs in retaliation immediately and continue the trade deal discussion? Will have very different implications. Firstly, the Nifty should compare to 22,000 levels, not necessarily 23,000 levels. That's where the bottom was made. From that, Nifty should end up this year. Will it be double-digit returns, single-digit returns? Again, too premature. And that's why I used the word tactical in the beginning. Bottom made. Bull market is there or not is too early to say that. But sector picks, irrespective of what happens, at least in a relative way, definitely is private banks, as Vishal highlighted. Consumption names selectively again, because there are enough catalysts around pay commission coming up next year and the tax break we saw this year. And finally, very selective names around the industrial basket. Tariffs, we are less worried about how it impacts India directly in terms of what US tariffs are for India. Because it's out in the media that they're talking in terms of a bilateral trade deal. So even if there's a tariff which is a shock on early April, it's quite likely that it followed a trade deal and we have a much more equilibrium state, which actually not necessarily bad for India in a bilateral sense. What we do worry about from a tariffs perspective is not the direct impact, but the indirect impact. If the tariffs in general leads to a global growth slowdown, it will affect Indian markets and Indian economy. So that's a much bigger worry for us rather than just the tariff rate which US imposes on India on 2nd April.
Okay, on that note, actually, let's just slip into a very short break. But don't go anywhere because after the break, we'll continue the market chatter and talk with Hemang Jani on the other side. Welcome back to Closing Bell on CNBC-TV18. We have just 6 minutes before we close, but Hemang is here with us. And Hemang, looking at overall the performance that we've seen coming in, specifically this week, let's talk about realty, right? That's been the top sectoral gainer. We have seen these names come back, and there had been some pressure for the last few months for these real estate names. Anything specific that you're looking at in terms of the realty side and, the trend that you're watching out for?
It is a high beta sector, and when the market corrected, many stocks corrected quite sharply, about 30-35%. But what stood out for us during this correction is that, something like Prestige Estate, which also corrected incidentally, looks quite okay because there are a couple of launches, and overall, our interaction with the management suggests that the new sales booking and the take on the quarterly numbers, the March quarter could be much better than what the market consensus is working with. So selectively, we would be, buyers into, names like Brokerage Property and Prestige Estates. But what we must understand is that, one will have to be very selective because it's not as if that you're going to see this kind of a momentum continuing for the full year.
Manappuram has made a big move, 7.5% to close. Would you buy Manappuram at these levels, or do you think all the good news is in the price? The stock is at a fresh 52-week high.
Rima, what a deal. I think the market was waiting for it for a long time. And though the stock may pause, a bit because of the kind of move that we've seen. But when you look at the fundamentals, the numbers, the valuations, if the new, investor comes in at a, significant premium, and more importantly, the management team changes, then surely the company would deserve a much better valuation. And anyway, the sentiment towards NBFCs has changed, over the last, let's say, 3 weeks. So I would certainly be looking at Manappuram very positively, even at current levels, or there is a bit of a small correction here and there. I think it will be a great entry point.
And Hemang, any thoughts coming in on the defense side as well? Obviously, we did have those news flows coming in, but anything exciting that you're looking at? BDL, BEL, anything on that front?
Team should do well, though there have been corrections, and PSU, the space is seeing a bit of a rebound. But I think what we like at this point of time are names like Bharat Electronics, BML, HAL. I think overall, the order inflow part or the numbers expectations that people may have, I think these companies are extremely well placed.
The biggest gainers this week are the insurance stocks, at least in the frontline pack. SBI Life, 11.5%. HDFC Life inching towards a 9% up move. Lots has changed, Hemang, in the insurance pack this week. Patanjali makes its entry. They buy Magma. Bajaj Allianz is split. So Bajaj Finserv will go solo. There have been deals struck. What is your take on insurance? Any stock which is attractive?
I think what is broadly excitement for the sector is the fact that, finally this Allianz deal has been done in the sense that they've decided to separate. And now it remains to be seen, what kind of plan would Allianz have in India, whether, they would tie up with any of the existing players or they want to set up on their own with some local partners, minority stake. I think the key takeaway for us is that the foreign partners really are looking for a much larger stake and more importantly, much larger say in, their operations. So I think depending upon how things go and whether they are able to acquire any existing companies, there could be further action. But overall, we continue to be positive on the sector. We do like SBI Life at this point of time. Even Max Life is something that we've been liking for a while.
Thank you very much for joining in. Coming to the close of what's been a very strong week for our market. The Nifty Sensex end with gains of more than about 4%. The Nifty today touched the 23,400 mark on an intraday basis. It's closing shy of that level, but with a gain of 180 points. Sensex higher by 625 points. Nifty up more than 4%. The broader markets, mid-cap index up more than 7.5%. Small cap index with a gain of close to about 8%. Remember, today's flow picture will be impacted by the FTSE rebalance, which is expected to result in inflows of about $1.4 billion to be precise. Lots of PSU stocks on the gainers list today. So if you look at the front line, gainers, you've got an SBI Life, NTPC, BPCL, ONGC. PSUs, life insurance stocks did well. SBI Life was the top gainer for the day and for the week. In the Bajaj Finance, where Rajiv Jain has now been elevated, the uncertainty comes to an end. The street is happy that he stays on with the group, committed to the business. The stock hit a fresh 52-week high, 3% higher. And then you had a couple of pharma names and healthcare. So Sun Pharma, Apollo Hospital on the buyers list, and autos, Bajaj Auto, Tata Motors, also higher in trade. TVS Motors stands out. On the way down, IT on the back foot, Infi, Wipro closing in the red. Accenture is also impacted by its exposure to the US government, but they also spoke about elevated uncertainty, how discretionary spending is still tight, particularly for smaller deals. So that weighed on sentiment. Trent and Hindalco were the other losers.
Absolutely, and just looking at the broader end of the market as well, outperformance came in from the mid and small cap today. When you're looking at the names on the broader side, we have MRPL, RK Forgings, Tejas Network, Jupiter Wagons among some of these gainers. Other than that, the defense names surely were a bust. BDL, Bharat Dynamics, that too was something that was on the buzz. And on the flip side, we did have some of the names coming in as well, which was Amber Enterprises, TBO Tech on the back of that big block deal. So that is something that we're keeping an eye out on. But with that, we'll wind down this edition of Closing Bell on CNBC-TV18. Thank you so much from Rima, myself, as well as the team who put this show together. Don't go anywhere. Editor's Roundtable is up next.
The Wall Street clocks its best ever week in over 4 years. The Nifty soars 4% this week. The mid-cap index has rallied 8%. BSE listed firms have added market capitalization of nearly 22 lakh crore rupees. Hello and welcome to this brand new edition of Editors Roundtable. Over the next half an hour, we will decode the week gone by on the street and put the spotlight on several big deals that were announced. Lots of news flow this week. I'm Rupee Upadhyay, with me as always, Nimesh as well as Prashant. And today we have Rahul Arora with us in the house as well. At a very interesting juncture in the market, guys. Yeah. I don't remember the last time I read out headlines like that, right? And so much added in market capitalization.
I could sense in your tone, you know, the way you said 4% this week, 8% this week.
Unbelievable, because you can't believe this is happening.
Put into context, I mean, we've just pulled back from an extremely oversold level. So that way, as Prashant said in closing bell, sabke jaan mein jaan aayi hai. I guess, you know, that sums up. Clearly, there was so much of pessimism on the street. People were so scared. And we saw an unprecedented, like, you know, unexpected kind of a strong pullback from an extremely oversold. So it's good that we've seen this kind of a rally this week, but yeah, next week could be quite tricky as well. So we'll talk about that.
But next week, chodo.
Next week, chodo. We should
green
cheer. We should cheer. Rahul is here, and I guess, you know, he'll take us for a drink after the show today. 8% rally. Anybody was talking about bonuses.
But clients that you're speaking to, well, in percentage terms, I mean, I don't know, I'm not sure if you've done a straw poll, but how many of them really believe that this is it? I mean, the recovery is for real. How many think this is a bear market rally?
No, so I think, Prashant, first off, thank you for having me on the show. I think the general consensus in the market when this fall began was it would probably end somewhere between 21,000-22,000. That's broadly what we picked up. It had just briefly dipped below 22,000. Of course, 2nd of April is going to be a very important day with what Trump is planning to do with the reciprocal tariffs. Now, in that backdrop, it's difficult to say whether the bottom has been formed because it could go either ways. But I think this is also towards the back end of the quarter, right, Prashant? So you do have a little bit of NAV propping and management that happens, particularly insurance flows that come in. So for tax reasons, as we know. So a little bit of that for the fiscal year end is also. So this may be a little bit of window dressing. Could it be sold into? Perhaps. Because as I'm sure we'll talk as we go along, it's not, FY26 is not going to be a great year for earnings. I think if you look at banks, IT, consumer, it's not going to be the best year for earnings. So it's not that, you know, our case is not that it's going to go back and test a high, but, you know, as Nimesh was saying, that what you said on your previous show, it's good that it's happened. It's good it's happened towards the end of the fiscal year because, as he was saying, it's probably good for the payouts that we have to give our team. But let's hope it sustains at least between now and the 2nd of April. But,
absolutely. Let me go across to the wall, guys.
Yeah.
And,
yes,
you know,
let's recap.
Cheer up, everybody.
I know. I'm really looking forward to all the stats.
You know,
that Prashant
2 days FIs have net bought, right, in cash market. And it feels like such a win.
Yeah.
That's because it's been so dire.
It's human nature. We love good news, so we latch onto it when we get it.
So let me
right?
contextualize the numbers before we move any further. So this is the rebound that I'm talking about. We look at both the quantum of the rebound and the quality of the rebound as well. So let's just start with the 4 indices: Nifty Bank, small cap, mid cap indices. And what I've done is I've looked at how much these indices have bounced from the lows, but also what's the view from the top, from the all-time high. What's the distance? So the Nifty is recovered about 6.3% from the lows, 11% to go back to the prior high. For the Nifty Bank, the number is 6% and 7% respectively. Nifty mid-cap index has bounced 11, but 15 to go for the all-time high. And the small cap index has bounced 13%, but still some 18% to go from the all-time high. Now, the next graphic is interesting, right? Because this came to us from Nuvama's Nikhil Ranka. He sent this data, and you know, sometimes looking at history, it kind of is also reassuring. Sometimes it's scary, sometimes it's reassuring. And this one I thought was reassuring. Every 2 years, very neatly shows you that every 2 years there is a bit of a market fall. I mean, time cycles, right? I mean, every 2 years, small fall. Every 8 years, bigger fall. Not getting into all of that, but just look at this, right? 16, Brexit. 18, Ireland FS. 2020, COVID. Of course, this was very brief but very sharp. 10% Russia, Ukraine in 22, and of course 25. We've got this 16% dip that we've had from the high to the low. Now, how have sectors fared? Pockets and various sectors. Again, same format. How much we bounced and how much is there in terms of distance to go. Metals, CPSE. The CPSE, the PSU space was smashed down, but very smart recovery from the lows. Metals also. Oil and gas, 12%, 23 to go. Real estate, 10.5%.
and 25% to go. So real estate is still in a way in the dumps with the sharp correction we've seen. PSU bank specifically, pharma is a space, autos on your screen now. And of course, I mean, just last three sectors are interesting. Auto and FMCG, not very much recovery at all. And of course, IT, none whatsoever. Really almost at the lows, despite today's intraday bounce from the morning kind of lows. Nothing very much coming in here, 20% off the highs for the Nifty IT index. Let's get to stocks now. Here, what I've done is, so basically there are 40 stocks on the NSE 500 which have bounced over 20%. The starting date I've used is the close of March of 3rd, which is when the NSE 500 made a low. But I've not used intraday lows on that day, but closing levels. It's all, I mean, the common theme is it's all industrials, manufacturing, capital good kind of names. Not very much by way of consumers. Look at this. Garden Reach, BDL, HAL, Jyoti CNC, Chennai Petro. There is Adani Energy, Kirloskar Engine Oil, NLC, the pipe maker, Welspun Corp, which of course did not have a big correction when the market sold off. JSW Infra, KEC International, kind of gives you a sense, right? That it's top of the list in terms of what has bounced the most is still what did the best when we were actually going higher. The capital market plays have done well. K Fintech, Novama, CAMS. I mean, then a sampling of some other names, DOMS and Amber and Spark. And then you sort of look at stuff which has recovered the least. And here, it's basically the same. They never participated in a big way on the upside. They did actually give up some more when the overall market was falling. It's all mostly consumers. Devyani, Sapphire, Metro Brands, Vedant Fashion, Campus. But, you know, as I said, it's not as if they topped when the market made a top and started selling off. The top for these stocks was not made in September, October last year. They'd been anyway in a bit of a corrective zone. So maybe that's one reason why they're showing up in terms of least recovered stocks. Mapma India, and of course there's the tech pack, right? Infi, LTI, Mindtree, Wipro, and then there are individual news-related names, but you know, IndusInd Bank shows up because of course the crisis we saw there, and KEI has gotten hit twice in a span of 3-4 weeks with more competition really coming through. But you know, for what it's worth, the bounce has been strong, and it's been strong as well. But 7 days to go for the 2nd of April, which is of course the dateline for tariffs, Trump tariffs. So will we rally into it, or you know, a little bit of cautiousness before that is the question. Rahul, I don't know if you have any thoughts.
It's interesting because I think what you have shown also is probably what the market is expecting in terms of earnings. You know, you picked up consumer and IT. If you look at next year, there's not too much expectation by way of consumer and IT earnings, at least from an index perspective. Again, banks, I think, have probably rallied because they were, you know, they had not moved for a very, very long time. I think if you look at the earnings growth for private and public sector banks for our coverage universe, I think it's at best going to be about 13-14% next year. And that's like pretty much 35-40% of the index. I think the earnings growth in BFSI will probably come more from the non-banking side. So I think what you showed is a very clear reflection of what's happening. Of course, a lot of the defense names that you were talking about, maybe the market had an inkling of those 54,000 crores of orders coming through. So you had, and anyway, defense stocks were down about 30 to 50%, both private and public sector. So there was a little bit of nibbling that happened in. Of course, you know, we've been big advocates of Polycab, and now, you know, first you had Ultratech and then you had Adani. So I don't know how that space is going to particularly pan out. But I think, you know, in many ways, I think the responsibility for the market will fall on Reliance, I have a feeling. And if that is going to hold up, because a lot of the sectors that you spoke about, Prashant, even if in aggregate, if they move up, it doesn't move the needle in terms of the absolute index. It will obviously help you in terms of stock price movements. But if you have auto, cement, you know, pharma, etc. go up, the index is not going to go up 1,000 points if these indices go up 10%. You have to have Reliance, IT, FMCG or banks participate. So I think it was a very good stab. I think it's also reflective of the market's mood of what you're expecting in terms of earnings, which at an aggregate level might be, you know, 13-14% if you're lucky next year. So, which is why I said I think we may have bottomed out for the short term, but to make a case for a, you know, sharp rally from here, the market may actually be prepping itself for a negative reaction on April 2nd. Yeah. So you're actually rallying so that you don't fall further from there. Yeah. So even if you were to fall, I don't think that 21.8, which is the low, will probably be broken. If you're, you know, head a little bit more from here before 2nd of April, that might just be a floor, I think, is my sense.
So Rahul is keeping a sobering effect on this party, right?
Yeah.
He's like, guys, don't get carried away.
Don't get carried away. Don't ask
Take it easy, sip slow. You know, it's that kind of a calming impact you're having. So let me actually take that point further, and that's something that I've been thinking about actually, since we spoke to a lot of guests through the week as well. The two big pillars of the market, IT and FMCG, for what it's worth, I mean, these are large stocks, right? Now, how does this play out? Because if FPI inflows are to come back, and many of these passive flows, at least, they still track the index. Now, like you said, and like Prashant pointed out, there are no earnings. I mean, what are you paying for? 3, 4, 5% earnings, both FMCG and IT, at least for the time being. So how will this conundrum play out between incoming FPI flows? They want to buy the Nifty, but this is not, where the bulk of the earnings are coming in. Or do you think flows will also get more specific in other pockets?
No, I think you'll see sector rotation. And I think what you saw on Friday was a classic example of that. I think, you had the PSUs, you had ONGC, NTPC, Coal India, etc. go up. Well, what was the reason for them to go up? When you came into trade this morning, and if you pick the top 5 winners on the Nifty, how many would have said that, those 5 would be the top 5 gainers? So I think there is a bit of sector rotation happening. On days you're seeing cement go up. So I think they're trying to manage the index. It's a phrase that's been spoken a lot about in financial markets where, if you want to hold it, if one cannot do it, you try and prop up 3. Like I was saying, if IT cannot do it, you try and see if a combination of 3, 4 sectors can do it. So I'm not too worried from an FPI standpoint because, just to go back to an earlier point, about what clients were saying, we've met a few AIFs and PMSs, Prashant, that are holding 15-20% cash at this point. So, that also limits the downside. And I think the aggregate cash levels in the mutual fund industry are also about 7-8% right now. There's a lot of cash. There's a lot of cash sitting.
22%. PPFSI, we spoke.
PPFSI, they're an outlier.
That would be an outlier. I think, they've, to their credit, they've also been one of the best performing funds over a very, very long time. But I think if you're talking about, a 70 lakh crore sort of mutual fund industry and about 60% of that, about 40 lakh crores being equity, you're talking about 7% cash, you're talking about nearly 3 lakh crores of cash. And if AIFs
spot on numbers, exactly the math I got from Nilesh of Kotak.
Yeah,
exactly
so
his math. That's the firepower.
These are I mean, when you have that kind of, and now when you are so pressured on quarterly performances, I think, people are going to rush in to buy. There is no reason to sit out beyond a point in time because, like I was saying a little earlier, this is also a peculiar quarter from a fiscal quarter ending NAV management.
Correct.
People, wanting to come in for their tax benefits and so on and so forth. So this, I don't want to use the word artificial propping, but it could just be a little bit of window dressing that could potentially get, sold into if things are not good. Because, let's not look at it quarter to quarter. I think, like I was saying a little earlier, I don't think this is going to be a year. You'd be lucky if you got a 15% earnings growth. अभी इसके चलते आप कितना valuation देना चाहते हैं आप देख लीजिए. It's literally the point that is what I'm trying to make. So, but cash levels will limit the downside. But I wouldn't get too carried away saying, okay, yeah, we're going back to 27,000. I think that is going to be a bit of a challenge.
He's not opening any champagne tonight. Definitely not.
No, well, I mean, it's the weekend of IPL, so you never know.
IPL?
Yeah,
this weekend.
IPL starts this weekend. So, keep an eye on consumer discretionary. Keep an eye on some of the stocks that you would,
By the way,
QSRs, alcohol, all of that.
April 1st is when the tax breaks come into effect. The 1 lakh crore tax breaks. Of course, I mean, by the time it shows up in the spending, etc., it should be at least, a couple of months, right?
Absolutely.
But maybe we'll hear from some corporate commentary, etc., around it, especially on the consumption side. And 9th of April, we're all talking about 2nd of April, but 9th of April is the RBI MPC.
Yeah.
So
I guess, but in there at least 25 basis points is given, Prashant, the way they've used the liquidity.
So Soumyakanti Ghosh, that report said it got a lot of press, right? 75, he said, total this year?
So 50 to 75 is now everybody's penciling.
I think that's consensus. And I think the 10-year to a large extent has factored in 50 to 75. I think you've got 25.
Yeah, we've got another two.
See, you're going to have a residual impact of these tariffs, right? On inflation, it's going to be. It's going to be a global phenomenon. It's just a question of, who raises prices and by how much. So I think the 10-year has somewhat factored that in.
Yeah.
By the way, one of the hottest sectors of the week has been insurance, guys, right? I mean, it's been, look at the deal activity, look at the commentary, and look at the money commitment. Nimesh, I know you've been looking at a lot of the data here. It's hectic.
Oh, absolutely. So, while we all talked about big action in the capital markets and all in the stock markets, but, outside the market as well, there was so much of M&A which is picked up in the last fortnight itself. I was just looking at the data and the number itself is quite staggering. 50,000 crores worth of deal already got announced. And majority, as you rightly pointed out, was on the insurance side. So I'll start with the first mega deal, which just got announced last evening. And we saw a big reaction today as well, which was Manappuram-Bain. Bain Capital, it was in the speculation for a long time. Finally, they've announced the Bain is buying 18% by a pref, and they're going to make an open offer as well. So the entire deal size is more than 10,000 crores. So that's a big check coming in from Bain Capital. There was also a very large announcement from Prudential PLC. They already have a tie-up in India in the insurance side. They are doing a further tie-up, and they're going to do a JV with HCL Tech, HCL Group. So that was again a big, well, they've not mentioned the amount, but that's again going to be a big commitment from that group. The other big deal in the insurance was the mega deal wherein Bajaj Group announced buying out Allianz stake of 26%. That deal itself was worth 24,000 crores. So again, a big deal in the insurance space. From nowhere, we saw a big deal from Patanjali, not the listed entity, but Patanjali has also announced acquiring Magma General Insurance for 4,500 crores. Again, that was a big deal in the insurance space. I had reported about a possible deal, and that got turned out. Blackstone bought out Kolte Patil in a deal, and they made an open offer as well. That is worth 1,800 crores, including the open offer. And there was one more deal where Murugappa Group, Coromandel, they've gone ahead and bought NACL for 840 crores and making an open offer as well. So those are a few large deals which got announced in the last fortnight. Not to mention, but there was also a deal on Reliance Capital where Hindujas buying out in NCLT. So that again was a big deal which got announced. So this was largely the M&A part of it. But as you know, what even Rahul was pointing out, we saw a lot of defense stocks doing well. Also because in anticipation of large order wins, right? Yeah. In the last fortnight, 10 days itself, the order wins from mostly for the PSUs is worth almost 1 lakh crore. So, everybody is anticipating that Q4, you'll see in the last leg, you'll see the government order coming in, and that's clearly showing up. So, defense order, there was a DSC approval of 54,000 crores. That was a large deal. Even in the private space, Bharat Forge, they backed a large guns order, which was worth 7,000 crore. BHL backed a large order this week, close to 7,500 crores. KEC International, it's a private company, but they backed an order from Power Grid. So again, it's a PSU order of 1,300 crore. The only outlier was Welspun Corp. It was part of your list as well, Prashant. And that stock has rallied pretty hard, and it's at all-time high because of the large order win in the US. They backed US order worth 2,400 crores. L&T has announced that in the last 10 days, they've backed orders worth 5 to 10,000 crores. So a lot of orders are getting executed, not executed, but getting delivered now. It's been ordered. So I think that also played out in a lot of the stocks as well in the defense names, what Rahul was pointing out. Rahul, the one thing was anticipatory move in the defense stocks in terms of getting orders. But the key question is going to be execution, right? For a lot of PSUs, the execution is going to be the key. Where you think there is going to be an execution challenge going forward within the defensives or maybe the EPC companies or those kind of names?
So I think the biggest risk reward could be in Hindustan Aeronautics, Nimish bhai. I think after the Air Marshal Chief made that statement which went viral, I think if they get their execution order with the kind of order book they have, this is a company that can easily grow at 20-25%. So I think the maximum delta could probably come in on Hindustan Aeronautics, because I think you saw a little bit of flows going right around that time. I think you saw the shipping stock starting to do well.
Exactly.
GRSE, MDL, so on and so forth. So you saw a little bit of movement happening, as while the headline was defense, in the subsectors of defense, you saw a little bit of churn that started to happen post that. So I think that could be one very interesting play. The other could be BEML. Now this sounds a little perverse to say, but I think if you look at BEML and the amount of work that they've done in Russia, Ukraine, and the Middle East. As and when these geographies stabilize, this is actually an option value for the incremental orders to come in for something like a Bharat Earth Movers. That could be a great story for BEML over the next 5-7 years to find opportunity in adversity. And I think the last is we upgraded Solar this week. I think this is a company we've liked for almost 12 years now. We were probably one of the first people to look at it almost 12 years back. It's a very, very well held institutional company. I think basis our numbers in the report that we just put out this week, I think they should compound their top line EBITDA and PAT by anywhere between 25 to 30%. And it's nearly a 30% return on capital employed company. It's not cheap in terms of valuations because of these. It's a quasi FMCG company. it'll probably deliver $1 billion in cash flows, in a couple of years from now. So that's another one. So
But at least it'll
watch
give you
this
growth,
space.
unlike the FMCG company.
It'll certainly give you growth. And when you say FMCG, I'm still positive on consumer discretionary. I think it's just consumer just consumer staples. Just one last quick point, because you were talking about insurance deals, we actually put out an initiating coverage just before the show started, where we've actually put out a buy recommendation on the sector. It's something that we're very positive on, names like Star Health and ICICI Lombard.
Okay, I think we're going to take a very quick break, but lots more, including insurance, including how to play the consumer recovery, all that after the break. Welcome back here with us on Editors Roundtable, and we've got Rahul Arora with us on the show this Friday. Rahul, so you spoke about defense. You're very clearly still convinced about that theme. Let's talk about the next, big high conviction areas, and where does this discretionary consumption fit in? Because like Prashant mentioned, everybody's trying to figure out where that additional 1 lakh rupees will go. Will people spend it on QSR, on more holidays and travel, or, I don't know, other paraphernalia? What's your sense?
Why not stock market and insurance?
I
mean, it is discretionary.
People want to have fun as well. Everything cannot go back to the market.
So the more you invest, the more fun you can have, no?
That's true.
No, but I think on discretionary, so like I was saying, I think consumer staples is an avoid, but I think we like United Spirits and United Breweries. I think they're both trading at about 33 times EV EBITDA, but I think the summer season onset has been very strong for the beer players. I think UNSP should also be good. I think the valuations have come down to about 45 times adjusted for RCB's valuation. I think that over the next 6 months, UB could give you a bigger delta than UNSP, but I think if you're playing it slightly more long term, I think UNSP has better levers. We'll probably pay through hotels like Chalet. I think Indian Hotels has had a dream run from 60 rupees to 900. I think Chalet presents a little bit of an opportunity there. I think one other way to play a consumer could also be through P&G and Gillette. I think they have done remarkably well. I think P&G has actually corrected quite a bit, and I think it's providing you an interesting price point. Gillette has finally returned to double-digit, growth, which is a very heartening sign in the stocks. Reacted pretty much in accordance. And if I was to extend consumer discretionary, I think iShares looks like an interesting play. I think if that company is able to grow at 15-16% and grow its EBITDA by about similar numbers, it'll outperform the other traditional two-wheelers. So, I mean, you can find premium anywhere. You can find when consumer discretionary could also be high-end real estate and automobiles as well.
Premium,
yeah. So we had also initiated on Hyundai last week. That's another name that we like.
So Rahul, in that consumption discretionary, any view on Varun Beverages or Jubilant Food Works, the entire Jubilant group? seems to be back in action. There is going to be a block in Jubilant Foods as well. Promoter is going to dilute some stake. Any view on the Jubilant Group?
Well, you just answered it, Nimesh bhai. I think when I started looking at Jubilant Foodworks, I think the promoters used to own north of 60%. Yeah. It's down to low 40s. Let's compare that to...
But he's expanding as well, right? He's buying out...
I don't know if that's the best deployment of capital. Because I think if I compare it to McDonald's, which has been a stock that we really like, it's a single product, single geography company which has basically diversified only into beverages where the gross margins are significantly higher than the burgers business. The problem that a lot of QSRs have, Nimesh bhai, is that if you look at their master franchise agreements when they came out to their IPOs, and this is in all their RHPs, their royalty benefits are linked to store openings. So if India was to go into a slowdown, God forbid, they will continue to have to open stores. And let me take you back to the period of 2013 when the taper tantrum mini recession happened. Jubilant kept opening 150 stores every year, and their return on capital employed dropped from 45% down to low teens, and their margins from the early 20s into single digits. So that's a risk. And a lot of the other QSRs have acquired companies where Sri Lanka, Turkey, Indonesia. These are not some of the most politically stable regions. So I don't know if that's the best deployment of capital. I think you should stick to your core. There's no need beyond a point to extend into biryanis and Chinese and so on. Do the product and expand it. I think, at the end of the day, if you look at the number of Domino's stores in the US, India hasn't even scratched the surface. So our preference would be more towards a Westlife. And as opposed to for bedroom beverages, I think the tilt would still be more towards UNSP, UB, and maybe if you want to drop down the market cap, something like even a Radico Khaitan looks interesting.
There we go. We've got some burgers, we've got hotels, we've got Radico. Yes. I think we're fully set for the weekend.
It's an IPL weekend.
And IPL, yes, absolutely. Perfect conversation to then, kickstart the weekend buzz. Rahul, thanks very much for joining in.
Pleasure.
Great to have you on the show
Thank
this
you
week as always. Well, with that, it's curtains, so we have to take your leave as well. Thank you so much for being with us on Editor's Roundtable. Stay tuned. News and updates continue on CNBC-TV18.
And welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Markets post the best weekly performance in over 4 years, adding over 22 lakh crore rupees in market cap. The rupee gains for the 8th day sees its strongest week in 2 years. Manappuram Finance shares hit record highs after private equity Bain Capital signs a $1 billion deal to pick up an 18% stake along with an open offer for 26% additional equity. Bain Capital will get joint control of the company if the open offer goes through. Bajaj Finance shares hit record highs after Managing Director Rajiv Jain is elevated to the post of the Vice Chairman for a tenure of 3 years. Effective the 1st of April, Anup Kumar Saha has been named as the new Managing Director. Ola Electric admits that it has received notices from the government seeking response on discrepancies in sales and registration data. Says that 40% of the temporary backlog caused due to negotiations with vendors has now been cleared. Sources add that the Road Transport Ministry has sent a second letter to Ola Electric seeking further clarifications. Unaccounted cash discovered at the residence of Delhi High Court Judge Justice Yashwant Verma last week following a fire incident. The Supreme Court Collegium transfers him to the Allahabad High Court, directs for an in-house inquiry, concedes that his transfer is only the first step of disciplinary action being contemplated. The Allahabad High Court Bar Association opposes his transfer, says it is not a trash bin. The Heathrow Airport in London is shut down until midnight after a fire at a nearby substation caused a significant power outage at Europe's busiest airport. Over 1,000 flights flying to and from London cancelled. Air India diverts 2 of its London-bound flights, cancels the remaining scheduled daily flights. At least 90 killed in the last 24 hours in Gaza on day 3 of renewed Israeli strikes. Israel's military announces a ground invasion in South Gaza's Rafah. UNICEF says at least 200 children have been killed since Israel resumed its war on the enclave. All of that coming up for you in just a bit, but the market action of the day, the Lal Street posting its best weekly performance in over 4 years, adding over 22 lakh crore rupees in market cap. The Sensex and the Nifty rose more than 4% each. That's the story. About 200 points higher today for the Nifty. The Sensex up 550, 530 on the Nifty Bank, and the mid-cap index 700 points higher. But it's really the story of the recovery that we've seen through the week that Prashant joins us to take us through. Prashant, a nice bounce back for the markets, but is the mojo truly back?
For now, yes, Shireen. I mean, you know, markets were gasping for air, and some oxygen, some air has been let into the room, and I think people are breathing easy in that sense. You know, just consider this. We've had, today was the 5th straight day of gains, and we've not had 5 straight days of gains for 7 months now. That kind of tells you how tough markets have been over the last many months now. But, well, we are tracking the bounce and, of course, the distance from the highs, right? Both qualitatively and quantitatively as well. I'll start with the indices, the Nifty Bank, the mid and the small cap indices. So 6, 5, 10 and 12, 13% is the bounce on the Nifty Bank, mid and small cap indices respectively. But also keep sight of the distance from the top, the view from the top. 11% for the Nifty to go, and, I mean, much more for the mid and small cap indices from their respective highs. You know, this is just a slice of history. A 2-year cycle plays out. Sometimes, I mean, you know, looking at history is reassuring. And when you look at, well, you know, you get a sense that, well, these things do happen. And this is just, you know, the February 2016 Brexit episode when the market sold off 23%. This is all on Nifty. The ILNFS crisis in 2018, 15% sell-off. COVID, of course, it was brief but sharp, 38% fall. Russia, Ukraine, 10%. And, of course, this one from the highs late last year was about 16% or so. We've retraced 6% so far. Now let's look at sectors, right? Pockets which have done the maximum from the lows. But again, to put it into context, I've also, for each of them, I'm highlighting how much to go from their all-time highs. Nifty Metals, CPSC, Oil and Gas, and Nifty Real Estate are some of the strongest sectors we've seen come up from the recent lows, which is approximately on the 3rd or 4th of March, depending on what sector you look at. PSUs, Pharma are the others. PSUs, of course, as a space was the first to get smashed and lost about almost 35-40% of value, but strong recovery is what we've seen. The last 3 sectors essentially is where the trouble is. Autos, not very much at all, 21% off the highs. You got the FMCG space, still 20% off the highs. And the IT index, it did not correct with the rest of the market with the same ferocity. It sold off late, but no recovery at all. I mean, actually, we made a new low today. And of course, intraday, we did see a bit of a bounce, but 20% off here. Let's look at stocks. And for stocks, what I've done is I've looked at NSE 500 group, and I've taken the close of the March 3rd as the starting point. Not the intraday low, but the close on the 3rd of March. And here again, you know, it's largely industrial / defense / capital goods / manufacturing, those kind of names which have bounced the most. So Garden Reach, Bharat Dynamics, HAL, Jyoti CNC, Chennai Petro, Adani Enterprises, Kirloskar Engines, Avanti Feed, NLC India, the pipe maker Welspun Corp, JSW Infra, and KEC International coming through as well. There are some capital market plays, K Fintech, Novama, and CAMS, and a sampling of some other names, DOMS, Amber, and Spark, etc., would show through as well. By the way, 40 stocks out of the NSE 500 are up over 20% from their lows on the 3rd of March. What has not done well at all is all consumption, consumer. Just a caveat, this also is because maybe they didn't fall, the timelines are not same. Consumption has not been doing well for a while. These sectors peaked out much before the broader market, the rest of the market peaked out. But in any case, nothing very much by recovery. Devyani, Sapphire Foods, Metro Brands, Vedant Fashion, Campus Activewear are some of the names which come up on my list. There was Manyavar, which also Mapma India. The technology pack, Infi, LTI, Mindtree, Wipro, and Wipro are some of the IT names which have seen no bounce whatsoever. And of course, some stock-specific news-related stocks are here. There's IndusInd Bank, where there was this mini crisis, and KAI Industries got the space got sold into for the second time in about 3 weeks with the entry of a large player. But as I said, it's a bounce. It's a strong bounce. We just need to take it day by day, but maybe now week on week, now that we're really out of the depths of the crisis that we were in even 2 weeks back. Back to you.
Prashant, many thanks for joining us, and we'll of course see you back on Monday. The markets are going to take a well-deserved breather this weekend. Meanwhile, in the currency market, the rupee gaining for the 8th day, registering its strongest week in 2 years. The currency strengthened on the back of improved foreign inflows and a fall in the dollar index. From the currency market to the commodity markets, oil prices on track for a second consecutive week of gains. This on the back of supply concerns after the US fresh sanctions on Iran and OPEC's plans to cut output. Meanwhile, gold prices dipped marginally after hitting record highs yesterday. However, rising safe haven demand amidst geopolitical uncertainty has kept the yellow metal on track for the 3rd week of gains in a row. Manappuram Finance shares surging to record highs today after Bain Capital signed a $1 billion deal to pick up 18% stake. Sudarshan standing by to take us through the contours of the deal and what it means. Sud.
So this week we saw several of the deals announced, and one of them was Manappuram Finance. And on the back of this deal announcement, Manappuram Finance stock has hit record high, gaining up to 12% intraday. Now, talking about the deals, Manappuram Finance and Bain Capital have announced the deal of more than $1 billion, or say more than rupees 10,100 crore. Bain Capital will be acquiring up to 42% stake, and once the deal is done, Bain Capital, along with existing promoters, will jointly control the company. This deal would happen in 2 parts. In the first part, Bain Capital will acquire 18% stake for rupees 4,385 crore, and this would happen via issuance of equity and warrant in the same proportion of 9.3 crore each. In the second part, Bain Capital will bring in open offer to acquire up to 26% stake, and for this also price is rupees 236 per share. Now, if you take this deal price, that was at a 10% premium to yesterday's closing price and at a premium of 30% if you take the average of last 6 months. Now, what would happen to the shareholding? Currently, promoters own more than 35% stake. Once the deal is completed, promoter stake will come down to less than 29%, around 28.9%, and Bain Capital stake will increase to around 41.7%, or say 42%. Regulatory approvals that would be required are of RBI, IRDAI, CCI, and stock exchanges. Apart from this deal, companies also announced that, if you remember, Asirvad Microfinance last year had filed for an IPO. Now that process will be withdrawn. Now, post this deal, most of the brokerages have turned positive on the stock, and the target price is as high as rupees 270 per share. So overall, it's looking positive for Manappuram Finance.
Okay, Sudarshan, many thanks for joining us. And shares of Bajaj Finance also hit a record high in today's trade. This comes a day after the company elevated Rajiv Jain to the post of Vice Chairman and Executive Director for 3 years starting the 1st of April. Jain has also been appointed Additional Director of Bajaj Finserv. Bajaj Finance Deputy Managing Director Anupkumar Saha has been elevated to the position of Managing Director for a 3-year period. So the stock reacting to that leadership announcement. The Ministry of Road Transport has sent a second letter to Ola Electric seeking more clarifications. This is in relation to the discrepancies found in Ola's sales and vehicle registrations. Parikshit is standing by now with more details. Parikshit, take us through what the MHA is asking of Ola and whether there has been any response to the queries raised so far.
Essentially, the queries that have gone from the Ministry of Heavy Industries and the Ministry of Road Transport, they're in the nature of trying to understand why is there a discrepancy between the kind of numbers the Vahan portal or the vehicle registration portal of the government is showing for Ola Electric, which is around 8,647 vehicles registered in the month of February, versus what Ola is claiming in a stock exchange filing that 25,000 vehicles were sold in the month of February. In fact, the government is also closely watching the NCLT case by Rose Murta as well. The Ministry of Road Transport and Highways is also asking, apart from asking about discrepancy in sales, why trade certificates were not there for different outlets in the country. And a second specific query has also been sent. In fact, we're learning from sources that approximately 3,500 outlets are there for Ola Electric, and most of them do not have valid trade certificates. We're also learning that inspections have happened not just in Punjab, Maharashtra and Madhya Pradesh, but also in Telangana, Himachal Pradesh, Odisha, Kerala, Jammu. So this seems to be a pan-India exercise. 36 scooters have been impounded in Maharashtra alone, 14 in Jabalpur, and this is because they were lying in premises which did not have valid trade certificates. In fact, Ola has been saying that they do not have a dealership model, and these scooters have already been purchased by the customer. There is no sale happening at these showrooms, but this has not cut eyes with RT authorities who say that there is no such thing as just displaying vehicles. If you have a commercial establishment, you have to have a trade certificate. Ola sales in February were around 8,647 that we reported. 11,781 vehicles have been registered in the month of March. The company is saying the temporary backlog in February is due to negotiations with the registration vendors. 40% of the backlog has been cleared, but clearly there are still a lot of questions for Ola as to why these trade certificates were not there. The company is still in the process of replying, and many of the RTOs are yet to get replies from Ola Electric.
All right, Parikshit, many thanks for joining us. The Tata Group, meanwhile, has finalized a syndicate of 10 investment banks for the proposed 15,000 crore rupee Tata Capital initial public offer. According to a money control report, the financial services firm is likely to file the draft papers by the end of March via the confidential pre-filing route. Tata Sons, the promoter entity, owns over 92% stake in Tata Capital, so that is an anticipated IPO that is likely to take off. India's coal production has crossed 1 billion tons. In a tweet, Prime Minister Modi has hailed India's achievement, emphasizing the country's commitment to energy security, economic growth and self-reliance. Prime Minister Modi also highlighted the significant role this achievement will play in driving India's progress and energy sustainability. The External Affairs Ministry informed Parliament that it has strongly registered its concerns with American authorities over the treatment of Indian deportees, particularly with respect to the use of shackles. US authorities assuring the government that no women or children were restrained on the deportation flights that arrived in India on the 15th of February and the 16th of February. MEA stated that this was verified by Indian agencies. Since January of 2025, 388 Indian nationals have been deported from the US. 295 more Indian immigrants could be deported soon, as per the government. The Supreme Court Collegium has transferred Delhi High Court Judge Justice Yashwant Verma to the Allahabad High Court. This comes after unaccounted cash was recovered from his residence last week following a fire incident. The Collegium has also directed an in-house inquiry into the incident. Ashmit joins us now with more. Ashmit, the situation puts the judiciary in a very difficult position. What can we expect now from here on in terms of action against the judge?
Well, a curious situation unfolding before the Delhi High Court that places the judiciary, the larger institution, in a spot of bother, in a predicament. Justice Yashwant Verma, a senior member of the Delhi High Court bench, heading a commercial bench, responsible for deciding a number of important cases, was away for a holy break. His house caught fire while he was away. Subsequently, the fire tenders were called and unaccounted cash to the tune of crores recovered from his residence. Now, the optics of it all, compelled a decision from the Supreme Court Collegium, which was in fact convened last evening. A decision was arrived at that he needs to be transferred to his home cadre, which is the Allahabad High Court. But the important thing is that various members of the Collegium, in fact, had voiced concerns that this entire issue, the optics of it, could tarnish the image, the reputation of the judiciary, that more firm action is required, and which is what in fact led to this extraordinary meeting of the Supreme Court Collegium that was held this morning. It lasted about 45 minutes. The Supreme Court Collegium, just to remind our viewers, consisting of the CJI as well as 4 senior-most judges of the Apex Court. And importantly, a measured call has been taken to institute an in-house inquiry. A committee has been constituted consisting of 3 judges. In fact, a report has also been sought from the Chief Justice on the Delhi High Court on some of these allegations, on these optics, on the recovery of this unaccounted cash. And what we're given to understand is that a further call will be taken by the Supreme Court Collegium on whether or not to continue with Justice Yashwant Verma or to ask him to resign. That decision will be taken only once a report has been filed by the in-house inquiry. So clearly, disciplinary action being instituted. There is, of course, however, the larger question that during the pendency of this in-house inquiry, what happens to the fate of Justice Yashwant Verma? Will judicial work be suspended? That's another key question that the Supreme Court, that the Chief Justice, that the Collegium will now have to answer.
सुप्रीम कोर्ट की कॉलेजियम बुलाई गई और उस कॉलेजियम से हमने ये फैसला लिया कि इनका ट्रांसफ़र पेरेंट हाई कोर्ट इलाहाबाद हाई कोर्ट में कर दिया जाए। हमारा इस पर सख्त ऐतराज़ है। हमारा ये कहना है कि क्या भ्रष्टाचार के आरोप को झेल रहे एक माननीय जज साहब, जिनको जो कहीं और पोस्टेड थे, वो यहाँ से जा चुके थे ऑलरेडी, उनकी अपनी स्वैच्छिक रूप से उन्होंने स्थानांतरण लिया था और वो यहाँ पर फिर भेजे जा रहे हैं। क्या हमारा हाई कोर्ट डस्टबिन हो गया है कि किसी जज के ऊपर अगर कोई चार्ज लगता है तो उसको इलाहाबाद हाई कोर्ट भेज दिया जाए?
Well, that's the Allahabad High Court Bar Association saying it is not a trash bin. Time for us to head to a short break. But up next, the Heathrow Airport in London shut down until midnight after a fire at a nearby substation caused a significant power outage at Europe's busiest airport. Over 1,000 flights flying to and from London cancelled. That and more when we return.
And moments ago, I also signed an executive order to dramatically increase production of critical minerals and rare earths. It's a big thing in this country. And as you know, we're also signing agreements in various locations to unlock rare earths and minerals and lots of other things all over the world. But in particular, Ukraine, we're doing very well with regard to Ukraine and Russia. And one of the things we are doing is signing a deal very shortly with respect to rare earths with Ukraine, which they have tremendous value in rare earth, and we appreciate that. I spoke yesterday with, as you know, President Putin and President Zelensky, and we would love to see that come to an end, and I think we're doing pretty well in that regard. So hopefully we could save thousands of people a week from dying. That's what it's all about. They're dying. After 45 years, the United States spends more money on education by far than any other country.
Well, let's address the global stories. More than 1,000 flights have been cancelled and at least 120 have been diverted at London's Heathrow Airport. This after a fire broke out near a substation, causing significant power outage at Europe's busiest airport. Emergency services were immediately deployed to the site, and airport authorities advised passengers to not travel to the airport. Sanjay Suri gets us the latest from outside the Heathrow Airport.
Massive disruption at Heathrow Airport here. The airport is closed for the day. We've been told it will be closed until at least midnight today. Well over 1,300 flights affected. That's both departures and arrivals. A lot of planes due to arrive in Heathrow in the morning have been diverted. The lucky flights have been diverted to nearby Gatwick, but others to Manchester, to Glasgow, and still others to Paris, Amsterdam, other countries. This is a massive disruption that's been caused by an outage of power supply. There's a power station about a mile from here in nearby Hayes, where a massive fire broke out overnight. We have been told there is no statement as of now on the cause of the fire, but that is what finished the supply to Heathrow. Thousands and thousands of passengers have been affected, and this is not going to be the end of the disruption by the end of today. This is going to lead to a massive knock-on effect because flights have been postponed or they are being cancelled even on days subsequently, and already there are warnings that passengers will face disrupted journeys for several days to come. And let's not forget, Heathrow is one of the busiest airports in the world, and last year it handled about 84 million passengers. So that's a lot of disruption, and this is going to lead also to other flight disruptions that affect flights not operating necessarily directly only to Heathrow Airport. So we can expect a great deal of disruption in days to come. Passengers have been arriving early morning hoping to get their flights. Others have come to pick up passengers. There are no flights taking off. There are no passengers arriving, no flights arriving here at all.
Sanjay Suri, many thanks there, reporting from outside of Heathrow Airport. So what impact will this have on Indian carriers? Madhiya standing by with the details. Madhiya, Air India the most impacted?
Well, right, several passengers, thousands of passengers travel from India to the UK, and it's not just the Indian carriers. Several foreign airlines fly Indian passengers from major Indian cities to London Heathrow. There's British Airways, Virgin Atlantic offering direct flights, then Emirates, Etihad, Lufthansa, KLM, Air France, Kuwait Airways, and others offering connecting flights. Among Indian carriers, only Air India offers a direct service to Heathrow from Delhi, Mumbai and Bengaluru. Indigo also offers Heathrow flights through its partner Turkish Airlines with a stopover at Istanbul. Now, Air India has 6 daily flights to Heathrow, 3 from Delhi, 2 from Mumbai and 1 from Bengaluru. And all these flights have been impacted, causing severe inconvenience to several passengers. The Delhi-London flight AI-161 was diverted to Frankfurt. Mumbai-London flight AI-129 was diverted back to Mumbai. All other Air India flights to and from London Heathrow for the 21st of March have been cancelled, and since some aircraft would be stuck at either sides, this could have a spillover effect like rescheduling and cancellations for tomorrow's flight schedule as well, and we may see the impact continue for the next few days as well.
All right, Madhya, many thanks for joining us. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment.
Likewise, by far, more money per pupil than any country, and it's not even close, but yet we rank near the bottom of the list in terms of success. But beyond these core necessities, my administration will take all lawful steps to shut down the department. We're going to shut it down and shut it down as quickly as possible. It's doing us no good. We want to return our students to the states where just some of the governors here are so happy about this. They want education to come back to them, to come back to the states, and they're going to do a phenomenal job.
Near-term perspective, it looks like the bottom has been made very clearly, and that's what our view would be from a market's perspective. And the reason for that.
It has been a great week for markets, with the Nifty up about 3.5%, the Nifty Bank about 4%, and the small cap index up 6.5%. The big question many are wondering is if this is a bear market rally and they can be powerful when they come, or have we really for sure seen the worst of the downside levels? The other question, of course, is if you believe the time is to be constructive, is what to buy. Financials is one consensus overweight, but what else? Lots of stuff moving around. Surabhi and I'll discuss all of this in this special conversation with Gautam Chachoria, Head of Global Markets, UBS Securities, and Vishal Goyal, Head of India Research and Banks Analyst at UBS Securities. Gautam and Vishal, great to have both of you gentlemen here with us on the program. Appreciate your time as always. Prashant, this side. Gautam, I mean, so as I prefaced this conversation with that comment about is the bottom in, not in, a bear market rally. So let's just get that out of the way, because I think that is the number one question in the minds of, I guess, most who are watching this broadcast?
Sure. Thanks, Prashant, for having us here. Look, from a tactical near-term perspective, it looks like the bottom has been made very clearly. And that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions, both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known. But that market definitely has bottomed down.
You threw in the word tactically. So it's like the caveat there. But do you think tariffs are the big one? That is the big one. So on the second. And so let's just get that out of the way as well. Do you think it's going to be a big one? It's going to be something to be, so they'll go max high tariffs. I mean, they've said they'll hand over a number to each country. And India has been mentioned many times as a high tariff country. So they'll hand over a number on the 2nd of April in terms of what's the cost of doing business with each country. And the expectation is that they will back down from that level. So it could be a high number to begin with, and then perhaps negotiations, etc. What's your sense? And how much of a risk is that for the broader market, Vishal? Sorry, that's for Gautam. Sorry.
Sure. Okay, look, for tariffs, we are less worried about how it impacts India directly in terms of what US tariffs are for India, because it's out in the media that they're talking in terms of a bilateral trade deal. So even if there's a tariff which is a shock on early April, it's quite likely that it followed a trade deal and we have a much more equilibrium state, which actually not necessarily bad for India in a bilateral sense. What we do worry about from a tariffs perspective is not the direct impact, but the indirect impact. If the tariffs in general leads to a global growth slowdown, it will affect Indian markets and Indian economy. So that's a much bigger worry for us rather than just the tariff rate which US imposes on India on 2nd April.
Yeah, absolutely. And I think that clarity will only emerge as the next couple of weeks unfold, right? Because on 2nd of April, we'll get a number like the US president has indicated, a number which will be the basis and the starting point of negotiation. And then we'll see how that goes. So it's not quite over as yet. Gentlemen, great to be speaking with you this morning. Thanks for joining in. Vishal, I wanted to get to you. So the big headline from Gautam has come in that the bottom has been made. Now let's talk some numbers as well. And he alluded to how the actions from the central bank as well as the government, how they've kind of reversed the cycle to an extent. What does that mean for anticipated earnings recovery in FY26 and how our valuations look?
Hi. So I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also our earning estimates are lower than the consensus, mainly because we feel a bit of credit cost is still to come, versus growth expectations also clearly in consensus numbers are slightly more benign. If you look at the earnings downgrade cycle, if the measures taken by the government and RBI starts, showing results in the first half of, next financials, we might see some upside in earnings trajectory. Otherwise, if you look at the construct of P&L for banks especially, you would see that with the repo cut, you will have margin declines, which would put pressure on PPOP. And therefore, if you look at the consensus earnings even today, which are higher than our estimates, they are still in single digits for most players. So that is what I think is in the numbers. In terms of valuations, yes, because the sector has been derating for quite some time, the valuations look reasonable. And we need to see whether FY27 can be a recovery year. I don't think FY26 first half may not be, second half potentially. Yeah.
So Vishal, let's get some of the numbers in. We're going to be ending FY25. I think the guess is anywhere between, I think, 5 to 7%. It's been a bleak year. What do your numbers look like for FY26? Like you're saying, maybe the recovery is more back-ended. And then FY27, at least at the Nifty level, do we get back to double digits earnings growth?
I think that's for Gautam.
Gautam, yeah. Gautam, why don't you take that?
I'll jump in. I think double-digit earnings growth for Nifty overall and markets overall in FY26, specifically given off a low base in FY25, should be a very reasonable expectation. And we do expect that to happen, including for the next couple of years. And as I said, look, the macro cycle itself, FY25 was a macro tightening cycle. FY26 is a macro easing cycle, both from RBI as well as central government. So that should be enough to have double-digit Nifty earnings growth.
Got that. Vishal, on banks and financials, I mean, actually it's been largely pretty tough, right? Accidents in banks, I mean, IndusInd is a case in point. MFIs has had a tough few quarters. NBFCs in many cases, I mean, it's not really made a lot of money except maybe a few. Gold finances perhaps is an exception. So largely a tough environment. Even though the view has been that it's a defensive space, valuations have been reasonable, and this has been true for the last, I think, almost at least 3-4 quarters now. Do you think money will be made here? And what are your top ideas in this space, Vishal?
Sure. So I think, as I was alluding to, that the earnings downgrade cycle, it's been there for last almost 4 quarters. We could be probably towards the end of earnings downgrade cycle, but I think little too early to preempt, because RBI announced a few things, the tax break, all these things generally should be positive. But on the ground, the data we see, it's not showing full recovery. Even if you look at today, the credit growth, loan, the deposit growth numbers are still, 10-11%. Liquidity is extremely tight, probably also because of advance, taxes. But we need to have easy liquidity once again and recovery on the ground. The data we track on delinquencies, overdues, that also says that stress is not over yet. And therefore, I think it's worth watching the space for the time being. In terms of the sub-segments we like large private sector banks. We continue to like them. We feel that the sustainable earnings growth of 14-15%.
But my question is, do you like them on an absolute basis, thumping the table and say, well, buy them? Or this is like you make a nice portfolio and you put some banks there. Nothing wrong with it, but is it an absolute call, absolute return call?
See, thumping the table, valuations are not come yet, and therefore it is a relative call.
Got it. Fair enough.
Even financials, I'm actually, if I could jump in, I'm a little surprised because large banks specifically, Vishal, they've been underperforming throughout the last phase of the bull market. But you still think that thumping the table valuations on large India financials have not yet happened?
See, I think maybe the definitions are different for thumping the table.
Maybe
but let me clarify. let me clarify. So a 15% to 18% return is still doable because they are generating good ROA and ROE. I would say 25-30% is a thumping the table, kind of valuation or upside. So.
No, absolutely. Point taken. We've got so much to discuss, so let's move the conversation along. Gautam, another sort of constant feature in this market has been more and more competition in wherever there is profits to be made, right? I mean, profit pools getting disrupted, at least in the future. Cables and wires, for example, right? A news story, 2 hits back-to-back, announcements from large conglomerates making an entry, large business groups making an entry. What's the view there, and what's the feedback that you're picking up? Any outright buys after the sell-off?
Look, any sector where competition increases does cause concern, both stocks as well as incumbents. But there are 2 things to look out for when we look at the framework for these scenarios. One is the level of unorganized sector. versus the organized. So if a new player is entering, it's more likely to disrupt the unorganized or also organized in a material way. That's the first framework. And the second framework is the time scale. How easy to disrupt in the next 3 years versus will it take 10 years? Like the role of distribution, the role of understanding the network, everything. Okay. So like if you look at cables and wires specifically, we do see some impact. But again, after the correction, the sector overall does look attractive risk reward for us from our analyst perspective. That's the framework we'll put it.
Okay, so that's cables and wires, and you're still keeping the faith despite all the, the worries about competition. Gautam, another space, and I want to get your thoughts overall on PSUs and then defense. And the question really is whether the old leaders can continue to have a place in this leg of the bull market, if you're saying the bottom is in place, and if we are in one. Because I remember you folks came out with a call on HAL, and I think the view on that specific call was that the market's concerns are maybe a bit misplaced and orders will still coming in. So what's the wider view on defense and PSUs?
So before I get into defense and PSU, one simple market level point I would overlay in that discussion is I think 2025, as the market has bottomed and recovers, will be very different versus what we saw last couple of years, where thematics and sector-driven big moves happened. This year will be, even within sectors, a lot of differentiation for stocks. Like you heard from Vishal, financials also is not just one simple basket. There are pockets which will do well, pockets which still are seeing stress and will take time. Same thing applies on PSUs and defense. So we don't have PSU basket as such, but all the relevant PSU sectors. So it won't be a thematic run for PSUs and defense. But within that, and it applies to even CapEx or consumption, we see specific stocks which are attractively valued now on a relative basis versus where they were a year back, or even versus where they were pre-COVID, and where we have strong visibility on catalyst and growth, not just for the next 6-12 months, but for the next 3-5 years. So wherever we have that visibility and comfort, then yes. But the broader sector thematic, that strategy will not work in 25, unlike last 2-3 years.
But you are seeing some of those opportunities in defense.
Absolutely.
And where else in PSUs? Like defense, some defense names meet your criteria. Where else in PSUs do you still see valuations, growth, etc.?
So more than valuation, growth specifically across, there's opportunities in the utility space, defense, even financials, a little bit here and there, like segments of financials which are catering to particular sectors in the non-bank PSU space. Again, there are opportunities, absolutely.
I think in published notes, HAL comes up as an idea, right? And I think oil marketing is another pack.
I can't comment on individual names, but yeah, oil marketing in general looks interesting, specifically given where the crude outlook also is.
Yeah, absolutely. I just want to make one point, Gautam, and Vishal said that he's still not seeing when banks are essentially front-facing or economy-facing, right? So it gives you a real good picture of what's happening. And this ties into the earnings growth point that he made. He said, well, credit growth is pretty sluggish. Still very sluggish. Maybe it'll pick up as some of the RBI measures start to work their way through the system. Is that the view, Gautam, the team, that it will happen? I mean, it's a H2 story in that sense.
It will happen. And then you look at global economies or Indian economy historically, credit growth doesn't drive or lead a recovery. Credit growth typically follows with a lag. There is activity picks up, and with the activity pickup, there is demand for more credit, and that's how credit picks up, not the other way around. The conditions for the demand and credit pickup has to be there. The condition for demand is the broader economic pickup. And for that to be supported by credit growth, there has to be sufficient liquidity in the system.
Well, that's very interesting. But we will continue this conversation. We have to take a quick commercial break here. So stay right here with us as we talk to the top team at UBS Securities India. Lots of sectoral views coming up in just a bit.
What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw the policy actions, both from the central bank and the government of India in the last couple of months, have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known.
The sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27, can be a recovery year. I don't think FY26 first half may not be, second half potentially. I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also, our earning estimates are lower than the consensus. If you look at the construct of P&L for banks especially, you would see that with the repo cut, you will have margin declines, which would put pressure on PPOP.
Welcome back. We are in conversation with the top research team at UBS Securities India, Gautam Chachoria and Vishal Goyal. Gentlemen, thanks very much for being with us here today. Let's talk about a few other spaces. IT services, Gautam. Again, I mean, we all know the news flow and headwinds, etc., which are well advertised. But what's the view now, the team at the UBS and the analysts at UBS? What are some of the ideas where you have comfort and one can make money? Go on.
Yeah, so again, that's a space where the overall macro is quite double-edged, if I use the word. There are elements which can surprise positively if the US growth picks up and spending picks up. But given where the valuations, etc., are, you have to be very, very selective. So we won't go out and say, okay, you overweight IT and go out in a big way, but also not so it's more of a neutralish call on the sector overall. But there are pockets, again, just like most sectors, where we have interesting buy ideas.
Vishal, I just want to circle back to financials for a bit, and we take your cautious approach on board. So really, you said you still like some of the large banks. Beyond that, let's talk about diversified financials. And there's so much going on. Look at the insurance space. There's almost a deal a day over there right now. And there's too much of regulatory change. There's the entire capital market space where prices have come off significantly. So do you see opportunities there? Let's take these two pockets first, insurance and capital markets.
Yeah, see, so on both this, especially capital markets first. Now, we have seen blockbuster years, right? Last 2 years. In terms of activity, in terms of all revenue, EPS. So we are probably seeing I don't want to say best is behind, but it's almost there was a great momentum for capital markets player. In the very near term, maybe it just consolidates or slows down. We are structurally positive on capital markets, like exchanges and other ancillary players in capital market which we cover. So we think there is a great structural opportunity in this place. It's just that one needs to be sure about the near-term slowdown or consolidation, which we are already seeing, right, in some sense.
That's capital markets. What about insurance? And what do these recent deals imply for overall interest and valuations in that space?
I think that space is also consolidating in terms of growth, right? and therefore we have seen the consolidation in valuation. We don't have very strong, bull or bear view there on insurance. We feel that it's a sector which again, especially the under-penetration of protection, will keep driving growth over there, and savings is the bit which keeps the volumes moving.
So let me ask you a more general question on NBFCs. Now, the fact that there is better liquidity, slightly easier norms, risk weights have been lowered, that's good overall for the NBFC space. But if I were to ask you to rank NBFCs in order of preference or priority, where one can expect better returns, how would you rank it? Let's say there are the housing finance companies, there are auto financiers. You could talk about the gold financiers again. They're a big deal coming in, private equity major coming in and thumping the table with some money. So tell us, NBFCs, what to pick and why are you convinced?
Sure. So let me give you the framework, about how we are thinking about NBFCs. First, like microfinance, we feel there are still pressures. Asset quality, headwinds are still there, especially given that few things are still, pending to be effectuated on the ground. Let's say the 3-lender norm. Plus, I'm assuming the situation in Karnataka, is still work in progress in our view. So microfinance currently, I think should be the bottom, in that table. Then I think if you think about consumption lending, which is unsecured lending or NBFCs who are, catering to those, there also we feel that there is still data is still suggesting, build up on the stress, in the sense it's not falling, like it's not improving anymore, not improving. It is staying where it was after increasing in terms of delinquencies. So that's also a segment there, we need to actually watch out for data. Then I think if we think about auto financiers, I think auto financiers is space we like, again, selectively names depending on the valuations, but that is a space where at least you don't have so much, problems as a microfinance or unsecured. It's slightly better place, and because they have fixed rate lending, they benefit the most from falling rates. So that is like one of the segment. We don't cover gold finance as of now.
Okay, got that. Just a couple of other sectors, and we'll round up the conversation. Gautam, on Telecom, what's the view? We reported yesterday that the government help, which many were hoping for in terms of the AGR dues after the court said no, perhaps won't come. Does your view change, and what's the house view?
We haven't changed any view or our stock preferences. I think the industry looks still attractive overall, though we don't have buys across the sector. We have a mixed bag of recommendations across the sector, including telecom towers and telecom service providers. So it's a mixed view, but overall the sector still looks attractive to us.
Okay, Gautam, if you can tell us what's the feedback from the global team at UBS, right? Because they'll be tracking all those tariffs, etc., much more closely than we are here. Is it going to be, will 2nd of April be a meaningful jolt to global growth? Because that is the channel through which India will get hurt, as you said, not directly.
So look, not just for India, even global equities is not priced in if it leads to slower global growth. So firstly, the impact of global tariff or these tariffs on global growth and the impact on markets, I think globally is not priced in. That's our house view. Will it lead, what kind of tariffs will it happen on 2nd April is anyone's guess. How long they last and therefore the impact on global growth and recession, again, too early for us to comment. But if there are meaningful tariffs which continue for a prolonged period, it will definitely lead to a growth negative surprise globally. And
but does the team at UBS globally believe that it's an ideological issue? They're ready for some short-term pain. So, are they leaning towards that view? Or is the view that, well, they can't see the market sell off too much, so they'll reverse and they'll go pro-cyclical once again?
Even that is too premature, right? Because one, there's a second order effect, which is how do different economies and countries respond to those tariffs? So one is it's difficult to predict what US president does on 2nd April, both in terms of degree and quantum. Second is how do different economies and countries respond? Like if there's a big tariff on India on 2nd April, will India wait for the trade deal to be signed and do nothing? or will India impose tariffs in retaliation immediately and continue the trade deal discussion, will have very different implications. If that we extrapolate globally, it makes it even more messy than it is.
So to sum it all up, I want to go back to the optimism with which we started, because Gautam told us the bottom has definitely been made for this market. Gautam, so what's the base case view? Nifty either December 25 or 12 months, whichever horizon you're looking at. What's the base case expectation? And leave us with, say, the top 3 bets or the top 3 segments through which you can play this leg of the recovery and the resumption of the bull market, if I can call it that.
So look, firstly, the Nifty should compare to 22,000 levels, not necessarily 23,000 levels. That's where the bottom was made. From that, Nifty should end up this year. Will it be double-digit returns, single-digit returns? Again, too premature. And that's why I used the word tactical in the beginning. Bottom made. Bull market is there or not is too early to say that. But sector picks, irrespective of what happens, at least in a relative way, definitely, is private banks, as Vishal highlighted. Consumption names selectively again, because there are enough catalysts around pay commission coming up next year and the tax break we saw this year. And finally, very selective names around the industrial basket.
All right, gentlemen, thank you very much for joining us here on this special program. And we'll touch base post-April. I think that is when we will really know what comes our way and in terms of whether tariffs are big, they'll sustain for a long time, the roadmap ahead. But it's interesting. Nevertheless, the message is clear, not thematic, not narratives, not sectors, but individual stocks within these sort of, spaces and sectors which will do well and perform in 25. So you've got to be very selective.
Hello and welcome to News Centre. I'm Parikshit Luthra. The Supreme Court Collegium has repatriated Delhi High Court Judge Justice Yashwant Verma back to his parent High Court after reports of unaccounted cash being discovered at his official residence. As per reports, the pile of cash was found when a fire brigade reached the judge's residence to douse the fire on March 14th. Justice Verma was out of town at that time. The matter was ultimately brought to the notice of the Chief Justice of India. The collegium comprising the apex court's senior-most judges has also ordered an in-house inquiry and said that Justice Verma's transfer to Allahabad High Court, his parent court, is only the first step of disciplinary action being contemplated. However, the Allahabad High Court Bar Association, in a strongly worded letter, opposed his transfer while emphasizing that they aren't a trash bin. The latest extraordinary sequence of events has put the judiciary in a spot of bother. To take this forward, I'm now joined by senior Supreme Court lawyers Sanjay Hegde, Dushyant Dave. Also on the program is Faizan Mustafa, Vice Chancellor at the Chanakya National Law University in Patna. He's also the founding Vice Chancellor of the National Law University in Odisha. Mr. Dave, if I can begin with you, what everyone is asking, is a mere transfer to your parent High Court enough?
Well, it certainly is not enough. And, like Prevention of Corruption Act applies to every government official. I mean, the moment this kind of situation develops, the officer is immediately suspended and criminal prosecution is launched. Now, judiciary is protected, unfortunately, to ensure independence of judiciary, and therefore it can't be done straight away. But I do feel that there are exceptions, and if this kind of money, if it is recovered as it is being said, we have no idea about the details. But if it is true, then I don't see why judges should not make an exception in this case and set an example, and not only withdraw judicial work from him straight away, but also perhaps permit the prosecution agencies to launch prosecution against him forthwith. So I think unless you do this, you see, there is no stopping at what is happening. I mean, this, I feel this is a tip of an iceberg. There is large-scale corruption in judiciary, and unfortunately, there are so many honest judges who are being maligned because of few bad rotten apples. And these honest judges, unfortunately, are not able to stand up and speak out against their colleagues, nor is the bar able to stand up and speak. So I think this is a good example or a good situation where I think Collegium should set a very, very strong example so that judiciary across the country really understand that this is going to be treated very seriously, and there will be zero tolerance towards it.
Mr. Dave, what I'd also like to ask you now, this incident took place around 11 p.m. on 14th of March. There was a call to the fire department, and the fire station 3 kilometers away sent a vehicle to douse the fire, which was in a storeroom. There was a pile of cash that was recovered. Fire department officials, police officials who were first responders saw it. Do you think it is very important to disclose the amount of cash that was discovered? Do you think the Supreme Court, the Collegium, should be making that public as well?
Well, I am sure the nation is entitled to know what is happening. I mean, judiciary is, part and parcel of our life. And if judiciary hides behind a cloak of secrecy, then I think nothing is left. So judges are, I think, obligated, Collegium is obligated, and the police should be permitted, and media should strive to find out from the police, because every day, you are seeing ordinary, cases of criminal cases where all prosecution agencies, including CBI, ED and all, selectively leak the information to the media, and media goes on reporting it left, right and center. So they might as well do it in this case. Nothing wrong about it, because it's important to know. They should also perhaps leak as to what is the link of this cash, probable link to a pending case before the learned judge, if it is true, or, with some other actors who may be involved in this. So I think nothing wrong. You disclose it every day to the media, especially, when it comes to the opposition leaders and critics. And therefore, you might as well do it now. I think nation wants to know, right, and nation should know.
All right, Mr. Hegre, coming to you, there have been reports how members of the Collegium, an in-house inquiry has been ordered, the judge has been transferred, but there are members of the Collegium who were of the view that stronger action was needed to send out a message of confidence, that people should be confident about the judiciary. What is your view, sir?
Well, everybody is entitled to have their views. Some may think that a mere transfer is not enough. Well, the transfer was only the first stage. It is going to be followed by an in-house inquiry. The other judges do not have the power of removal from office. That lies with Parliament in an impeachment proceeding, which is a solemn proceeding. Now, before you launch into that, there is going to be an in-house inquiry, and it may very well be that the Collegium then, based on the inquiry, suggests to Parliament that the judge concerned be impeached, if, in the meanwhile, the judge himself does not take corrective action. Often, this process of putting things out in the public domain is a process also of persuading the judge concerned to see reason. Let me first put it on record that Justice Verma was known to be a well-read, well-mannered, and an industrious judge. Mr. Dave and others may know more, but I have personally not heard of anything going largely amiss with Justice Verma. We do not know what the amount of cash was. We do not know whether there is any plausible explanation. I would, before rushing to judgment, would prefer to let the story play out for a day or two. I do hope, for the sake of the institution, that there is an explanation speedily forthcoming. If there isn't, I also hope that for the institution, that corrective steps are taken by the judge himself. The point is that irrespective of the individual, it is the institution which is larger, and the institutional integrity is a burden upon all people, whether from the bar or from the bench.
Right. What questions come to your mind, Mr. Hegre? As we were speaking about, this incident happened on the 14th of March. The judge and his family were not at their residence when this happened. The police and the fire department officials were the first respondents. Do you also believe that as per due process, as per laid down guidelines, the judge in question, Yashwant Verma, must have given a justification, an explanation to the collegium as well, or at least an explanation to the Chief Justice of the Delhi High Court?
I'm sure an explanation was sought for and something or the other must have been proffered. It may well be that that was prima facie not found satisfactory. Therefore, further steps have been undertaken. The questions that come to my mind, and I think these are legitimate questions, and it could have been not, suitable action could have been taken by the collegium themselves. What was the amount in question? Because if you keep quiet on the amount, all kinds of rumors float around. You also may remember that recently at a particular parliamentarian's seat, some cash was found. Now the amount there was so minuscule compared to that parliamentarian's known sources of income that everybody laughed it off. So today, what was the amount which the fire brigade prima facie thought they had found? And what that at least the public is entitled to know, and it should be put out as fast as possible so that unnecessary speculation ceases.
Does not happen. All right, sir. I'm going to give you a break till you have some water. Let me get in Mr. Faizan at this point. Mr. Faizan, thank you for waiting patiently. Now, as we were discussing earlier, the collegium has taken note of this. The matter had reached the Chief Justice. An in-house inquiry has been ordered. The judge in question has been transferred. How fast do you think the inquiry is going to take place? And by when do you think this is expected to get over? Because when it comes to corruption in the judiciary, this is a norm. This is a set formula by which investigations take place. How soon do you think a report would be submitted and a final action taken?
Thank you very much, Parikshit. First of all, I would say blame me. If you have bad judges or bad lawyers, we law teachers must confess that we have given them degrees and we have not been great teachers. We have not inculcated much needed values in lawyers and judges. So as a law teacher, I must admit that it's our mistake. Having said that, we have been trying to protect judges for a very good reason, that independence of judiciary is to be protected. Judges should not be easily removed. They should not be troubled with frivolous and motivated allegations. I'm not going into the details of Justice Verma and how much money was recovered. I entirely agree with both Mr. Dave as well as Mr. Hegre, but nobody stops Justice Verma from speaking. So he on his own volition can come forward and make a statement that this was a Nobody has taken away his right to free speech. Of course, an accused has a right to silence at trial, but there is no trial as of now. So he can speak if he wants. Now, our experience, Parikshit, of such cases is very disappointing. No timelines can be really talked about. There have been cases from Allahabad itself where a judge was not given a judicial work for over 13 months. No judicial work. And he was given the leave by the government and by the system. I don't know which kind of leave was that. There have been number of such cases where even attempts of impeachment did not lead to any conclusion. There have been political decisions in case of Justice Ramaswamy. There have been cases where, nothing much came out. As a result, many people within the legal fraternity today feel that our judges are not really held accountable. And this transfer thing is also very funny. If you transfer one judge, generally the transfer happens to Northeast, which means that the people in Northeast high courts don't deserve honest, impartial, and competent judges. And I agree with, Hegre that Justice Verma is relatively a good judge, a well-read judge, a reasonably good judge. But when you transfer somebody to the parent high court, this is a reward rather than a punishment, because generally people are transferred from the parent high court because there is something.
On that note, let me get in Mr. Dave also, Mr. Faizan. Mr. Dave, the Allahabad High Court Bar Association has put out a very strongly worded statement. The headline there is, "We are not a trash bin." How do you see this?
I think it's a correct approach. They are entitled to say that if a judge has been found, ostensibly involved in having unaccounted cash, which leads to presumption of some kind of corruption or some kind of wrongdoing, why should that High Court be saddled with such a judge? So I don't think it is right to transfer him like that. The collegium should have been very careful. They should have simply, withdrawn judicial work from him, and they should have perhaps persuaded him. I remember many years ago, one such judge faced, inquiry in Bombay or charges in Bombay. And then Chief Justice of India, Justice Ahmadi, very quietly called him and told him that, brother, if you don't resign, we have enough material to order prosecution against you. And he was made to resign. So I think that kind of a, neck is required. I think Chief Justice should have really, taken that kind of an approach rather than keep such a person into the system. Because I don't think, as Mr. Faizan Ahmed rightly points out, he should come out and explain himself. But what can he explain? I mean, if you have unaccounted money in your house, presumption is that it is your money. Unless you are harboring it for somebody else. So what can he come and explain also? And I don't think, my own feeling is that, although he was a good judge, and as I agree with both Hegde and Mr. Mustafa, but I have seen many judges who have been good in the past, in last 46 years, who are ostensibly good, but who are hiding behind that goodness into doing some things which are very wrong. And I have publicly spoken about these judges again and again over the last 25, 30 years. So I feel that, yes, he should not be sent to Allahabad. He should be simply asked to, step down, step away from the work, and perhaps persuaded or maybe cajoled or coerced into resigning by the collegium.
All right, let me now go across to Mr. Hegre. Mr. Hegre, now there are two things to it. Do you feel the entire method of investigating corruption in the higher judiciary needs to be revisited? Number two, now there are two bodies which have information about what has happened. One would be the local authorities, the executive, that is the police, the fire department, the law ministry. They would have information, first-hand information of what has transpired. They must have made diary entries of whatever was found, whatever happened at the spot, and possibly the reason for the fire as well. Secondly, you would have the judiciary, which has the information and explanation from the judge in question, and also maybe information from the government. What do you think can be done in future to bring more transparency so that there is confidence in the judiciary, and the average citizen of the country knows that in case there is corruption, it would come out in a very, very transparent manner. It would be there on the Supreme Court website, on government websites, and you would get to know exactly what's happening.
Well, it would have to be the judiciary to take a call. It cannot be left to the executive, because the moment you leave it to the executive concerned, you also run the danger that the next time a judge is hearing a sensitive case, at the same time, allegations can be procured or some kind of incident engineered. So therefore, the judiciary has seen to it that any complaints of this kind will not go unanswered. The judiciary has put in its mechanisms. Whether those mechanisms work fast enough, whether they are transparent enough, and whether they are sufficient, that is a matter of debate. But the responsibility of running a clean judiciary must currently vest with the judiciary. The moment you allow outside interference, you will have an imbalance where the independence of the judiciary may be impaired. As far as Justice Verma himself is concerned, it is for him to come out with an explanation precisely because people today think that there is no possible explanation, and that the process being drawn out like this, even if necessary, casts a shadow on the entire judiciary. To use a rather bad pun, this is an Agni Pariksha for the judiciary itself. How it comes out of
You're calling it an Agni Pariksha of the judiciary. Right. On that note, we're going to take a break. I'll request all our guests, Mr. Hegde, Dushyant Dave, Faizan Mustafa, to stay with us. We'll be right back.
Let's also talk about a few setbacks. The Rio 2016 Olympics, we didn't see that coming. It was such a big day for you, and you got injured at that time and you had to come back. What was going on in your mind at that time?
So I think after 2012 Olympic medal, and then after becoming world #1, and that is when next year, I think Olympics was in 2016, and I was ranked third or second or third in the Olympics. And before that, I didn't get any kind of major injuries. So I didn't have to really worry about कि कुछ major injury होगा या नहीं. I was just thinking about what is this kind of knee pain I'm getting. And I thought it's just a normal knee pain. Maybe it'll just go with some rest and I'll keep training hard. Of course, as I mentioned, we didn't have that kind of trainers and physios whom I could, or physios whom I could, get the knowledge out of what exactly is happening. Even maybe they were giving me, or maybe they didn't know that what exactly the injury was. So they were just like, you know, your thigh muscle is getting a little bit tight. So that's why your knee is taking a little bit more of load. So I think we'll just back up with the training for some days and it should be fine. But I think what mistake I did was I didn't go for an MRI, or I didn't try to think that maybe डॉक्टर के पास जाना ज़रूरी है, क्योंकि I was thinking शायद ये एक stiffness की वजह से I am just feeling some kind of irritation in my knee. But what happened was, it was just after taking rest for 3-4 days, again it was coming back. Again it was coming back. And I was, before going to the Olympics, I was like, I think I made some wrong decision here. You know, I should have gone to a doctor and done something, maybe just again check up about what's going wrong there. So I went to the doctor and I was like, sir, my knee is not good, you know, I don't feel good. And so I was like, just try and take another 2-3 days break. Maybe it should be fine after this. And I went to the Olympics and I was like, again, really excited to play the Olympics. It's my 3rd Olympics and I have to do really well. I've been winning tournaments. In fact, before the Olympics, I won the Australia Open as well, beating Wang Yihan, all the top players. And I was like, this time definitely, maybe last time I had bronze, maybe this time I can go for better medal. So all this kind of positive attitude and positive belief was there. But I didn't know that knee was actually suffering so much. And, you know, after taking break, I was feeling good for one day, but next day again the pain was there. In fact, when the pain came...
Time for a short break. Yes, and we are back now. Our focus on the case against Yashwant Verma, the Delhi High Court judge who has now been transferred as a result of a corruption inquiry that has been ordered. And this inquiry has been ordered by the Supreme Court Collegium, this in-house inquiry. And the judge in question has also been transferred. The next step is possibly, after receiving a report from the in-house inquiry, the concerned judge could be asked to resign voluntarily or face impeachment. Let me go across to Dushyant Dave now. Dushyant Dave, does the government have the power to order a CBI probe at this stage, or they will have to wait till the time the in-house inquiry of the collegium is over and till the time the Supreme Court orders any course of action?
No, I think I forget the citation of that judgment. Sanjay may remind me perhaps. But there is a judgment of the Supreme Court which has said that you can't proceed and prosecute judges without the permission of the Chief Justice of India. So I think perhaps it may be possible for CBI to approach the Chief Justice of India and seek his permission. I don't see anything. This process of impeachment is frankly a failed process. It has not been successful at all in any case. And therefore, and it's a very long drawn process, which does not really do well. If you have to send a powerful message, because there is corruption in judiciary, let's be very blunt about it. And nobody wants to talk about it, sadly. I mean, and I don't think that it's Faizan Mustafa Saab who should take responsibility for it. The rot has set into the society. So there is no, branch of the government, executive, parliament or judiciary where you don't see corruption. There is no part of even private life where you don't see corruption. Today you go to any club, any society, any company, you will find corruption. So corruption is unfortunately part and parcel of our DNA. And I don't think teachers should take responsibility alone. We all are responsible. For whatever reason, in the last 50, 60 years, we have lost our moral character, moral fiber completely. So I feel, and judiciary, if you have a corrupt judge or corrupt judges, then it strikes at the very rule of law, which is the basic structure of the constitution. And if you have corrupt judges, then justice is what is the biggest victim. You can't have corrupt judges. One corrupt judge is not, and there are definitely many more than one corrupt judges across the country. Everybody knows, nobody wants to talk about it. I have myself been, writing about it to Chief Justice again and again in open letters. You have sometimes media has published them, but no Chief Justice has had courtesy to respond. No judge to whom these letters were circulated had courtesy to step in and tell Chief Justice that we must stop the rot. So nobody wants to stick his out. Nobody wants to do anything. And therefore, I feel that collegium is singularly responsible for the rot that is set into judiciary, because they don't want to talk to independent lawyers. They don't want independent information. They only sit in this ivory tower, meet people who are willing to please them, and therefore they have no information. I mean, everybody knows what is happening. You walk in corridor of any high court or any court, you will know what is the state of corruption in courts across the country. So I think
All right. We've completely run out of time.
It should get special.
Yes, okay, Faizan Mustafa, very quickly, we've run out of time, but final comments from you, sir.
In 2022, the law minister told the parliament that in last 5 years, at the government's grievance portal, 1,631 cases of complaints of corruption were filed, which were forwarded to High Court's Chief Justices and Chief Justices of India. And nothing much has come out. And therefore, Mr. Dave is right that the rot has really set in everywhere.
Right. That's an important point, Mr. Mustafa, to sign off on. Thank you very much for joining us, all of you, Mr. Mustafa, Mr. Dave and Mr. Hegre. Important messages there. And as Sanjay Hegre was pointing out, perhaps this is an Agni Pariksha for the judiciary as well. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Practicing during the Olympics, I went to the doctor there and she gave me a cortisone injection as well to not feel the pain. But, it didn't really help me much. I think when I went to the physio over there, he was like, I think it's more than stiffness or a pain, or a normal pain. And I think you should go and get proper checkup done. And when I lost the match, in fact, I don't know with whom I lost the match as well in the Olympics there. I just was too much into my knee and the struggle which I was going through. And in fact, I was not even a single tournament in my career. I've not lost a match so easily. As far as I remember, I've always given tough fight, the good challenge to all the players out there. And I was like, how am I losing? What is this issue? I've taped the knee also very well. Still, I'm getting so much of pain. So after losing the match, you won't believe, from Rio, I booked the flight in the next 2 hours and I was back in India. I was crying, ranked second in the Olympics, and then you're having such bad knee pain. How could you even go? I'm actually cursing myself a lot more about it. So when I went to the doctor, Dinsha Padiwala sir in Mumbai, and he's one of the best for the players. So he told me, Saina, how did you even play with this pain? I would have cried to even push my knee a little bit, and you actually played 2 matches in the Olympics. I'm like, sir, I just wanted to win the match. I'm a fighter. I want to do well, and all I see is doing well for the country, doing well for myself. And he was like, yes, Saina, but after the MRI, it's not a very good news, which I'm going to tell you, because there is extra bone growth in your knee. And I have to tell you that there are 2 options now with you. Either I get it removed, or you continue with it and you see that after 3-4 months of break, maybe you will not feel the pain, or you might feel the pain. So it's up to you to take the option. And I was like, again, 3-4 months of break. And then again, we're not sure whether the knee will be all right or not all right. So I told sir, let us go with the surgery, and please, I want to get back and do well again. And I think after that surgery, initially 1 month I was so heartbroken, because I was like, I missed the chance of getting another medal, and so many people had so much expectations on me, and I didn't want to go to the gym. I didn't want to do anything. But I think thanks to my parents, they were like, Saina, we are going to gym. Do you want to follow us? Do you want to come with us? Please join us. And in that moment, you need, someone motivation to help you out. And I think parents से ज़्यादा और कौन कर सकता है, क्योंकि आप घर पे हैं, आपका knee taped है, and there's nobody else whom you can talk to. And बोलते हैं ना, difficult time में कम लोग आपके साथ होते हैं. And I think parents and my friends were the ones who were like, Saina, you will come back. You better start training. You will come back. And within no time, I won the Malaysia Open again in 2017. And then I got the bronze in the World Championship. I got the bronze in the Asian Games. So there was again so many good wins after that. But the big setback, what I got in Rio, was only that I think I should have done an MRI before going to the tournament. And I really feel bad for that, because I think it's completely my mistake, which, and I was young. I was 25, 26, and I was all like, I became world number 1. I was excited. I want to do well. So all in that excitement, maybe I just, ignored that part. But yeah, I think past is past, and I've learned a lot from that. Yeah.
Hello and welcome to On the Record with me, Shireen Bhan. Vedanta is gearing up for a demerger that will create 4 independent entities with a focus on aluminum, oil and gas, power, iron and steel and base metals. Vedanta's shareholders as well as creditors have already approved the plan, and the demerger process could be completed by the first quarter of the next fiscal. Chairman Anil Agarwal, in a letter to investors, said that each of the new companies has the potential to grow into a $100 billion company. He also compared Vedanta to a banyan tree while advocating for the demerger. He said, and I quote, "I've always found the trees that grow under the shade of a giant banyan tree often find it difficult to grow, but once you take them out and allow them to grow under the sun, they show remarkable growth and progress." End of quote. Chairman Anil Agarwal joins me now on the record. Mr. Agarwal, always a pleasure. Many thanks for joining us here on the program. So let me start by using your analogy of the banyan tree. As you go about this demerger process, Mr. Agarwal, do you believe that each of these businesses has strong enough roots to exist outside of the shade of the big banyan tree?
Absolutely, because if you see all our business, whether you talk oil and gas, tremendous potential in India, and we have a best anchorage. If you look at the aluminum, we completing 30 lakhs ton production, adding 30 lakhs ton more, huge potential. Zinc, if you look at zinc, which will be part of our main company, we are producing 1.2 million ton, going to produce 3 million ton. Copper is such an important metal. We are going to produce almost 500,000 ton copper. The growth on this, any country which developing to developed country goes, it all goes fundamental. We have seen is all about below the ground. Below the ground, we have a tremendous geology. I always say that. And today, the way the government is working on below the ground, because we need it, this is the transition material. To create the world better, you need this metal. Without this, world can't work, especially India. India is a developing country. So we are very excited about this growth and making these 4 companies separate, making a very professional management. They will take this company forward at a different level.
Well, speaking about taking these companies forward, sir, let me break up each of these businesses, and let's start by talking about the aluminum business, because that is a lion's share as far as your EBITDA is concerned. You talked about adding 30 lakh tons. By when do we expect this capacity expansion to take place? What's the time period? If you can share that with us. And also, in terms of growing the EBITDA, Q3 EBITDA was at 4,540 crores out of the total Q3 EBITDA of 11,280 crores. That was the contribution of the aluminum division. What can this be potentially post the kind of expansion you spoke to us about?
Yeah, I think each of our business will have the same level of EBITDA. We work on around 35% margin. All our product is about 35% margin. As far as the aluminum is concerned, all these products, what you talk about demerge, there is a growth of double digit, 15 to 16% growth on all our product. It's very difficult to set up these industries. Require a heavy investment, require huge technology, and it's not easy. So we are creating another 30 lakhs ton of aluminum production. We have acquired one of the largest bauxite mine, very high grade in Odisha. We are almost finalized the location to start. We are putting this with the renewable energy. This will be the first kind of aluminum production with green metal, complete green metal. Very exciting. The biggest part is with all this aluminum being used by SMEs, medium and small scale industry. they'll be making the wagon for the railway, bus for the transport, car needs 30 product of aluminum, transmission, anything you talk about, foil for air, defense, anything you talk about, India has not even touched a couple of percentage. It's going to be 50% consumption of this metal. What I'm looking at least 500-600 industry will be mushrooming with the support of aluminum.
You know, Mr. Agarwal, there's a fair degree of interest as well as what could the potential cost of production be, and whether we can see a potential reduction there as far as the cost of production goes, especially when we talk about the backward integration measures as well. So what could the potential reduction be as far as the cost of production goes?
We are looking at $400, $400, $400. $400 for the raw material, $400 for the power, and $400 for the processing. So it will be lowest quartile in the world as far as the cost is concerned.
Okay. What about the global environment today, Mr. Agarwal, and how that's likely to impact commodity markets, specifically things like aluminum and steel? We have, of course, seen an escalation as far as the tariff war is concerned. President Trump imposing tariffs, other countries retaliating with reciprocal tariffs. What does all of this mean now for commodity markets? How are you reading the developments?
We are watching, but we have a less impact, because we are domestic player. Our Indian consumption is so high. In any case, aluminum, US need. Aluminum does not produce basic aluminum. So they purchase a lot of aluminum alloy. And we are developing those alloys, and those alloys will be very important for them. So we are definitely watching. It is impacting to everybody. But as far as Vedanta is concerned, whether it's oil and gas, whether it's a zinc, whether it's a copper, whether it's a aluminum, we are worried about as a overall what will happen. But Vedanta will be less impacted.
Less impacted, you believe. We've also seen the DGTR, sir, recommend the imposition of a safeguard duty to the tune of 12.5%. That, of course, has to be ratified by the Finance Ministry. So there is still a wait and watch there. But what do you make of that? And do you believe that this is warranted at this point in time? And is this enough?
I think this is enough. Government is working very, very hard to make sure industry run well, and those days has gone where government used to take long time to take decision. Now government is absolutely there, and to make sure the government, the business, because we are heading towards $5 trillion economy, and we cannot take any chance to reduce the production, slow down the production. It is very, very important for us.
Yes, that certainly is the case. I also want to understand from you, as far as prices are concerned, if you can give us a forecast or an assessment or an estimate of where you believe prices are going to be across the board for each of these commodities that we just spoke of, whether it's aluminum, copper or zinc.
I mean, there is a short supply, huge demand. The warehouses are empty, and everybody is looking at. We have never seen premium on the aluminum what we see today. Highest premium in the zinc is the highest premium. Or gas. Can you believe that gas in India you can sell at $10? And same thing on the oil. So it is a time. It shows that how much is the consumption is increasing in India of this metal. So prices.
That's a big.
Yeah, go ahead.
That's a big statement, Mr. Agarwal. You're saying you've never seen the kind of premiums that you're seeing, whether it's aluminum, zinc or gas.
Absolutely. And this shows the growth in India, the consumption pattern in India. Of course, it has American what they are doing on the duty, it also has impact. But the consumption in India of these metal are growing like anything, 10%, all double digit.
All double-digit growth is what you anticipate. Let's talk about debt as well, Mr. Agarwal, and your plans as far as deleveraging at the parent level was concerned. You've been able to deleverage to the tune of about $1 billion. The average cost of debt is about 11% versus over 13% at the start of the year. If you can lay out for us what the debt reduction plan is from here on.
I think we are the lowest debt in terms of our peer group is concerned. You know, that total debt, if you look at, we are the parents about $4.5 billion, down the line about another $4 billion. So about $8 billion. Against this year, we are going to have close to $6 billion EBITDA. And in another 15 days, we'll be declaring that it's hardly any debt if you compare anything. But we have a full plan that will be completely reducing our debt on the parent company in 3 to 4 years' time.
If you can add a little bit more clarity on that debt reduction plan at the parent level over the next 2 to 3 years, you believe that you're very comfortably placed today, but if you can draw out the roadmap for us with a little bit more detail.
So in this year, 25, we are going to reduce $1 billion debt. 26, we are going to reduce another $1 billion debt. And 27, we are going to reduce $1.5 billion debt.
Okay, so $1 billion of debt reduction in 26 and $1.5 billion in 27. That's the plan at this point in time. What could be the potential risks at this point at all? You talked about demand surging, and that's of course the silver lining, but what could be the potential risks, Mr. Agarwal, that you're mindful of?
I have no risk in it. We have so much of, as I said, we work on 35% margin, at least all our business, and very few companies can have this kind of cash. The kind of debt, kind of dividend we give, the kind of appreciation what we have, kind of product we have, which have hardly any competition. It is a paying off this debt is a very, very comfortable, and we've been paying. We never have been defaulted ever last 30 years, and we are very comfortable with this. And this kind of debt, any company you look at peers, you have to have this kind of debt, which is comfortable.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube.
I also want to understand from you about the timelines now for the closure as far as the demerger process itself is concerned. The earlier target was Q4 of FY25. That's now gotten pushed to Q1 of FY26. Do you feel confident of being able to close things?
You know, I've seen the kind of maturity has come because how the world has grown with M&A. The kind of thousands of resolutions have been passed by NCLT, the way the government is supporting the judiciary, the regulator, everything is very well the kind they're moving, because this is very, very important. Time is the essence. So can you ever believe that is unprecedented? 99.5% creditors and the shareholder has supported this. So now it is NCLT will take a hearing. I can't give you exact date, but what we've seen the pattern into 4 to 6 weeks time, normally NCLT taking the time in general, whatever M&As is happening. So we should believe that it should happen in that time.
Okay, well, speaking of...
Go ahead.
Yes, you were saying, Mr. Agarwal.
Yeah, what I'm saying, see the advantage of the shareholder. This is a company for two people. One is the government and the shareholder. Government, the kind of revenue we have, I'll give you some figure. In last 10 years, we have given exchequer 5 lakh crore to the government. If you see the shareholder, how they created their value, in just 1 year time, they created 4 times value. And when this share become a 5 company, each company has a huge potential to grow.
Right.
And they've broken the debt and see the growth pattern. I think the government will be benefited. They are partner in all our business, around 25%. All our business partners, whether it's oil and gas, whether it's aluminum, anything you talk about, government is, whether it's a zinc, and government is a partner. They are the biggest beneficiary for us. 5 lakh crore has been paid to them. Going forward, I have a feeling the kind of revenue will be generated. This is the company which will have thousands of SMEs, which is the dream of our Prime Minister, will come in. This is the transition material. Without transition material, world can't move. The transition material is the one which is very important for the low carbon.
Yes. Yes, that certainly is significant as far as a lot of the consuming industries are concerned. But Mr. Agarwal, you were talking about M&A. Let me ask you if there are any plans to offload any assets, sell any assets at this point in time. Anything that's likely on the anvil at all?
No, steel was not our core business. Iron ore was very our core business. We are producing 1 million ton. We have a ESL, which is one of the best location and best company possible. It can comfortably produce 15 million ton of steel. That also electrical steel, special steel. If we get our price we will definitely consider. But as it is, the company is doing extremely well and they are making cash profit and we are very comfortable. But definitely, I would like to put that effort to my other business. If we get a right price, we might sell. At this point of time, that is our position.
If you get the right price, you may sell the steel business. That's the plan at this point in time. Mr. Agarwal, very quickly, if you can run us through what the aspiration now is as far as Hindustan Zinc is concerned, and given the fact that you're unlocking value at this point in time, whether you're looking at all at the possibility of unlocking value separately for silver.
Beautiful. No, if you look at the group umbrella, it's difficult for me to keep telling you what all we have. Silver was never been produced in India. We started producing. How difficult it could be. We'll be the largest producer of silver in the world. We'll be the largest producer of zinc in the world. We have a manganese mine. We are going to produce 1 million ton of manganese. Only other company produces is a government company. It is so important for the defense, for stainless steel. These all are critical metal. Today, I really appreciate the way the government has gone and opened up this critical metal. Critical metal, transition metal is a time for them to come up, to open up. I have always said two things. In India, very, very important is drill, baby, drill, dig, baby, dig. That's what our whole world is saying. If you look at the President Trump, or you look at Trump, and I was the one last 25 years, consistently, I have not changed my business. I always remain one business which is below the ground. And I've never gone into the consuming business, never gone for here and there, always remain anything below the ground because I knew I'm really looking at nationalists. How can I look at any country become a developed country only because whether it's America, whether it's Australia, whether it's the Middle East, whether it's Europe, only because they address the below the ground. Today, if you look at all Indian people are starting all over the world. The time has come that below the ground, what धरती माता हमने हमको दिया है, उसको हम बाहर निकालें, लोगों को बताएं कि हमारे पास खजाना है. सोना है, चांदी है, फर्टिलाइजर है, कोल है, कोल कहीं जाने वाला नहीं है. हमने शुरू से कहा है कोल इज वेरी वेरी इंपॉर्टेंट. हम लोग उसको वी हैव टू मेक सस्टेनेबल इज अ वर्ड. एंड टुडे टेक्नोलॉजी हैज कम वेयर यू कैन सस्टेन, keep our water, keep our air, keep our
Anil Agarwal was the OG as far as the drill baby drill slogan was concerned, as he's reminding us. He's been saying that for the last 25 years. But Mr. Agarwal, before I let you go, that $100 billion aspiration that you have for each of these businesses, by when do you hope you'll be able to grow them to that size?
No, if you look at our, we will be $40 billion revenue in 3 to 4 years' time. $40 billion, we don't work on the 35% margin. It's a phenomenal business. It's for the nation. We have nothing. 75% of my personal wealth has been pledged for giving back. This company is not going to run by a family. This company is going to run by top professional, top mind for the country on the having the best of governance. And we have to go through this because India has not seen this kind of ventures, this kind of development, and the trust is building. The government is trusting us, and this is the country for the entrepreneur. You are looking at Anil Agarwal who started, but like me, better mind than me, there are thousands of other entrepreneurs. And this is the first time I can see that the government is trusting them, the institutions are trusting them, and they are coming forward. So I'm very bullish on India, and I'm looking forward that government is giving a very focus on below the ground. Self-certification is very important in India. If you go to, you take income tax self-certification, excise self-certification, why all the approval can't be self-certified? The production is all about the production. And this is what we are looking at. For me, this is one example, but many more Vedanta, many more Anil Agarwal to come. And to create aluminum, zinc, anything we have touched, we are world class. My focus is in oil and gas. And my aim is time to come, I must produce 1 million barrel of oil. I've gone to Houston, invited everybody. And if you look at my Houston speech, what I talk about is a phenomenon. That's the country where 85% of oil and gas we are importing. This is a country we have a full of
Mr. Agarwal, we've just seen a big legislative change come in as far as the oil and gas sector is concerned, with the bill going through Parliament. You know, you talk about the aspiration of being able to produce 1 million barrels. Does that legislative change open up the game, so to speak, for a company like yours? And how close are you to being able to fulfill this aspiration that you have?
You know, this bill, what has passed, it is the most attractive place in India to come and invest and drill, baby, drill. I have seen it is a benefit to my country. I explained in detail in Houston to all the oil majors, and they all said, is it true? Is it true? Is it true? And I said, look, they have also said they are not going to fiddle around on changing the rule. That also passed into the parliament bill. So this is a country which need the hydrocarbon. Please come and invest. And everybody was coming with me, wanted to. India need at least 2,000 rigs running into India, offshore, onshore, and that will create massive job. Thousands of new industry will come. We can create another Houston in India. And India has a phenomenal, I'm a geologist, I know the kind of topography. They had the topography of my field. And they looked at all my field and told me, you should aim for 1 million barrel. And I couldn't believe it. And with this regulation, I must congratulate the government and especially the oil ministry, what they have done for India.
Well, the aspiration of creating another Houston right here in India, and you believe that that is possible now with the change in legislation that provides certainty and more predictability for the oil and gas sector here in India. Drill, baby, drill. That's the word coming in from Anil Agarwal there as he speaks to us about Vedanta's demerger plans and, of course, being able to unlock value across each of those businesses. Mr. Agarwal, always a pleasure. Appreciate you joining us here on the record on CNBC-TV18. We wish you the very best of luck with your plans. We will take a break here. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.
TV18 weeknights at 7 p.m.
And welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Markets post the best weekly performance in over 4 years, adding over 22 lakh crore rupees in market cap. The rupee gains for the 8th day sees its strongest week in 2 years. Manappuram Finance shares hit record highs after private equity Bain Capital signs a $1 billion deal to pick up an 18% stake along with an open offer for 26% additional equity. Bain Capital will get joint control of the company if the open offer goes through. Bajaj Finance shares hit record highs after Managing Director Rajiv Jain is elevated to the post of the Vice Chairman for a tenure of 3 years. Effective the 1st of April, Anup Kumar Saha has been named as the new Managing Director. Ola Electric admits that it has received notices from the government seeking response on discrepancies in sales and registration data. Says that 40% of the temporary backlog caused due to negotiations with vendors has now been cleared. Sources add that the Road Transport Ministry has sent a second letter to Ola Electric seeking further clarifications. Unaccounted cash discovered at the residence of Delhi High Court Judge Justice Yashwant Verma last week following a fire incident. The Supreme Court Collegium transfers him to the Allahabad High Court, directs for an in-house inquiry, concedes that his transfer is only the first step of disciplinary action being contemplated. The Allahabad High Court Bar Association opposes his transfer, says it is not a trash bin. The Heathrow Airport in London is shut down until midnight after a fire at a nearby substation caused a significant power outage at Europe's busiest airport. Over 1,000 flights flying to and from London cancelled. Air India diverts 2 of its London-bound flights, cancels the remaining scheduled daily flights. At least 90 killed in the last 24 hours in Gaza on day 3 of renewed Israeli strikes. Israel's military announces a ground invasion in South Gaza's Rafah. UNICEF says at least 200 children have been killed since Israel resumed its war on the enclave. All of that coming up for you in just a bit, but the market action of the day, the Lal Street posting its best weekly performance in over 4 years, adding over 22 lakh crore rupees in market cap. The Sensex and the Nifty rose more than 4% each. That's the story. About 200 points higher today for the Nifty. The Sensex up 550, 530 on the Nifty Bank, and the mid-cap index 700 points higher. But it's really the story of the recovery that we've seen through the week that Prashant joins us to take us through. Prashant, a nice bounce back for the markets, but is the mojo truly back?
For now, yes, Shireen. I mean, you know, markets were gasping for air, and some oxygen, some air has been let into the room, and I think people are breathing easy in that sense. You know, just consider this. We've had, today was the 5th straight day of gains, and we've not had 5 straight days of gains for 7 months now. That kind of tells you how tough markets have been over the last many months now. But, well, we are tracking the bounce and, of course, the distance from the highs, right? Both qualitatively and quantitatively as well. I'll start with the indices, the Nifty Bank, the mid and the small cap indices. So 6, 5, 10 and 12, 13% is the bounce on the Nifty Bank, mid and small cap indices respectively. But also keep sight of the distance from the top, the view from the top. 11% for the Nifty to go, and, I mean, much more for the mid and small cap indices from their respective highs. You know, this is just a slice of history. A 2-year cycle plays out. Sometimes, I mean, you know, looking at history is reassuring. And when you look at, well, you know, you get a sense that, well, these things do happen. And this is just, you know, to the February 2016 Brexit episode when the market sold off 23%. This is all on Nifty. The ILNFS crisis in 2018, 15% sell-off. COVID, of course, it was brief but sharp, 38% fall. Russia, Ukraine, 10%. And, of course, this one from the highs late last year was about 16% or so. We've retraced 6% so far. Now let's look at sectors, right? Pockets which have done the maximum from the lows. But again, to put it into context, I've also, for each of them, I'm highlighting how much to go from their all-time highs. Nifty Metals, CPSC, Oil and Gas, and Nifty Real Estate are some of the strongest sectors we've seen come up from the recent lows, which is approximately on the 3rd or 4th of March, depending on what sector you look at. PSUs, pharma are the others. PSUs, of course, as a space was the first to get smashed and lost about almost 35-40% of value, but strong recovery is what we've seen. The last 3 sectors essentially is where the trouble is. Autos, not very much at all, 21% off the highs. You got the FMCG space, still 20% off the highs. And the IT index, it did not correct with the rest of the market with the same ferocity. It sold off late, but no recovery at all. I mean, actually, we made a new low today. And of course, intraday, we did see a bit of a bounce, but 20% off here. Let's look at stocks. And for stocks, what I've done is I've looked at NSE 500 group, and I've taken the close of the March 3rd as the starting point, not the intraday low, but the close on the 3rd of March. And here again, you know, it's largely industrial / defense / capital goods / manufacturing, those kind of names which have bounced the most. So Garden Reach, Bharat Dynamics, HAL, Jyoti CNC, Chennai Petro, Adani Enterprises, you know, Kirloskar Engines, Avanti Feed, NLC India, the pipe maker Welspun Corp, JSW Infra, and KEC International coming through as well. There are some capital marketplace, K Fintech, Novama, and CAMS, and a sampling of some other names, DOMS, Amber, and Spark, etc., would show through as well. By the way, 40 stocks out of the NSE 500 are up over 20% from their lows on the 3rd of March. What has not done well at all is all consumption, consumer. Just a caveat, this also is because maybe they didn't fall, you know, the timelines are not same. Consumption has not been doing well for a while. So, I mean, these sectors peaked out much before the broader market, the rest of the market peaked out. But in any case, nothing very much by recovery. Devyani, Sapphire Foods, Metro Brands, Vedant Fashion, Campus Activewear are some of the names which come up on my list. There was Manyavar, which also Mapma India. The technology pack, Infi, LTI, Mindtree, Wipro, and Wipro are some of the IT names which have seen no bounce whatsoever. And of course, some stock-specific news-related stocks are here. There's IndusInd Bank, where there was this mini crisis, and KEI Industries got the space got sold into for the second time in about 3 weeks with the entry of a large player. But as I said, it's a bounce. It's a strong bounce. We just need to take it day by day, but maybe now week on week, now that we're really out of the depths of the crisis that we were in even 2 weeks back. Back to you.
The Ministry of Road Transport has sent a second letter to Ola Electric seeking more clarifications. This is in relation to the discrepancies found in Ola's sales and vehicle registrations. Parikshit is standing by now with more details. Parikshit, take us through what the MHA is asking of Ola and whether there has been any response to the queries raised so far.
Essentially, the queries that have gone from the Ministry of Heavy Industries and the Ministry of Road Transport, they're in the nature of trying to understand why is there a discrepancy between the kind of numbers the Vahan portal or the vehicle registration portal of the government is showing for Ola Electric, which is around 8,647 vehicles registered in the month of February, versus what Ola is claiming in a stock exchange filing that 25,000 vehicles were sold in the month of February. In fact, the government is also closely watching the NCLT case by Rose Murta as well. The Ministry of Road Transport and Highways is also asking, apart from asking about discrepancy in sales, why trade certificates were not there for different outlets in the country. And a second specific query has also been sent. In fact, we're learning from sources that approximately 3,500 outlets are there for Ola Electric, and most of them do not have valid trade certificates. We're also learning that inspections have happened not just in Punjab, Maharashtra and Madhya Pradesh, but also in Telangana, Himachal Pradesh, Odisha, Kerala, Jammu. So this seems to be a pan-India exercise. 36 scooters have been impounded in Maharashtra alone, 14 in Jabalpur, and this is because they were lying in premises which did not have valid trade certificates. In fact, Ola has been saying that they do not have a dealership model, and these scooters have already been purchased by the customer. There is no sale happening at these showrooms, but this has not cut eyes with RT authorities who say that there is no such thing as just displaying vehicles. If you have a commercial establishment, you have to have a trade certificate. Ola sales in February were around 8,647 that we reported. 11,781 vehicles have been registered in the month of March. The company is saying the temporary backlog in February is due to negotiations with the registration vendors. 40% of the backlog has been cleared, but clearly there are still a lot of questions for Ola as to why these trade certificates were not there. The company is still in the process of replying, and many of the RTOs are yet to get replies from Ola Electric.
The Supreme Court Collegium has transferred Delhi High Court Judge Justice Yashwant Verma to the Allahabad High Court. This comes after unaccounted cash was recovered from his residence last week following a fire incident. The Collegium has also directed an in-house inquiry into the incident. Ashmit joins us now with more. Ashmit, the situation puts the judiciary in a very difficult position. What can we expect now from here on in terms of action against the judge?
Well, a curious situation unfolding before the Delhi High Court that places the judiciary, the larger institution, in a spot of bother, in a predicament. Justice Yashwant Verma, a senior member of the Delhi High Court bench, heading a commercial bench, responsible for deciding a number of important cases, was away for a holy break. His house caught fire while he was away. Subsequently, the fire tenders were called and unaccounted cash to the tune of crores recovered from his residence. Now, the optics of it all compelled a decision from the Supreme Court Collegium, which was in fact convened last evening. A decision was arrived at that he needs to be transferred to his home cadre, which is the Allahabad High Court. But the important thing is that various members of the Collegium, in fact, had voiced concerns that this entire issue, the optics of it, could tarnish the image, the reputation of the judiciary, that more firm action is required, and which is what in fact led to this extraordinary meeting of the Supreme Court Collegium that was held this morning. It lasted about 45 minutes. The Supreme Court Collegium, just to remind our viewers, consisting of the CJI as well as 4 senior-most judges of the Apex Court. And importantly, a measured call has been taken to institute an in-house inquiry. A committee has been constituted consisting of 3 judges. In fact, a report has also been sought from the Chief Justice on the Delhi High Court on some of these allegations, on these optics, on the recovery of this unaccounted cash. And what we're given to understand is that a further call will be taken by the Supreme Court Collegium on whether or not to continue with Justice Yashwant Verma or to ask him to resign. That decision will be taken only once a report has been filed by the in-house inquiry. So clearly, disciplinary action being instituted. There is, of course, however, the larger question that during the pendency of this in-house inquiry, what happens to the fate of Justice Yashwant Verma? Will judicial work be suspended? That's another key question that the Supreme Court, that the Chief Justice, that the Collegium will now have to answer.
सुप्रीम कोर्ट की एक कॉलेजियम बुलाई गई और उस कॉलेजियम से हमने ये फैसला लिया कि इनका ट्रांसफ़र पेरेंट हाई कोर्ट इलाहाबाद हाई कोर्ट में कर दिया जाए। हमारा इस पर सख्त ऐतराज़ है। हमारा ये कहना है कि क्या भ्रष्टाचार के आरोप को झेल रहे एक माननीय जज साहब, जिनको जो कहीं और पोस्टेड थे, वो यहाँ से जा चुके थे ऑलरेडी, उनकी अपनी स्वैच्छिक रूप से उन्होंने स्थानांतरण लिया था और वो यहाँ पर फिर भेजे जा रहे हैं। क्या हमारा हाई कोर्ट डस्टबिन हो गया है कि किसी जज के ऊपर अगर कोई चार्ज लगता है तो उसको इलाहाबाद हाई कोर्ट भेज दिया जाए?
Well, that's the Allahabad High Court Bar Association saying it is not a trash bin. Time for us to head to a short break. But up next, the Heathrow Airport in London shut down until midnight after a fire at a nearby substation caused a significant power outage at Europe's busiest airport. Over 1,000 flights flying to and from London cancelled. That and more when we return. Well, let's address the global stories. More than 1,000 flights have been cancelled and at least 120 have been diverted at London's Heathrow Airport. This after a fire broke out near a substation, causing significant power outage at Europe's busiest airport. Emergency services were immediately deployed to the site, and airport authorities advised passengers to not travel to the airport. Sanjay Suri gets us the latest from outside the Heathrow Airport.
Massive disruption at Heathrow Airport here. The airport is closed for the day. We've been told it will be closed until at least midnight today. Well over 1,300 flights affected. That's both departures and arrivals. A lot of planes due to arrive in Heathrow in the morning have been diverted. The lucky flights have been diverted to nearby Gatwick, but others to Manchester, to Glasgow, and still others to Paris, Amsterdam, other countries. This is a massive disruption that's been caused by an outage of power supply. There's a power station about a mile from here in nearby Hayes, where a massive fire broke out overnight. We have been told there is no statement as of now on the cause of the fire, but that is what finished the supply to Heathrow. Thousands and thousands of passengers have been affected, and this is not going to be the end of the disruption by the end of today. This is going to lead to a massive knock-on effect because flights have been postponed or they are being cancelled even on days subsequently, and already there are warnings that passengers will face disrupted journeys for several days to come. And let's not forget, Heathrow is one of the busiest airports in the world, and last year it handled about 84 million passengers. So that's a lot of disruption, and this is going to lead also to other flight disruptions that affect flights not operating necessarily directly only to Heathrow Airport. So we can expect a great deal of disruption in days to come. Passengers have been arriving early morning hoping to get their flights. Others have come to pick up passengers. There are no flights taking off. There are no passengers arriving, no flights arriving here at all.
Sanjay Suri, many thanks there, reporting from outside of Heathrow Airport. So what impact will this have on Indian carriers? Madhiya standing by with the details. Madhiya, Air India the most impacted?
Well, right, several passengers, thousands of passengers travel from India to the UK, and it's not just the Indian carrier. Several foreign airlines fly Indian passengers from major Indian cities to London Heathrow. There's British Airways, Virgin Atlantic offering direct flights, then Emirates, Etihad, Lufthansa, KLM, Air France, Kuwait Airways, and others offering connecting flights. Among Indian carriers, only Air India offers a direct service to Heathrow from Delhi, Mumbai and Bengaluru. Indigo also offers Heathrow flights through its partner Turkish Airlines with a stopover at Istanbul. Now, Air India has 6 daily flights to Heathrow, 3 from Delhi, 2 from Mumbai and 1 from Bengaluru. And all these flights have been impacted, causing severe inconvenience to several passengers. The Delhi-London flight AI-161 was diverted to Frankfurt. Mumbai-London flight AI-129 was diverted back to Mumbai. All other Air India flights to and from London Heathrow for the 21st of March have been cancelled, and since some aircraft would be stuck at either sides, this could have a spillover effect like rescheduling and cancellations for tomorrow's flight schedule as well, and we may see the impact continue for the next few days as well.
Let's now talk about Ajayta Shah, the founder and CEO of Frontier Markets, who was chosen to share her inspiring journey on Prime Minister Narendra Modi's Twitter account on the occasion of Women's Day. Her story of grit evolves around empowering women by making them digitally savvy. My colleague Rashna Thandrajani spoke to her on the sidelines of the Mumbai edition of Future Female Forward Season 3.
So it's quite honoring to actually be one of 6 people chosen out of millions of incredible women that I think are doing phenomenal work. But to be one of the 6, to get to represent the work that we do for rural India was an honor. Being a part of the PM's platform means that everything that we stand for Future Female Forward means that we can actually take it to the next step, because now Bharat India is saying it, Vikshit India is saying it, National India is saying it, but also global is saying it, because it was endorsed by the Prime Minister himself, which means that the world is now recognizing the power of female.
Right. You've also been an FFF awardee last year. We had you last year. We have you here today. In this 1 year, your experience in female leadership, of course, you do a lot for India. How would you want us to remember your legacy?
One is that, first, I'm a big fan of Future Female Forward for a reason, because I do think that it's the right platform that has enabled me to work on showcasing our work quite well. I've been a part of CNBC-TV18's 25th anniversary, even at Davos, the year before I won the World Economic Forum. So I realized that it's been a journey for me, and having this kind of leadership come together is very important. What am I celebrating in the last 1 year? I won the Schwab Award. I won the Female Icon Award. We scaled from 10,000 women to 35,000 women entrepreneurs today, crossing over 5,000 villages, reaching over 1 million families. We've gotten the Prime Minister's blessing. Hence, now we're looking at a vision of really impacting 1 million women's lives by reaching out to 100 million families by 2030. Now, these numbers are daunting and they seem really hard to reach, but when you have the right platforms, you have the right leadership, you have the right partners, and of course you have the right endorsements, things can happen.
Right. Like we were speaking earlier, you were one of the 6 women who were chosen to run this account. How was your experience like?
You know, it's one thing for me. I mean, I've spent 20 years working in rural India, and I've always been convicted on saying investing in women and bringing them a technology platform and helping them become the service providers of rural villages is a very important thing. However, it's taken a long time for people to understand this can happen and how should it happen and why should it happen. Having the Prime Minister give me his handle and letting me get an opportunity to showcase 2 things. One, we have the Prime Minister's faith, because he ultimately chose us, which is a big opportunity to unlock the potential of government partnerships in a very big way. But 2, it opened an incredible universe of just citizens and other outlets getting to understand the power of who rural women entrepreneurs are. And then 3rd, of course, again, humbled and honored that I was chosen of 1 of 6 out of millions. Honored, humbled, excited, and I'm just hoping that now that this has happened, given this platform, given the charter that we just all agreed to sign with some of my favorite people on stage, I would say we have a lot to do, and now it's about action.
One message you'd like to give to young girls who are looking up to you?
Yeah, I mean, it's really fun to see the youth, and I always say I started when I was youth. I'm now not.
Well, not by the looks of it. Not
youth, not by the looks of it. But I would say that believe in yourself, see your purpose, understand your passion, trust in your power. For me, the most important thing is that women are fundamentally structured with their power for purpose, their power for resilience, their power for partnership, their power for vision, and fundamentally their power to act. And if we understand this correctly, then anyone that has a dream or vision in action, understand you already have the right tools. You just need to find the right partners to make it happen, and we're all here to support it.
Right. Thank you so much, Ajita, for joining us.
Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment.
And moments ago, I also signed an executive order to dramatically increase production of critical minerals and rare earths. It's a big thing in this country. And as you know, we're also signing agreements in various locations to unlock rare earths and minerals and lots of other things all over the world. But in particular, Ukraine, we're doing very well with regard to Ukraine and Russia. And one of the things we are doing is signing a deal very shortly with respect to rare earths with Ukraine, which they have tremendous value in rare earth, and we appreciate that. We spoke yesterday with, as you know, President Putin and President Zelensky, and we would love to see that come to an end, and I think we're doing pretty well in that regard. So hopefully we could save thousands of people a week from dying. That's what it's all about. They're dying. After 45 years, the United States spends more money on education by far than any other country, and spends likewise by far more money per pupil than any country, and it's not even close. But yet we rank near the bottom of the list in terms of success. But beyond these core necessities, my administration will take all lawful steps to shut down the department. We're going to shut it down and shut it down as quickly as possible. It's doing us no good. We want to return our students to the states where
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. Ola Electric admits that it has received notices from the government seeking their response on discrepancies in its sales and registration data, says that 40% of the temporary backlog caused due to negotiations with vendors has been cleared. Sources say that the Road Transport Ministry has sent a second letter to Ola Electric seeking further clarifications.
Unicommerce has completed its acquisition of the remaining 57.24% stake in courier aggregation platform Shipway. The SaaS e-commerce platform acquired a 42.76% stake in Shipway on December 17 last year for a value of 68.4 crore rupees.
Early-stage venture capital firm All In Capital has launched its second fund with a target corpus of 200 crore rupees and plans to invest in 50 more businesses over the next 3 years, issuing initial checks of up to 5 crore rupees and providing follow-on investments to select high-performing startups.
IASO, an AI-driven speech therapy company, has raised $500,000 in a pre-seed funding round led by Malpani Ventures with participation from angel investors. With this funding, IASO will develop AI-powered digital therapeutics.
Perplexity AI is in talks to raise funds at an $18 billion valuation as the NVIDIA-backed startup looks to grow and capture soaring demand for its search tools. Reuters reported the company has discussed raising between $500 million and $1 billion in the round, the report added.
Those were the headlines we've been tracking you from the startup world. Now, as China's BYD broke the internet with the unveiling of their 1MW charging technology for cars, India's Xponent Energy also took to X to showcase their technology prowess. In a tweet, the venture showcased its 1 megawatt rapid charging technology for buses and also announced plans to launch the world's first 1.5 megawatts rapid charging technology for EVs later this year. To elaborate on all of these plans, joining me now is Arun Vinayak, co-founder and CEO of Xponent Energy. Arun, congratulations. You're proving that India can build and own all layers of EV tech. Take us through the significance of building India's first megawatt rapid charging technology. And you're actually doing this on standard off-the-shelf cells, raising the bar globally.
Hey, thank you so much. Thanks for having me here today. We think in India, we've really solved the vehicle problem to a huge extent and with EVs. We're doing a great job on renewables. So we're solving for the grid, but everything in between seems to be unsolved, and that's something that we're focusing on. Energy in EVs is a two-sided problem. It's both batteries and charging. You got to get both right to ensure that you're able to charge fast. You have batteries that last long, and we think solving for energy is really what's holding back mass adoption for EVs. No one's questioning how good the vehicle is anymore. Really, questions are about charge time, battery life, where do I charge, where's the network? So that's our focus at Xponent. And I think 1 megawatt charging allows us to deploy buses and trucks along the highways. And commercial vehicles consume 70% of energy in India. So if you really want to move the needle sustainably, and if you really want to go away from oil imports, we have to electrify commercial vehicles.
All right. Arun, like I mentioned earlier, you've also announced that Xponent Energy will be launching the world's first 1.5 megawatt rapid charging technology later this year. What markets will you address first, and how do you see this leap in technology changing the future of EV charging in India?
Yeah, so both the 1 megawatt and the 1.5 megawatt is really focused on long-haul intercity markets like buses and trucks, 20-tonner, 40-tonner trucks, and long-haul buses like the one you've seen in the video. As the battery sizes change between different categories, the power levels on the charger also needs to go up and down to ensure that the vehicle can still be charged in 15 minutes. So hence, we're launching the 1.5 megawatt for even longer distance buses, which need a larger battery.
All right. In August last year, Arun, Xponent partnered with Veer Vahan to introduce the rapid charging intercity bus, the Veer Mahasamrat EV. What is the kind of impact this collaboration has made so far?
Yeah, so last August was just the unveil. We didn't really have many people test the vehicle back then. In the last couple of months, it's been fun to have the vehicle on the road, get people to actually come see the vehicle charging. That's always fun to see how people start with disbelief and that this whole tech was built in India, and now they're sort of quite excited to see that, hey, this whole thing's available right here. We're looking to launch this commercially with customers in the second half of this year.
Okay. Within just 2 years, Arun, you've expanded to 5 new cities. Xponent Energy is already running 1,700 plus EVs and has completed over 3.5 lakh rapid charging sessions. What do you think has contributed to the rapid adoption, and what more do you plan to do to scale up this impact?
I think we're just getting started. I think 700 vehicles are very small compared to how many vehicles are on the road. So there's a lot to do both with new vehicle sales, installed vehicle sales, installed vehicles, and how do you sort of really quickly move this entire commercial vehicle base to electric. And I think we've done less than 0.1%. So today, I think what we've done is just a proof of concept. That we've got vehicles on the road for the last 2 years, proving the tech out, proving the life of this technology out, and the reliability of this technology. Now we've got a lot more OEM partnerships. So this year is probably going to be a big year for us with respect to more city expansions, launching a few new categories. And of course, OEM partnerships that will, of course, scale this.
What are these new categories that you're planning to launch?
Yeah, of course. Like I said, until now, we really did mostly three-wheeler cargo, these that ran e-commerce, etc. Three-wheeler passengers, a large focus, large category. It's a 5x larger market. So that's something which is really good. And of course, like the bus that we just talking about. So these are new categories.
Arun, you've spoken about the need for India to catch up with global leaders in cell material science for EVs. How do you plan to address this challenge, and are there any developments that you're excited about on this front?
Oh, yeah, I think material science is still something we're so far behind in India, right? across the range of materials, and cells fundamentally a material science problem. We don't even make regular cells in India today, so forget about making advanced cell chemistry. So I think there's a lot to do to catch up there. Today, Exponent, what's unique about us is we use a regular cell and charge it up in 15 minutes. In some sense, because we're forced to do that, right? And it's cool, we figured it out. But at the same time, there was no access to better cell chemistry or better cell partners locally. And definitely China is leading the race here, and there's a lot for us to do to catch up here. Cell is not a technology problem. A startup like Exponent probably not be able to solve it. It's a large capex, it's a manufacturing problem. So, the government, a whole bunch of large companies are already focusing on this. I think it's a matter of time we get there. Yeah.
All right, Arun, one final question before I let you go. With Tesla's anticipated entry into the Indian market, how do you think it will impact the local EV ecosystem? And what opportunities or challenges do you foresee for Exponent Energy in this evolving landscape?
Well, yeah, I think it's definitely going to set the bar higher for everyone to compete harder. The subsidies have already gone away. So, it's already pressure for OEMs and technology partners to think harder, create more value. And I think with companies like Tesla coming in, a huge fan, of course, of Tesla and the products they've built. But I think India's electrification journey lies in two-wheelers and commercial vehicles. It's not in passenger cars. It's not in premium luxury sedans, etc. Right? So, which is why we are very conscious that what commercial vehicles need in India is fundamentally different. The energy ecosystem and the energy solutions that commercial vehicles need very different from what a passenger car needs. Like, you and I buy a car, we're going to park it at home, we're going to charge it at home, we can afford a large battery. Things are much simpler, much easier to electrify the passenger vehicle market. But like I said, if India needs to be self-reliant on energy, if we need to really solve for sustainability and solve for the environment, it's all about commercial vehicles. 70% of the oil is used there. So that's what we are focused on.
All right, Arun, on that note, I'll have to wrap up our conversation, but keep raising the bar. And thank you so much for joining us on Startup Street today.
Thank you so much. Absolute pleasure to be here.
And on what's brewing today, Rungsons Aerospace, a Tier 1 partner to major global aviation and aerospace OEMs, has bagged 300 crore rupees from ValueQuest Investment Advisors. Based in Mysuru, the company provides satellite communication systems, airborne thermal management solutions, and fluid distribution systems to global aerospace companies. Joining me now to outline the firm's growth blueprint is Pawan Ranga, the MD of Rungsons Aerospace. Pawan, thank you so much for taking time out and being here with us on Startup Street. Before we get into the details of the fundraise, right, if you could sort of take us through the kind of solutions and products that you have on offer and sort of, put it in layman terms for us to understand.
Yeah, thank you. Pleasure to be here. Basically, when our Honorable Prime Minister told us that we have to be Atmanirbhar, self-reliant, I took it to heart. We set up a product development company, and I was wondering what we should develop for the Indian Ministry of Defense. Realized that a lot of the airborne cooling systems, actually close to 95% of it was imported. So we started developing airborne cooling. Basically, when you sit in an aircraft, passengers need to be at a comfortable temperature, but so do the electronics, so does the engine. So we provide the cooling systems and solutions for aircraft's airborne systems. And while we were developing that, we said, look, why don't we even do communications? And so we got into SATCOM solutions, very interesting satellite communications. Basically, on the commercial aviation side, you use SATCOM for internet, for any kind of communications. And then the fluid conveyance system was a very interesting one. It is a very unique space, very few players in the world. We had an Israeli company come in and propose this, that we set up this competence in India. And basically, if you strip open an aircraft or an engine, you only see tubes and ducts. So and we decided that we'll do that. And over the years, I'm very happy to say that we've become Tier 1 to most of the global aerospace majors.
Right, absolutely. And you have a whole host of clients, both in India and around the world. If you could give us a sense of the kind of clients that you're catering to, and what do you think India needs, and what does India need to do to boost the domestic ecosystem for aerospace firms like yours?
Look, the first thing is, I think aerospace manufacturing is a very unique precision engineering thinking. So I think India needs to build a culture of getting things first time right. A culture of manufacturing very critical components, that have a lot of complexities. This culture will come only over time with practice and with more and more companies coming into this. Now, the opportunity is there. It's an opportune moment because a lot of the Western aerospace companies are really not finding the engineering talent required in the West. And they were historically looking at China, but now due to geopolitics, China is out. So India happens to be in a perfect position to leverage that opportunity. I think building this culture of core engineering-driven manufacturing will also help the domestic ecosystem. Because historically, we've done fairly simple manufacturing. So I think that is going to really benefit the Indian ecosystem as well.
Sure, absolutely. And you've raised this 300 crore rupees to expand your operational capacity as well as look at new business areas, right? If you could take us through how you're going to spend these funds and, which are the companies that you're looking at for strategic acquisitions with the funds that you've raised? Is there anyone that you're in talks with? Give us a sense of what your plans are on that front.
Look, organically, we are experiencing significant growth on all three verticals to put things in place. This year, March end, we will probably end up with a 94% growth. Next year, we have a visibility for a 120% growth. So we need a lot of organic expansion. The money will go into both R&D as well as manufacturing and engineering team build-up and infrastructure. But, I believe that, this is a window of opportunity. Not too often will you be in a position where you can provide more and more solutions through a risk mitigated scale platform that you can establish for aerospace majors around the world. And we've done that. Now our customers are like, what else can you give me through this? You're able to give quality, you're able to absorb new technology. So give us more. And also when I went to the US, when I look at the US and Europe, I see so many companies with core technologies not having a proper succession option. So we're taking these two opportunities, trying to bring different competencies together. So to give you an example, aircrafts need to reduce its weight. A lot of what we do now is metal manufacturing. We are now trying to see if we can do non-metal composites and composite critical detailed parts. Not even a single company today does that in India. And this can't be done organically. It's a very long gestation. So we said, let's go to the US, let's go to Europe, pick up a couple of companies through acquisitions. And that's the journey we're on. We are in talks with a couple of companies. Unfortunately, I've signed NDAs with them. But these are very interesting targets, having some core competence, core technologies that I think will benefit the Indian ecosystem as well significantly.
Absolutely. And if you could quickly tell us in 20 seconds, we're running out of time, take us through the revenue picture, how much you're currently clocking. You're saying you're looking at 95% growth by the end of this year. And which part of the business are you seeing the most demand for?
Actually, we're seeing demand across the board, both with the Indian Ministry of Defense and with the global aerospace guys. So the growth is very well balanced. We're going to be about a 250 crore company next year going into 25-26. But what's interesting is that we have over 1,500 crores of order book already with us. So we're very excited about the journey for going forward.
So strong order book there. All right. Pawan, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you. Thank you so much.
On that note, it is time for us to head into a short break. But coming up, India's homegrown QSR brand, Wow Momo, enters the noodle segment with Wow Noodles. We put its founder on the hot seat to know how the company plans to shake up the instant noodle market. Stay tuned.
Here are so happy about this. They want education to come back to them, to come back to the States, and they're going to do a phenomenal job.
Near-term perspective, it looks like the bottom has been made very clearly, and that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known.
The sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27, can be a recovery year. I don't think FY26 first half may not be, second half potentially.
Welcome back. You're watching Startup Street. QSR brand Wow Momo expands its FMCG portfolio, enters the cup noodle segment with Wow Noodles. The company claims with its range of desi Asian flavors, it is set to revolutionize the instant noodles market. Wow Noodles to be available across all quick commerce, online channels and stores across 200 plus towns and cities. The venture aims to hit an annual 100 crore rupee business within 24 months. And to tell us how, joining me now is Sagar Daryani, the group CEO and founder of Wow Momo. Also joining me is Arundhati. Sagar, welcome back to Startup Street. After the packaged Momo category, you've now ventured into cup noodles. What is the big impact you hope to make here? And how do you balance running these two arms of the FMCG business? How do they complement each other in terms of brand growth?
Thank you, Shruti, for having me. Long time. Basically, we've at Wow always believed in multi-channel, not omni-channel, right? So when people come to your restaurant, it's an occasion. When people order food in at home, it's an occasion. And also having your favorite food at home is an occasion. So I think very excited with this launch. I think it's a brand extension. I think, having your favorite food available everywhere across the shelf and giving the consumer the convenience, which is what we all thrive for, being a new age business. I think we are very excited. I think the frozen food business, the packaged food business has become a 5 crore monthly business. It's been a super success, super hit. Rather, we've also started exporting these momos. But what I'm really excited about is the Desi Asian flavor of kappa noodles. I think the idea is very simple. All your best sellers, how can you have it conveniently available for the consumer to have it as per their convenience, have it on the go? And like I said, the platforms are very similar. It is the same FMCG team, which is now focusing on modern trade and most importantly on quick commerce. And I think quick commerce for us is 52% of our revenue. So I think the focus is set. We are also there available on flights, on airlines. We are there in Akasa Air. We are there in Air India Express. So very soon entering SpiceJet. So very, very excited with this launch. I think it's a much needed brand extension. I think it just helps you to grow from all verticals of food. I think we stand for health, hygiene, happiness. So it's just bringing that happiness to the consumer.
Absolutely. Hi, Sagar. Arundhati here. Speaking of cup noodles, it's a very, very crowded market, right? So what are you doing on your end to sort of stay ahead of competition? How many flavors have you launched? And, sort of what makes you stand out?
So at WOW, I think we've always believed that, we want to create something, we want to be a category creator, whether it was momos, whether it was desi Chinese. So I think the flavors are all new, a lot of innovation with the flavors. So we have khao sui. No one has done khao sui before. We have a thukpa. I mean, our veg and chicken thukpa are our best sellers at WOW Momo. We have a Chinese bhel, so the chatpata desi Chinese gets its own bhel. So we've got around 5 flavors available in veg and non-veg to be topped up by Chinese. We've given a lot of focus to Korean because we feel the K-pop culture, we feel the TG, which is now eating onto us, the young TG. We catch them young and we want to grow with them. So the people who will help you to churn out revenue in the next 10, 15 years is what we are targeting. I think very excited because the kappa noodle market is a 14,000 crore market, out of which kappa noodles is only 400 crores. I mean, noodle market is 14,000 crores, but kappa noodles is 400 crores. So can we be the category creator? I mean, we all have grown up eating Maggi. You can't replace Maggi in India. We all are big fans of Maggi. But can you be the next best alternative to Maggi, giving the desi Indian flavors, giving people what they want is what we are striving for.
All right. To being next to Maggi. Sagar, like you mentioned earlier, WOW Noodles is already available on major quick commerce platforms in over 10,000 stores, also in in-flight menus of airlines. How has this partnership with airlines impacted brand awareness? And if you could share some insights into how your omni-channel or multi-channel strategy has helped drive rapid growth and distribution.
So I think for us, the FMCG business has grown by 100% year on year. And I think even for the coming financial year, we plan to grow at 100%. So a 60 crore ARR business should become a 120 crore ARR business by the time we end the next financial year. I think what it does is that, we were not impatient. We had a blockbuster launch where we were completely ready with the product. We were ready with all channels of availability. I think when we launched frozen momos, I think FMCG was a new elephant in the room. We did not know a lot of nitty-gritties because QSR operates very differently, FMCG operates very differently. But we have a professional team in place, and I think the team chalked out, had learnings from what we did in frozen momos, and then when we were ready to launch the noodles, it was, wait, build a strong foundation, don't rush it up. But when we went all out with more than 1,000 locations. And the good thing is that, we're very conscious about the spends that we do on marketing. So our ROI, our throughput has been super high. And I think we're in the right buying cycle when we launch this product. And we're hoping that in a year's time, today, when we launched the product, we were doing a 1 crore monthly revenue in the very first month. I think by next month, we should touch 2 crore monthly revenue from just kappa noodles. So to get to a 8 crore monthly revenue, which is an aspirational number of 100 crore ARR business in 2 years' time, we feel it's very much doable. I think it's the agility and the nimble-footedness of QSR put together with the frugality of FMCG is what is helping us. I think it's definitely helping the brand to grow because I think people are now relating to WOW being a household name. People relate to it, being a brand to go for convenience, for comfort food. And very soon we'll be launching gluten-free momos.
And if you could, Sagar, if you could quickly tell us, you're also looking at expanding internationally with Lulu Group in the Middle East, right? What has led to this and what's next for WOW Momo's international expansion plan? If you could quickly tell us in 20 seconds.
So 20 seconds, okay. So we are now there across the GCC, Dubai, Abu Dhabi, Sharjah, Qatar, Oman. I think for us, exports is going to be a big churning out mechanism for this business. We're now looking at Singapore, we're looking at Australia. So yes, exports will be very big for us. We're setting up a new plant in Taloja in Maharashtra, which will have capacity to produce 1 million momos a day only to cater to FMCG. So very excited with the path that we have. We've built the back end, we've built capacity. Now it's for us to put our heads down and execute.
All right, Sagar, on that note, we'll have to quickly wrap up our conversation, but wish you all the best with all your growth plans. And many thanks for joining us on Startup Street today.
Thank you so much.
And with that, it's curtains down on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates continue right here on CNBC-TV18.
You're watching CNBC-TV18. It is now time for the big newsmaker, the big CNBC-TV18 exclusive. The news coming in from the insurance space. Allianz is set to exit the Bajaj Insurance joint ventures 24 years after they got into an alliance. Bajaj Finserv and Bajaj Group promoter entities will acquire 26% from Allianz in Bajaj Allianz Life and Bajaj Allianz General Insurance for 24,180 crore rupees. The transaction will give the Bajaj Group 100% ownership in both Bajaj Allianz and Bajaj Allianz General Insurance, as well as the life insurance business. Joining me now to talk to us about the road ahead post the exit of Allianz is Sanjeev Bajaj, the Chairman and Managing Director of Bajaj Finance. Sanjeev, many thanks for joining us here on CNBC-TV18. It hasn't come as a surprise. This was anticipated. It's also been a fair amount of an overhang as far as the businesses were concerned. But finally, this 24-year alliance, this 24-year joint venture partnership has come to an end. I want to understand from you to start with, Sanjeev, how prepared are both businesses for this exit at this point in time?
Shireen, good morning. And let me start by saying that this has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. Once again, reinforcing Bajaj Group's commitment and belief in the India opportunity. As far as both our companies are concerned, these are managed by very well qualified boards and by senior teams that have been with us for very long periods of time. And hence, we see no change at all at any operational level. Our partnerships will continue to be the same. Our distribution continues to be the same. Products are the same, so no change on the ground.
So no change at all on the ground as far as operation is concerned, Sanjeev. But let me ask you whether you are going to scout for another partner, whether that is at all something that you would like to even consider at this point in time, or do you believe that going solo now after this 24-year arrangement is the preferred route for you?
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running. Both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Okay, so going solo, that is the route forward. That's the road ahead. Let me also ask you about the possibility of listing, Sanjeev, because this has been the regulator's nudge to industry as well, that large insurance companies need to consider a public listing as well. With this eventuality out of the way now, is that an imminent possibility for you?
Well, as you mentioned, Shireen, correctly, the regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well, given the significance of this current action with Allianz exiting the insurance companies. It will take us some time for the rebranding once we get all the regulatory approvals, etc., etc. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator and put out a path forward.
But, you know, indicative timeline, Sanjeev, and I understand that you are going to go through this process of Allianz exiting, which will, of course, require the rebranding as well as other regulatory approvals. Number one, by when do you anticipate all of that getting done? And two, you know, what could a realistic, practical timeline for an eventual listing be? Are you working towards an FY27 kind of scenario?
I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. As you know, both the companies are very well capitalized. Our solvency positions are the highest in the industry. The businesses have not really needed external capital now for over 10 years. So we have truly built two businesses that are balancing top line and bottom line, focused on customers as best as I think is possible in this country without being immodest about it. And hence we are in no hurry. Yet we understand the nudge from the regulator. So in a suitable time, the board will consider this, and once it comes out with clear direction, we will actually share it.
Okay, we'll wait to hear from you on that. But Sanjeev, a little bit about what happens now as far as Allianz is concerned. And I know that you don't really have a say in that any longer. But what we did see from Allianz in its press release last night was that it's going to use the proceeds to make strategic bets in India and look at opportunities in India. I just want to understand from you, is there any kind of a cooling off period that's been factored into this arrangement, into the agreement between you and Allianz as they exit?
And the answer to that, Shireen, is that once the first part, the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussion, the negotiations have been such that it's created a win-win on both sides.
And just to understand that, so you're saying that once that 6.1% is done with, Allianz is free to tie up if it wishes to with any other Indian insurance company, any other Indian promoter, if it so desires?
Very much so. Along with that, technically the JV agreement falls away, the name change happens and stuff, but yes, in effect.
So how do you see the competitive landscape? It seems pretty clear that Allianz is going to be in India, who we don't know quite yet. But how do you see the competitive landscape emerging post this transaction ending and the possibility of another transaction starting?
You know, there are two ways you can look at this. There are 50 insurance companies, so there will be a 51 in what is a crowded and competitive space. We have seen that for the insurance companies started in the last decade or so, it's not been very easy to build scale profitably just because the large companies are doing a great job. On the other hand, our own long relationship with Allianz tells us that they're a high quality company, and we would welcome a sane competitor, a high quality, measured, conservative competitor into the market to just help balance the market. But I think it takes some time for them to get in, assuming that's what they will finally do. I've also read the press release like you, and it takes time to build a good quality business.
Well, speaking of building a good quality business, Sanjeev, I want to understand what the growth appetite and the growth aspiration is for both businesses from here on. IPO is a separate matter altogether, but let's talk about growth. It's been a relatively slower year in comparison to what you've historically seen. What's the expectation and the anticipation from here on in terms of growth?
You know, the general insurance business is very much an asset-led business, and since we've seen a slowdown in asset purchases, you've seen that industry slow down to 10-12% growth. We've been growing a little faster than that, but also with a key eye on being fair to customers and on profitability. On the life insurance side, the last 7 or 8 years has seen Bajaj Allianz Life significantly outgrow the market with a set of new relationships on distribution, new products, and building top line and bottom line quite well. Given the significant change that happened last year with surrender values, it has been an opportunity for us to rejig again our focus and look at growth with a much higher level of profitability, and that's what the team is currently working on. So I see both the businesses growing at healthy levels at or a little higher than industry levels in the coming years. Keeping in mind also that, we're going through a significant period of global uncertainty. India is one of the few markets which is still managing to grow 6+%. And I think that's something for us to celebrate. But of course, plan how can we get to 7, 8, 9%. And I'm very confident that you will see this in the coming decade. And for low penetration industries like insurance, it's going to be a great decade ahead for us.
Well, you believe that it's going to be a growth decade ahead for the insurance sector, which continues to be underpenetrated. But it's also happening at a time where the FDI regime for the insurance sector has changed. And ostensibly, that's the reason I would imagine that Allianz has decided to exit this 24-year partnership, Sanjeev. So did it eventually boil down to the fact that they wanted majority?
Very clearly, I think that's something that you have to ask Allianz and have them answer. But as they have said, India continues to be on the strategic radar for them, and we'll hear more as they move ahead.
Do you believe that we are likely to see more foreign players looking at the India opportunity, specifically the India insurance opportunity, now with this FDI regime change and 100% FDI now on the table?
I think they should, because when you look at, again, as I said, the companies in the last 10 years, most of them have stayed small. They are not able to bring in the right amount of capital. They end up then cutting corners to build growth. We need good quality players, because keep in mind, insurance is a long-term business. It's a business with a very high level of risk. You get your risk assessment right, you can have one large incident in the general insurance space that can wipe out your capital, get you bankrupt. On the life space as well, guarantees, long-term guarantees have been known to wipe out businesses. Hence, you need good quality promoters, companies that understand these businesses. Plus, we have such low penetration levels in India that it doesn't worry me at all that as Bajaj continues to grow, there will be the opportunity for many more players, because we need so many more Indians to get that security cover.
You said that there's unlikely to be any operational change at this point in time, Sanjeev. But it has been a partnership that's gone on for over 2 decades. So I would imagine that there will have to be a fresh roadmap of some sort that you draw up. And I'll ask you this in the context of another eventuality, which is on the anvil now. Rajiv Jain, 31st March is just round the corner. What do you believe is likely to be the role that Rajiv is likely to play as far as each of these businesses are concerned?
So firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade, and there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business, and the board will evaluate. As we know, his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon.
If I may, because this is something that the market and the street is watching very closely, and different scenarios are being painted at this point in time. I wonder if you've had a look at that. But, if you could give us some color and clarity on what some of the options are that you are exploring, that the board may consider as far as Rajiv's engagement post the 31st of March is concerned with the group.
Well, I think the board meeting is in 2 days. This is the NRC and the board that will decide that. I don't have any absolute right on that, so let's wait 2 days.
But he's very much going to continue to be with the group in some form or fashion, perhaps in an elevated form or fashion. 2 days,
he's fully committed to the group.
Okay, I'll leave it there. I did try, Sanjeev, but I also want to understand from you the contours of this transaction. By when do you think the 6.1% will be done, and the funding for the transaction as well, as far as the promoter group companies are concerned?
So again, Shireen, this requires IRDA and CCI approval, which we hope will come in the coming months. But naturally, we have to leave it to those regulators to decide. We will be in the process of applying now post yesterday's signing of the agreement. The funding is where of the 26%, a little over 1% will be bought by Bajaj Finserv, so that Bajaj Finserv then is in absolute control of both the insurance companies. And keeping in mind the speed with which we needed to and moved ahead, and the funding opportunities available, because Bajaj Finserv is a unregistered CIC, a core investment company. It cannot borrow. So keeping in mind that the Bajaj Group has lent support and reinforced its commitment to Bajaj Finserv and to the two insurance companies by Bajaj Holdings and one of our group companies, Jamlal & Sons, chipping in for buying the rest of the stake. So that is the current plan right now.
Sanjeev, if I can understand from you in terms of prioritization now, as you wait for the process of regulatory approvals to come in, what will the next steps be? I believe that you've also held an employee town hall this morning, I would imagine, to give clarity to internal stakeholders on what the future looks like. If you could share some of that with us as well.
It's a big event for us, and that's why it's our responsibility to reinforce our commitment, support as a group, as a board, as senior management, whether it's to our customers, to our employees, to our partners. And we've started that process from today, and that's why we had the town hall this morning. Our senior leaders will reach out now to all our large relationships, will reach out to the agents who've been supportive of us for over 2 decades. To give them the comfort that nothing changes. With our 74% ownership, I think that's reasonably obvious. But these are the times where we need to over-communicate, we need to reach out, we need to handhold if somebody has a worry or an apprehension. And we will do that in the coming weeks as we line up our funds as well, so that as and when approval comes, we can move ahead. Both Allianz and we are clear that we want to get this over with as soon as we can, so that we both go our own way into doing what we need to do. We are very excited, as I mentioned earlier, about the prospects about insurance in India. And with this additional flexibility that we have of 100% control of both companies in the group, it allows us to build these businesses with our own ambition, our own focus, our own entrepreneurship, our own assessment of risk.
And I'll pick up from that last point that you made about your own growth aspirations, your own ambition, as well as your own risk-taking ability now that it's 100% controlled by you. You said that you will, of course, try and deliver on industry-leading growth as you have been doing. But does the growth ambition, does the risk-taking appetite change now, Sanjeev, with you in full control? And if you can quantify that for us, what it could mean potentially as far as business outcomes are concerned.
When you look at both the companies, you will see a great balance in top line and bottom line. And this has been core to both partners. But naturally, each partner has their own priorities. You have one partner that works in a European environment where 2% growth is great. You have another partner that works in an Indian environment where 15% growth seems to be low. Now that there is one promoter running the show, we will review some of these opportunities going forward. I don't have an answer beyond that. The agreement has just got signed last week. As our board goes with the management into our long-range strategy plan later in the year, some of these things will evolve.
Yes, I would imagine that some of these things will fall into place. But if I may ask you two quick regulatory questions, Sanjeev, which of course the industry is grappling with at this point in time. One, of course, is the government and the regulators nudge as far as the bancassurance side is concerned, and the reliance or the over-reliance in the view of the government as well as the regulator on bancassurance. How do you see that impacting the sector, and what do you believe it could potentially mean as far as you're concerned? Do you imagine being a net beneficiary if the wheels were to be slowed down on that front?
Very clearly, we will be a net beneficiary because we don't have an exclusive tie-up with any bank. But having said that, our general insurance company has over 250 bank tie-ups, the largest in the country, even though we are not promoted by a bank. Our life company has, again, more than 50 partnerships with banks, and that's growing. But yes, as we open up distribution, it will naturally end up being beneficial to companies like us, which is not part of a banking conglomerate. I believe the interest and direction towards this should be based on what is right for the customer. Because on the other hand, you have also banks, they have their own ownerships, they have their own focus areas. So while in my own selfish interest, naturally as it opens up, it's great for us. If it's good for the customer, and I believe it is, it makes sense to open up. And most banks have opened up. There are just a few that are still closed. In addition, what's important is for us as an insurance company, we have de-risk distribution. So if you look at the business we get from banks, what we get from agency, what we get from direct channels, our own proprietary team is very well balanced. And this is something we have done in the last 7 or 8 years so that we are not reliant on any one large partner. Doing that makes you unnecessarily dependent.
Right. My other question, again, to do with the regulator, is on the possible capping as far as commissions are concerned. Again, nudging industry that, look, take self-corrective actions or we will have to step in. What do you make of that, and how do you believe industry is likely to respond?
So this is something that the regulator did a great job a couple of years ago by defining an overall cap on expenses, including commissions. And that is the right way to go. You don't want to be micromanaging below that. There are certain younger channels where we end up paying a higher commission, but we are still within the overall limit. When we go direct, we have no commission, but our expense costs are higher, especially the fixed cost of running a digital direct business. So if you micromanage, you end up losing on innovation. I think the overall cap has been a great direction that the regulator has put in place. There are still some smaller companies that are busting that cap. They have to fall in line and the regulator has to work with them. But overall, as long as you're within the cap, the policyholder is protected.
Okay, so before I let you go, Sanjeev, and we do appreciate you joining us here on what has been a busy morning for you. But before I let you go, I just want to reiterate that no leadership changes at either business at this point in time. Is that what you're confirming to us? And two, you spoke about a decadal opportunity for growth. Again, leave us with some color of what the decade ahead could potentially hold.
So clearly no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward. The next decade is going to see India moving from $2,700 to $2,800 per capita to 2.5 times that. We have seen in many parts of the world when per capita income crosses around $3,000, by and large, the savings required for somebody for security of the house, children's education, health, basic purchases are taken care of. And the remaining money ends up going into financial services. It goes into financial assets because those then end up being productive and give a higher return. And that is something that we're going to see in the coming decade. This is what gives us that confidence that this, driven by high quality businesses that are focused on the long term with solid teams, a significant focus on technology, leveraging the cloud, leveraging AI. And you've heard about some of the early stuff that we're already doing in AI is going to enable us to create competitive businesses going ahead.
Well, Sanjeev, it's been a pleasure. Many, many thanks for joining us and giving us some clarity on what the road ahead looks like. Important to note, Sanjeev Bajaj saying that they will go alone as far as the insurance businesses are concerned. They're not looking at bringing on a new partner post the exit of Allianz. No leadership changes at this point in time being envisaged, and the appetite for growth and for risk perhaps will be higher at the end of this. Sanjeev, many, many thanks. We look forward to having a deeper conversation with you as you crystallize some of your plans for the future. Appreciate you joining us here this morning. That's the Chairman and Managing Director of Bajaj Finserv, Sanjeev Bajaj, also clarifying that in 2 days a board meeting will take a call on Rajiv Jain's future with the group. Seems very clear that Rajiv Jain will be committed to the group, but what exactly the role will be is going to be decided by the board. That's the big CNBC-TV18 exclusive. We will take a break here.
Hello and welcome to a very special edition of Newsmakers. Global news on tariffs, finance, markets are rocking our world every minute. Today I have with me a newsmaker who can make sense of this ever-changing news around us. I have with me perhaps the most powerful woman banker in the world, the CEO of Citigroup, Jane Fraser. Jane Fraser has headed Citigroup from 2021 and has just completed a massive transformation of the bank, and at the end of it posted a 37% rise in profit in 2024 at about over $12 billion. And the second most outstanding quality about Jane Fraser is, even as the world around her asked their employees to come to work every day, Jane Fraser stood firm and said that employees can come 2 days to work and 3 days work from home. Flexibility for employees is her hallmark. So Jane Fraser, for all these qualities, congratulations and thank you for joining us.
Oh, thank you very much indeed for having me. It's wonderful to be back in this vibrant country at a very important time in the world.
Yes, I realize that you know more about India than most people, but what we want to know is about the United States. Our viewers are very confused about the way things are changing practically by the hour in terms of tariffs, in terms of financial markets. First, if you can tell us, how do you see the US economy evolving for the rest of 2025? There is a large group of stagflationists who believe tariffs will bring inflation and a smaller fiscal deficit will bring lower growth. Are you in that camp?
Well, we knew that President Trump was going to be a change agent. None of us anticipated, I don't believe, the extent and the speed of, and the pace of change that is occurring. And we're still at a point where there's a number of policy uncertainties which will get resolved and become clear in the next few weeks. So I think in that respect, we will all have more clarity about exactly how the policies will play out on the economic agenda. What we do see, I think, are two of the major headlines. That deregulation, from our clients' perspective, is certainly going to be pro-growth. I think the clients see an unraveling of some of the regulations that have been holding the economy, the competitiveness back, and that will certainly attract investment. Tariffs is really the big question globally as to exactly what will the nature of those be. We will find out in April.
Yes.
And at that point, I think a lot of clients, a lot of companies, a lot of investors are pausing to wait and see, and then we can determine what the impact on the economy will be.
So you're not
Hello and welcome to Global Eye. I'm Parikshit Luthra. The top global story we're tracking this evening: more than 600 Palestinians have been killed by Israeli forces since Israel broke the Gaza ceasefire earlier this week. According to the Hamas-run Gaza Health Ministry, the death toll has increased as forces continue their airstrikes and ground assaults in the enclave. The Israeli military has also said that ground invasion of southern Gaza is underway. The troops are also pushing into the northern and central parts of Gaza. Hamas has also said it launched 3 rockets at Tel Aviv in retaliation. This is the first time the militant group fired back since the ceasefire was broken. Let me go across now to Gideon Levy, Israeli journalist and author. Thank you very much for joining us, Mr. Levy. Let me begin by asking you, why do you think Netanyahu ended the ceasefire earlier this week?
I mean, there's no room for speculations. The facts are talking. Netanyahu's government has to pass the budget in the coming days, and his majority was very shaky, and that's the only, and he had to join Ben-Gvir, one of his partners to the coalition, the most extreme one, the most fascist one. He had to join him back, to bring him back to the coalition in order to guarantee a majority. And Ben-Gvir's condition was renewing the war. And now hundreds and thousands of people will pay in their lives in order to maintain the coalition of the State of Israel.
Right. Also, the defense minister said that if all hostages are not released and Hamas is not expelled from Gaza, then Israel will act with an intensity not seen before. What do you think the immediate plan is this time around?
First of all, there is no major plan. But it's very hard to imagine what can be worse than the first phase, and what kind of intensity it can be more than we did in the last 18 months, with almost 50,000 victims, most of them women and children. It must be emphasized. There is no plan. There is a plan to beat, to kill, to destroy, to distract, to make people starve, to make people die from diseases, to put all the people in Gaza in a horrible situation. That's the only plan for Israel. They know very well that what was not achieved in the first 17 months will not be achieved another round. Why would it be achievable now? Sorry.
Right. All right. I'd also like to ask you about Donald Trump. Right. Donald Trump has expressed his full support for this renewed Israeli offensive in Gaza. Why do you think Donald Trump is supporting Israel in this manner right now?
Why does the United States support Israel for so many decades? But this time it is crucial, because the first days of Trump in power were a bit promising, because he sent his envoy, and his envoy within hours convinced Prime Minister Netanyahu to implement the first phase of the ceasefire agreement. And those were very good and very promising news. But soon after, we realized that Donald Trump really couldn't care less about the fate of the Palestinians. And he practically gave a green light to Netanyahu to go wild, to do whatever he wants, without any limits, by the way, without any conditions. And those are horrible news for everyone in the world. But I wouldn't expect Donald Trump to be different. This is a statesman who has nothing to do with international law, with minorities, with justice, with human rights. Nothing of those talks to him.
Right. Mr. Levy, what I'd also like to ask you, Israel has often said that they would like to continue this offensive till the time the ability of Hamas to govern Gaza is completely eliminated and there is some other sort of authority which takes shape in Gaza. Do you feel that this goal is likely to be achieved? And the bigger goal, the goal with which the war began, was release of hostages. Do you think this particular offensive, this breakdown of the ceasefire, will lead to the hostages being released and complete control of an authority which is not Hamas?
It's really not a question of what I think. It's a matter of fact. Israel didn't release almost no hostage by putting military pressure on Hamas. Almost all the hostages who were released through diplomacy, through negotiations, and in an agreement. And that's the only way to release the left of the hostages who are still there. That's the first thing. As about bringing the rule of Hamas to its end in Gaza, again, 17 months and Hamas is live and kicking, and politically it is still as strong as it was before. Military, it's weaker, but another 17 months will not change it. It is impossible to do so, especially when there is no alternative to Hamas. Who is going to replace Hamas? Nobody has an answer to it. But in any case, nothing will happen without the approval of Hamas. Hamas is there. We may like it, we may not like it, but it's a matter of fact.
All right, Mr. Gideon Levy, thank you so much for joining us on Global Eye, giving us your view on the very sad state of affairs in Gaza and a prolonged war that we are looking at this juncture. We're taking a short break on Global Eye, but coming up next, Russia and Ukraine have agreed to pause attacks on energy infrastructure for 30 days. A special discussion when we return.
And moments ago, I also signed an executive order to dramatically increase production of critical minerals and rare earths. It's a big thing in this country. And as you know, we're also signing agreements in various locations to unlock rare earths and minerals and lots of other things all over the world. But in particular, Ukraine, we're doing very well with regard to Ukraine and Russia. And one of the things we are doing is signing a deal very shortly with respect to rare earths with Ukraine, which they have tremendous value in rare earth, and we appreciate that. We spoke yesterday with, as you know, President Putin and President Zelensky, and we would love to see that come to an end, and I think we're doing pretty well in that regard. So hopefully we could save thousands of people a week from dying. That's what it's all about. They're dying.
Welcome back. You're watching Global Eye. Russia and Ukraine have agreed to pause attacks on energy infrastructure for 30 days. President Vladimir Putin agreed to the deal during a phone call with US President Donald Trump. However, the Russian premier rejected an immediate and full ceasefire. Ukrainians President Zelensky also agreed to the truce deal on energy infrastructure following the call with Donald Trump. He called the call positive. However, both nations have stepped up aerial attacks. This comes as President Trump continues to reiterate his desire to bring an end to the conflict with the United States as a mediator. Russia and the US are set to meet in Saudi Arabia next week to discuss a possible ceasefire settlement. Let's get you a special interview now. There can't be peace talks in Europe without involving the European Union. That's the word coming in from James Lawless, Ireland's education minister. In an exclusive conversation with Jude Sanath, the minister said that the peace process in Europe can't just be left to Russia and the United States. Listen in.
I think that there have been some encouraging noises in the last couple of weeks. I do think that, again, we have to respect sovereignty and territorial integrity. And part of the international rules-based order that we support through the European Union and through the United Nations, and which has given the world relative peace for the last 50, 60 years, has been obviously broken in Russia. We think the invasion was completely illegal. Previously, Russia had seized Crimea as well, so that was kind of a taste of what was to come. Right. And it's positive that there are now talks towards a ceasefire. I know Ukraine gave a sort of offer that maybe they would stop sea and air hostilities. I don't think Russia's fully taken that up just yet, but maybe because I've been travelling, I may be behind. It's moving every day. I know that Trump and Putin are talking as well, but one thing I would say, just a note of concern on that, Zelensky has said nothing about Ukraine without Ukraine. I think is very fair. I think it's very reasonable, of course. And I would also say nothing about Europe without Europe, because ultimately Ukraine is part of the European landmass. That's true. And we cannot have a situation where there's a peace deal by two superpowers in Russia and the United States, and the entire European continent is out off the table. So because there is a worry about Eastern European states along the border of Finland, Poland, Estonia,
so
all the way
Europe
down.
has to be a participant in these talks.
Yes, because otherwise they're saying, well, who's going to decide our fate? So the European Union is itself a superpower, and I think that we need to be involved in those talks as well.
All right. But by and large, and in conclusion, do you feel that are we closer to peace than before as far as Europe is concerned, or do you feel this could be smoke and mirrors right now?
I actually think we are a little bit closer. I think that's for a couple of reasons. I think that the recent moves to engage talks and have maybe two-way, three-way talks, are progressing. There's been a couple of, I think it was very unfortunate what happened to Zelensky in the White House. I think it was no way to treat someone who's supposed to be an ally, but I think that that position has evolved again since, and that there has been engagement between Trump and Zelensky again. So it's positive that they're speaking again and maybe moving things on a little bit. I think also there's fatigue on both sides. I think that nobody wants to be at war. And I think that probably Ukraine has held out for a long time, actually with a smaller force very well. Russia was the aggressor. Russia attacked and launched the assault, but they had to be tiring as well. My reports that I hear tell me that people in Russia are getting very tired, and that the war is taking a toll on the economy and internally on people's morale as well. So look, that's understandable. Nobody wants to be at war. So yes, I think we are. I think that it shouldn't have taken this long, but I think we are getting closer to a peace. But I think that a long-term peace that respects territorial integrity, sovereignty, and complies with that international rules-based order is critical.
All right, that was Ireland's minister saying they are closer to peace than earlier when it comes to the Russia-Ukraine war. To take this forward, we're now joined by Ambassador Deepak Bora, former Indian ambassador to Poland, and Bohdan Nahailo, chief editor at Key Force. Thank you very much for joining us, gentlemen. Ambassador Bora, let me quickly ask you, do you think this truce when it comes to energy infrastructure between Russia and Ukraine is a positive step forward?
Thank you very much. I've just arrived at Bengaluru airport, so the video might be a bit patchy, but nevertheless, yes, it is a step forward, because the three things we've always talked about in this conflict, one is energy, second is fuel, third is fertilizer. The African nations, as you know, have suffered gravely. Excuse me, and they will welcome this. As far as energy is concerned, Russia is one of the largest suppliers of oil and gas, and if Ukraine continues to hit their refineries and so on, and the Ukrainians are using Western supplied missiles. All this is nonsense that these are manufactured in Ukraine because they don't have the capacity. Their armaments industry is zero at the moment. The Russians have obliterated everything. So certainly, if the energy deal goes through, it'll be better for the whole world, particularly for the developing world. So, I mean, let me put it to you like this, sir. You give me 30 seconds more. There is this group, there is this couple at the dining table, America and Russia. The menu is Ukraine. The Europeans are waiting outside for whatever crumbs they can find on the plates after the two main diners have left. The rest of the world is praying and hoping that something will emerge.
That's an important point. Stay with us, Ambassador Vora. Let me get in Bodan Nahailo, the chief editor of the Kyiv Post as well. Mr. Nahailo, what are your hopes for talks in Saudi Arabia next week? They will be very crucial after the present round of talks between Putin and President Trump and Zelensky.
Let's get down to basics and talk about realities. There's no ceasefire in the air, and there has been no ceasefire about hitting energy infrastructure. The Russians haven't followed up with it. They hit the very day that Trump and Putin had their discussion, the Russians hit Ukrainian infrastructure, and they've stepped up their attacks. There was a very heavy attack this night on Odessa, the very port that your esteemed ambassador says is so vital to the third world. The Russians are hitting it. They're destroying the grain corridor. And with all due respect, it's not simply, the Europeans are watching this feast of Russia and America. India is behaving like a scavenger. It is waiting for the pieces to drop from the table. It is buying arms from Russia, a war aggressor and war criminal. It is buying oil. You're not a neutral party. And stop pretending that this is just about the West and about Europe and about America. I remember being on Indian television 2 or 3 years ago, and then it was Washington was to blame for everything. Funnily enough, Washington is trying to stop the war, and it's Russia that is saying, no way, we want more territory, we want conditions on our terms, not Ukraine's terms. There's no respect for Ukraine's independence, sovereignty, territorial integrity. It's all about give us what we want. So far, Trump has used carrot and stick. He's given the carrot to Russia, the stick to Ukraine, and used sort of 19th century colonial tactics about forcing Ukraine into making a deal that is good for him. Ukraine's not going to buy this. Would India, if you had a war with Pakistan and China was telling you that we're dealing with Pakistan and India, please, behave yourself and do as we tell you, and we'll take a chunk of India also as part of the deal. Would you go along with that? You'd say, get lost.
Mr. Nahailo, India and the Prime Minister have been saying that this war must come to an end and diplomacy is the only way forward. So that has happened at multiple occasions, and Prime Minister has met Zelensky and conveyed that as well. What I would also like to ask you,
Mr. Parishkis, let me remind you that when Hitler invaded Europe, America didn't say to Churchill, give up, you don't have a chance against Hitler, you're losing so many people, just give Germany what they need. And this is what Russia wants right now. Putin is acting as a Hitler. He has taken a chunk of Ukraine, he's killing our people, and we are supposed to say diplomacy. What diplomacy? There's no Russian diplomacy, it's brute force.
All right, I respect your sentiments and I know your emotions as well, Mr. Nahailo. I'm going to come back to you. Let me also get in our guest from Russia who's joining us right now. Sergey, what is your view on the current situation? Strong words there from Bodan Nahailo on the situation, saying that Russia has been bombing targets, attacking targets in Ukraine. And there is no commitment to a ceasefire or bringing the war to an end. Russia wants to end the war on its own terms. How would you respond to that, Sergey?
Namaste. Thank you so much for inviting me into this panel discussion. First of all, I want to tell that the war is always a challenge for all humanity. We can see that after the special military operation, our nation, Russian nation, become more dedicated to our historical mission. Because what is the main quality of the nation? is not only land, history, language. The most powerful quality of the nation is unity. Unity. And right now we have unity. We have some spiritual mood to be together to complete our mission, which is a justice, which is a we can tell that like our historical mission to unite all nations to serve to God. That's why I can see opposite. Right now is Ukraine bombed our military aerodrome, as you know, this night. And to Mr. Zelensky, who is not president anymore, he was not re-elected, he lost all his legacy, is only one chance to be survived, is to continue war and make this conflict more deep. That's why after Donald Trump conversation, after his meeting with Donald Trump in the White House, he immediately jumped to European politicians and asked them, give us weapons, please give us support. That's why I can see this situation completely different way. Donald Trump break down stereotypes. He's like Mahatma Gandhi and John Kennedy of the modern age. He's peacemaker. About our national leader, everybody understands that he started a big job to bring justice in international relationships. That is my vision of situation, current situation.
All right. Bohdan Nahailo, would you like to respond to what Sergey just said, our Russian guest said, as far as the war is concerned?
Yes, I would. Total rubbish. Justice. They have broken every international agreement. They've broken the Charter of the UN. They've invaded a neighboring state whose security and territorial integrity they guaranteed when Ukraine gave up its inherited nuclear weapons. Let's not forget about that. And this unity that they talk about, the spiritual mission of Russia, imperialism, Russian imperialism, whether under the Tsars, under the communists, Moscow dominates. You're not talking about a nation. You're talking about a Russian empire that is sending your native peoples to the front. You are not killing Russians from Moscow and St. Petersburg, the whites as you see them. You are using your ethnic minorities, your Yakuts and Bashkirs, to fight your wars, your dirty wars for you. So look, you are war criminals. You have broken every rule in the game. And you rightly said, we bombed a military airdrome. You bombed cities tonight. You bombed the center of Odessa, a city that you regarded as a Russian city until now. You're killing Russian speakers, ethnic Russians. You, Russians, are killing them. And the world needs to know that. And in particular in India, which has been traditionally a fence sitter, it needs to wake